I think if you live an interesting life, you'll write very interesting stories, which is also the beautiful thing about creative life overall.
Learning can never stop. There is always something new, and I learn from my patients.
And each one of us will use that choice based on the use that you have to put the technology to.
The first film that made me sort of see how a human story and the layers of politics beneath.
पानीपत का युद्ध पढ़कर आने वाले दरोगा लोग इन्वेस्टिगेशन कर रहे हैं, तो उसमें थोड़ा विज्ञान मिश्रित होना चाहिए, ऐसा मेरी अपनी सोच है.
A person may have a very enviable lifestyle, externally appear very successful and happy, but no one really knows what's happening within.
It is not going to kill the supply chain, it is to empower the supply chain. And I'm happy to announce that we are still very much in the pilot stage and beta testing is going on. We are gradually building up our presence little by little as people get more and more confident.
Because of the state of our cities, we have no option but to build smart and resilient cities.
Digital India is more for the poor, underprivileged, and deprived.
Good morning, everyone. Ladies and gentlemen, a very, very good morning. How is everyone feeling today? Good, excellent. Can I hear a better good? A very good, maybe, because it's going to be a very, very good day. I can promise you that indeed. My name is Beverly White, and it is my pleasure to welcome you to the third edition of BW Businessworld's Festival of FinTech, powered by BharatPay. This one-day annual conclave serves as a platform to celebrate and illuminate the remarkable efforts of FinTech brands and leaders. People like yourself, a big round of applause for yourselves, first of all. I think we can do better. Clap for yourselves a little bit. Get the energy going in the room. You'll have all done such a spectacular job. It's larger than the last and focused on the trends that are shaping India's fintech sector and its ever-growing role in the Indian economy. We shall follow the trends of the industry, their impacts and way forward through an insightful day-long conference, followed by awarding the best in the industry with BW FinTech Awards. Following a series of enthralling sessions and thought-provoking discussions, we will venture into the realm of recognition of the industry leaders. BW Businessworld, led by Dr. Anurag Batra, Chairman and Editor-in-Chief, BW Businessworld, and founder, Exchange for Media Group, is the fastest-growing business media house in India. With a network spanning across 23 niche business communities and 8 magazines, BW Businessworld is proud to be entrenched in various verticals in the domestic as well as global business ecosystem. With changing times, BW now has massive readership in the digital space as well. BW in its portfolio has 23 niche B2B communities that organize conferences and forums to facilitate interaction between sectoral business leaders and create a conducive environment for collaboration. Could I request the BW team to play the BW Legacy audiovisual to give us a glimpse of the journey of BW Businessworld?
I think if you live an interesting life, you'll write very interesting stories, which is also the beautiful thing about creative life overall.
Learning can never stop. There is always something new. And I learn from my patients.
And each one of us will use that choice based on the use that you have to put the technology to.
The first film that made me sort of see how a human story and the layers of politics beneath.
पानीपत का युद्ध पढ़कर आने वाले दरोगा लोग इन्वेस्टिगेशन कर रहे हैं तो उसमें थोड़ा विज्ञान मिश्रित होना चाहिए, ऐसा मेरी अपनी सोच है.
A person may have a very enviable lifestyle, externally appear very successful and happy, but no one really knows what's happening within.
It is not going to kill the supply chain, it is to empower the supply chain. And I'm happy to announce that we are still very much in the pilot stage and beta testing is going on. We are gradually building up our presence little by little as people get more and more confident.
Because of the state of our cities, we have no option but to build smart and resilient cities.
Digital India is more for the poor, underprivileged, and deprived.
So many great stories being told, and today you will also be part of the story, as today's digital broadcast is being streamed live across all BW Businessworld platforms, including our social media channels, and also on www.bwbusinessworld.in. As we flag off today's event, I encourage everyone to join in the conversation and share their learnings from the day by using the hashtag BW Best of FinTech. Before I move forward with today's proceedings, I would like to thank our partners for the day. Festival of FinTech 3rd edition is powered by BharatPay, knowledge partner Resurgent India, associate partners Discovery and Slack, supporting partner ScoreMe, event partner The Thick Shake Factory, Joy Travels Private Limited, Beanley Coffee, JustBath.ai, and Fandrum. Our media partners Realty Plus, Exchange for Media, IWM Buzz, Impact, and Pitch. Can I request for the partner audio visual, please?
दुनिया को भीड़ में जो नहीं दिखते वो चेहरे हमें नजर आते हैं. कल को रोशन करने वाली चिंगारी पत्थर में छिपे हीरे नजर आते हैं. हमें अन्ना कॉफी वाले के हुनर में अन्ना कॉफी हाउस नजर आता है. किराने वाले गुप्ता जी के अपनेपन हमें गुप्ता सुपरमार्केट नजर आता है. और सोनिया ब्यूटी पार्लर की कस्टमर सर्विस में सोनिया सैलून दिखता है। छह बाई छह की दुकान में सलीम के सपनों का साइज नजर आता है। सोनू ऑटो वर्ल्ड में सोनू की बड़ी सोच दिखती है। दुनिया को जो छोटी छोटी दुकानें दिखती हैं, हमें उनमें छिपे बड़े बड़े अरमान दिखते हैं, क्योंकि हमें है यकीन इनके हुनर, इनके हौसलों पे, इनके जुनून पे और इनकी न्यू एज सोच पे। हमें है यकीन इन सब पे। है यकीन भारत पे।
Leading investment banking firm, we provide bespoke funding solutions. Our service offerings: debt syndication, private equity, valuation services, financial advisory services, credit advisory, TAF study and DPR report, insolvency services, training. Debt syndication, a loan offered by a group of lenders who work together to provide credit to a large borrowers. Private equity, an alternative investment class and consists of capital that is not listed on a public exchange. Valuation services, valuations of business, tangible assets, intellectual property, intangible assets, stock and securities, ESOP and private debt instruments. Financial advisory services, primarily focused on providing advisory services in the areas of corporate finance, capital structuring, transaction advisory, and M&A. Credit rating advisory. Our team's experience can bring in immense value by getting the desired rating upgrades or saving them from downgrades by fine-tuning the strategy. PEB study and DPR report, evaluating the technological feasibility and economic viability of project to finding out the degree of risk involved. Insolvency services, assess the financial position of the firm, partnership, LLPs and individuals in several instances and try to save their business. Training. We are a pool of senior banker, academicians and professors specialized in all kinds of soft skill training. We are specialized in solving your all types of financial needs. Leading fintech company in India. Scorme Solutions, an innovative analytics software company in the fintech space. Our service offerings: bank statement analyzer, analyze prospective borrowers' bank statements to assess the creditworthiness and eligibility for loan. Financial statement analyzer, perform 360 analysis of financial statement of borrowers. IDR analyzer gives you the visibility of borrowers' financial. GSDR analyzer, analyzes the raw data of GSE server and gives insights on the various state purchase runs to the lender. digital lending software. Platform originate loans and is powered by convenient APIs for plugging eligibility using across credit monitoring. Highly flexible and scalable software, enabling the lender to analyze large volumes of data as per requirements.
Can we have a very, very big round of applause for all our partners who are the reason we are sitting here today and getting to have such a power-packed conference ahead of us. With this, ladies and gentlemen, let us begin the day full of insights and learnings. The fantastic delivery of the fintechs in India ensure democratization of access and financial inclusion, which continue to drive prosperity for the financial services industry, despite the economic headwinds that slammed most businesses and sectors. Holding on to this, our theme for this digitization to democratization shall bring into light multiple trends around it, its impact and future. Let's begin the day of insights and engage with thought leaders. I would now like to welcome Dr. Anurag Batra, Editor-in-Chief, BW Businessworld, and founder, Exchange for Media, to deliver our welcome note. All over to you, Dr. Batra.
Thank you, Beverly. Please give Beverly a big round of applause. She'll be your host throughout the day, and she could do with some encouragement. She hosted our healthcare 40 under 40 day before yesterday. She did a fab job. I want to start by saying that this is our third year of the Festival of Fintech. This is our second year of doing it in Bangalore. Last year, we did it in Bangalore too. We have a big vision for this domain. I'd also like to welcome all the speakers who come from Delhi, Bombay, and are speaking here. Ms. Praveena Rai from NPCI, who will be doing her keynote address, and every other speaker who's here. I'd also like to acknowledge the role of a jury in selecting the winners today. At Businessworld, we do our awards through a honest process, through a robust process, through a jury-driven process. So my gratitude to all the jury members. You'll see a jury AV, but especially to our jury chair, Shri S. Ravi, who's the chairman of Tourism Finance Corporation of India, past chairman of the Bombay Stock Exchange. He's a founder and managing partner of Ravi Rajan and Company. For the third year, he was our jury chair. So my gratitude to him for being the link between the first 3 years and giving so much time, attention in terms of selecting the winners of the Festival of FinTech. We are doing this theme is from digitization to democratization to inclusion. And, you know, I can't not talk about something that as a media person plays on my mind. We had a tragedy last week. We had a tragedy in India a couple of weeks back. There was train collision and lots of people died. I will not get into what are official numbers and what are, but the fact is a lot of lives were lost. There were two tragedies that happened in the ocean. One where almost 600 people plus were lost. Most of them are presumed dead. Almost 100 bodies have been recovered. Some 30 odd people have been saved. And then there was a submarine where 5 people were there and they also lost their lives. Every human life is important. It doesn't matter, rich, poor. It doesn't matter. But it does matter when it comes to media reporting. There's so much focus on those 5 people who were in the submersible. And what about the 500, 600 people who died on the coast of Greece, going from Libya to Italy, lots of Pakistanis, so on and so forth? Very little focus. So there is a lot of disparity still in every facet. There is discrimination on wealth. Of course, in some parts of the world, there is discrimination on gender, on race, on religion. Luckily, India is a very tolerant country, and in spite of whatever people may say, we are a very inclusive country. In that background, what has happened in the Indian fintech space in the last 9 years is really impacting the world and not only India. And there are leaders from the fintech industry. All of you are doing, initiatives in this domain to be able to grow this domain, to build your own companies. But just to is the fastest growing fintech market, and possibly in the next few weeks, months, it will be the world's best market in terms of fintech. Just to give you some numbers, Indian fintech industry's market size in 2021 50 billion, and it is likely to be more than 150 billion in 2025. The way it's going, possibly will happen in 2025. We talked about singularity 34. Looks like singularity in the corner. Giving the predictions in terms of technology immersion much faster. Let me also say that there are three valleys in the world: the Silicon Valley, innovation scale world, which is in the US. There is another valley in China. I call it the valley of surveillance. There's surveillance everybody in the world. There's the new oil. And there is a valley of good. You can guess where that is. That is in India. This government and organized NPCI, UPI, ONDC, ONDC is just starting. I'm sure it'll be impactful. But the fact is, COVID, there is a valley of good. The government is doing game changing along professionals. There's assembled from various domains who have deep domain knowledge and want to do something to give back to the country. And these valley of good. I mean, there is the Silicon Valley, which is about profit. There is the valley of surveillance, which is about what you see they've been doing. Good. India has a valley of good. And let me say that, again, just context is the segments that are growing under fintech include payments, which is the largest. Then is digital lending. InsurTech is growing. I angel invested in 2014 in two friends of mine. I met them, young guys, and they had a good exit. And I met Surjendu a couple of weeks back. He came to the office. He started Zopper, and he educated me on how big insurance tech is. I invested in his first company, and I did have a good exit. So really, these are early days for the fintech domain. We set up the base. The payment landscape is, again, these numbers are pretty. I'm sure we'll surpass the numbers and timeline. But what is said by analysts and by editorial colleagues, that the payments landscape in India is expected to reach 100 trillion in transactions soon. Well, there is a number a couple of years ahead, but it'll happen sooner than that. And almost 50 billion in terms of revenue by 2030. India's digital lending market in 2022 was almost $270 billion, and it will be already close to $350 billion this year. It is growing very fast. And as I talked about InsurTech, India is the second largest InsurTech market in Asia Pacific and is expected to grow by reach billion by 2030. India is, you take any segment, sub-segment of it, is a leader or is poised to become a leader. Wealth. What are the advantages of what is happening in terms of entrepreneurship, in terms of government's policies, that the number of wealthy people in India is growing. And hence the Indian wealth tech market is also growing. If you take wealth tech, and again, technology, no company can be just every company. In every product and service is really creating the future of Indian wealth tech. And the Indian wealth tech is expected to grow to almost 250 billion by 2030 on the growing base of retail investors and people who want to be able to create wealth for themselves and for the institutions. But inclusion and democratization. I think I saw the Bharat Pay AV and it was really engaging and real. I can only say that in this domain also produce the most unicorns. I know I am in Bangalore. I know there is a bubble which is melted. And I sent a story from my first platform, Exchange for Media, to a very wise man. He said, Anurag, the problem is that nobody is focusing on profitability. But in the last 15 months or so, founders, companies, entrepreneurs are focusing on profitability. If not profitability, they're focusing on a path to profitability. I think founders are back to chasing customers. The GMVs are not really that important. The cost of acquisition has to be low. And importantly, you have to go back to the tenets of business, which is profitable consumer acquisition. There are only 3 assets that matter in business. One is your talent, it's your people, your team. Second is capital, whether it's cash flows or it is funding. And third is customers. And the customer money is more valuable in every way. It is more sustainable. So I think Indian entrepreneurs are by nature very frugal. I think the last 3 years there was easy money. There was plenty of money. So sometimes the environment also changes you. But I think Indian entrepreneurs will surprise you. There'll be more unicorns in the future. They'll be more sustainable and they'll be more profitable. They'll create more real value than that has been created in the last 1 decade. I just want to say that for many, many years, I kept saying that India doesn't well because we are afraid of failure. I think Indian entrepreneurs are no longer afraid of failure. Even the government is very entrepreneurial. These are companies, NPCI, ONDC, special section. They've been set up under that section. And really the people working there are also very entrepreneurial. I've had the good opportunity to interact with them. I can only say what I see in terms of digital transformation in health. We talked about how health is going into personalization, preventive, and of course, predictive to be able to prevent disease. So if we are able to think of an open stack in terms of technology in every domain of our life, we'll be able to build an India which is more inclusive, which is more equitable, and which is more, if I may say, happy. Because if there are disparity, I talked about the fact that income disparity also impacts how media people cover any news. I mean, those 5 people in the submersible got 90%. And look at the resources the countries put in terms of finding them. And look at the resources that were put to find the 500 people who are on the capsize. That's a reality. I'm not making that up. So clearly the democratization that will happen and the inclusiveness that this government has made its cornerstone in terms of bringing out policies that create financial inclusion really augurs well for India. We're in Bangalore. And finally, Indian entrepreneurs are learning from the Indian government and policymakers to build product companies. If UPI is not a global impactful product, if ONDC in future won't be, it would be. So clearly, Indian entrepreneurs' ambition is not to just play in India, to be able to make an impact. Within the first 3-4 years of their companies being around, Indian entrepreneurs thinking global. That's the change in the mindset of entrepreneurs over the last 3-5 years. I want to say that we at BW Businessworld don't see ourselves as a magazine. We're in the brand and content, 3rd year of the brand, the 10th year of us leading it. I can only say that we're in the business of building communities. We may build a very strong fintech community. Our vision, which brings all stakeholders, including policymakers and the government, the private sector player, and the ecosystem enablers, which are very important for the ecosystem to develop. These are baby steps. I've seen many IPs in both my companies, Exchange for Media and Businessworld, growing. I can only say that we're grateful to you for your time and attention, and I hope we'll be worthy of your attention going forward. I wish you a day of learnings, activity, and some fresh insights about where Indian fintech ecosystem is I also want to take this opportunity to be able to congratulate my colleague Devika when she joined us 3 years back. This was the first IP she worked on, and she single-handedly curated the first year, the second year, third year. My editorial colleagues, Rohit Chintapalli is also here. All my colleagues on the business side, marketing side, Mr. C.S. Rajaman is there, Nandini is here, Prashant. They all contributed. A lot of people back in Delhi who worked in the marketing team, in the audience team, in the events team, who have worked to be able to collaborate with Devika to put this together. So my kudos to them, and they deserve a big round of applause. It's really Devika and everyone when I am here to be able to learn something new today. And I want to end by saying that as we post-pandemic, I keep saying the most important thing is not money, it is health. Most important thing is cheerfulness. It's the quality of sleep. And most importantly, I keep talking about the 3 C's, the 3 H's. These are that all of us should be wary of. One is comparison. I also sometimes compare. I have 2 children. Mostly don't compare. Don't compare myself. I'm unique. Every one of you is unique. So don't compare yourself. Each one's journey is unique. You're at a unique place in your own journey. Celebrate that. Be grateful to God for that. Criticize. Sometimes people criticize other people. I'm in the media business without knowing even a little bit or factually knowing the right things. So don't criticize. If at all you have to criticize yourself, that's the best way. And that is about improvement. And third is complain. They say criticism is a thief of happiness. I say complaining is doing a robbery. So don't complain. The fact that we are alive is the best blessing. How big the company we build, how much money we make, all that is a bonus. And I'm not saying don't do that, don't dream that. Put in your best efforts. And the 3 H's, which are my favorite 3 H's, you must embrace. I try to have one, hope. I get up every morning knowing and hoping and praying that today will be better than yesterday. I genuinely believe every day is special. Third is humility. As you grow, not only in age, in your impact, in your influence, in your stature, be more humble. It will help you. You sleep light and life is hard work. Only say that, my wife keeps telling me, Anurag, you should be doing smart work, but I know hard work. Life is about trade-off. Whatever you will focus on will grow. So focus on the positive things that make an impact. Focus on, building fintech products, services, platforms that bring democratization and inclusion. Thank you. God bless you.
If I may add a 4th C to that, that is context, which I think Dr. Anurag Batra always manages to give every gathering. A big round of applause for Dr. Anurag Batra for giving us all hope and humility and telling us not to constantly compare and to criticize. Difficult things to do, but that's the way we should be going. We now have a very, very special introductory note, a video message from Mr. S. Ravi, promoter and partner, Ravi Rajan & Co. LLP, Chartered Accountants, Chairman TFCI and former Chairman BSE. May we please play the video message.
Good morning to everybody. I am S. Ravi. I must sincerely apologize for not being present in Bangalore due to some commitment. I must apologize to BW and the entire team because I had committed to attend this meeting. Being a jury chair, I was privy to all the entries and the quality of participation. And I must tell you, I was very enthused to see the number of participations and the ideas that they have brought to the table. The selection process itself was very democratic and fair. I must congratulate all the winners and best of luck for those who did not make it. Regarding the industry, the fintech industry itself, the last decade has seen a growth in the fintech industry. And fintech is not restricted, but it's all over. right from banking, lending, insurance, pension, distribution of wealth, dispute resolution, and NBFCs, parabanking, and also neo-banking. So if you look at the whole area which the fintech is catering to is very wide, especially if you look at financial inclusion. They have reached the customers or consumers who were never even ever banked. So the depth of the fintech industry is visible to one and all. The fintech industry, you look at banking, there they sit like new banks between the bank and the customer, and they provide services like credit monitoring, credit rating, assessing the portfolio, and various other functions which the bank outsources them. So this fintech has contributed in reducing NPAs, monitoring accounts, and ensuring that the credit quality is very high. Especially if you look at smaller places, smaller towns, many of the fintech companies have reached there. So it is a very big encouraging sign that banks are utilizing the fintech companies in their activities and have got them involved. Look at the insurance sector. In the insurance sector is growing, and it is getting sort of reforms are happening in the insurance sector, and there are a lot of insurance tech companies which have come into existence, and they are playing a big role. Not only are they spreading the message of insurance, because India is an underinsured country, and I think the fintech insurance companies are playing a major role in actually increasing the landscape and increasing the number of customers. It helps the customers in faster resolution, claim settlement, etc. So fintech is playing a major role sitting there, even claim assessment and claim disbursement. So if you look at the insurance sector also, they are playing a very big role. Now coming to lending, I'm not naming anybody but if you see the portfolio, if you look at the participants, if you look at the number of fintech lending companies that have come into play are huge. The number of companies that are lending, and especially, I have followed this industry very closely. And during COVID times, when credit was not available or cash was not available, they really made a big impact by providing the necessary thing, even to everybody who could not avail credit. They are also playing a major role in the SME and MSME sector, and it's a great thing, because this sector has been sort of a neglected sector where credit flow is not very easy, and of course, so this again has played the company has played a big role. These type of companies have played a big role in providing credit to the SME segment. So you look at all the segments, fintech has played a major role. Now, let us see what are the challenges before them. The challenges before them are the regulatory environment, which is changing, and new regulations are coming in, because on abuse of any credit or abuse of funds, because there have been some issues of where people have lost money. So there is a very conscious effort by the regulators to plug in all the loopholes and to see that fintech companies work within the governance structure that they have provided. So the regulatory challenge is going to be the biggest hurdle, because as we progress, we see that the regulatory challenges are going to increase, the compliance is going to increase. And similarly, the cost of compliance will also increase for the fintech companies. And that is what is going to be the biggest thing to make themselves viable. They have to be efficient in their compliance and bring the cost of compliance and operations. Now, coming to the second challenge, which I see, is the competition within themselves. And I see this happening because, if you look at all the fintech companies, we are seeing that there is a huge amount of competition. They want to outbeat each one of them, and there is a lot of struggle for the space that is there. Though India is a big market, there are a lot of opportunities, but still the competition is going to be a very big factor in deciding how the fintech companies will survive. So they will have to look at evolving their business model time and again so as to survive the competition, reduce cost, and that the services that they provide, people are attracted with them. So there will be a continuous pressure on the fintech companies. The other challenge is going to be also, which I have seen, the attrition and people shifting very frequently. That is another challenge. Getting the right sort of employees, getting the right type of people to be associated is another challenge which I think the fintech companies are at this point facing, because what happens is once a successful team is there, they move along with the whole team to another company. And that's a big challenge I think the fintech industry is going to face, and the promoters of the fintech companies are going to face. The another issue that needs to be very clearly seen and addressed is the capital, because cash burn is very high and there is a huge amount of capital that is required, because growth requires capital, and the fintech companies do not have many measures to except to go to equity players or to go to PE funds or to get investors. So there is a lot of pressure to get capital at each and every stage. And that is what a good fintech company would, though they have a good idea, but they must plan their capital 2-3 years in advance so that they can get over anything that they want. And that is very important, because what happens, capital comes with a cost. And the right type of capital also, who understand the business model, who support the company, is also very, very important. So capital constraint is going to be a major constraint. Then comes the banks, whom they are associated with. The banks will choose those only with good services. The NBFCs will choose those fintech companies with good services. And I think that is going to be, of course, a challenge. Technological advances, well, yes, that, the basics, all the promoters, most of them have good ideas, but they have to really be focused to see that when the technological advances, which are very fast and furious, I think they will have to keep pace with that. And that is one more issue that needs to be addressed. One issue that I always focus on, and I think there is a problem here, is the governance. The governance has to be put in place. People are not bothered too much about, they're bothered about the business, but they do not look at compliance. And I think that is one thing that every fintech company must look at very, very clearly, even right at the inception, that their governance structure must be very clear. It must be very transparent, and it take the test of time. One issue which is very common, and it's in public domain, we see a lot of shareholder disagreements. Shareholder hiding something, not telling things, disagreements between the shareholders. Why does this happen? This happens because the principles are not clearly laid out when we start business. The roles are not clearly laid out when we start business. And the most important thing is a good shareholder agreement is a must. And without that, at some stage, one will have a problem. You are seeing it in multiple companies. Newspapers are full of it. I don't want to elaborate on any particular company, but even after having done 7, 8, 10 years of good work, they suffer because the shareholders are not too happy, or they have not selected the right shareholder, or they have not delivered to the shareholder, or there is an ambiguity and there is an issue between the shareholder and the company and the promoters. So these challenges that I have put across. What is the future of fintech companies? Well, the ones who survive. The people with good governance, where they get good capital, and where there is a steady growth, and they know the market, will survive. There is going to be a lot of competition, but the good fintech companies will survive because fintech companies' demand will be in multiple areas, including arbitration, including settlements, claim settlements, including lending, going to the places where there are non-banking, non-banked areas. So the scope is unlimited. And I think what I see is, if the fundamentals are good and if everything is fine, I think you will see an excellent growth in the fintech industry. Some will perish because of lack of capital, etc., or because of whatever other reasons. But an idea which can take off and which is well presented with all the fundamental issues are addressed, it is going to be a very big success. That is what I feel. The scope of fintech industry, I'm sure, is going by 30% growth every year, and that's what I see. So I would like to just say that best of luck to all the fintech companies. Thank BW for inviting me. I wish I was there to have met you all personally. It's a privilege to be associated and be part of the fintech journey. Thank you so much.
Thank you so much to Mr. S. Ravi for putting forward the future of fintech with such clarity and also with its challenges as well. And it's now time to move on to our keynote address. Digitization to democratization, as we know earlier, is the theme of today. And to give us an overview of the same, we are joined by Praveena Rai, COO and NPCI. We're delighted to have you with us today. Will you please join us on stage? A big round of applause for Praveena.
Hi, good afternoon, everybody. Or it's still good morning. Yeah, so good morning. So thank you, Dr. Batra and the Businessworld team for organizing the day today and for inviting me to participate. It's nice to be placed in the value of good. I hope we live up to that. The value of good, is going to be my takeaway, I think, from today. And of course, at NPCI, we manage the digital payments infrastructure from India. And I really like the topic that I was asked to speak on, which is digitization to democratization. And I, started off saying, what is this digitization to democratization, right? What really is the difference between these two things? And the more I thought of it, it was very clear that digitization is really about creating the foundation, creating the fundamentals, creating the frameworks, whereas democratization is really what one can do with it. So at a very basic level, this could be termed as, to say that when you have documents and you electronify them or scan them or digitize them, that's just simple digitization. But what can you do with that thereafter? How does it really become useful to the user is where the game starts changing. And if, we go back in time to pre-digital native era, look at email, right? So email would probably be one of the very first digitization of communication that we had. And it didn't get democratized till it became hosted for everybody. It became free for everybody. Anyone could, get an email ID. There would be a certain space of storage available for that email to be used. One could go to any cyber cafe and access your emails. You didn't even need to own a phone or a laptop in those days. And that was really an example of how digitization became democratized. And there are many examples of that nature. If I look at the payments world, checks became check truncation. We run check truncation, actually, which is check clearing for India. But what is that? That's basically scanning checks and then clearing them in a digital form, though the check itself is still a physical instrument and gets dealt with as such. So that could be called digitization, but real democratization would be, UPI, which is really taking digital payments to every person, every merchant, every user, to really change the way in which they are able to buy goods and services. So I look at digitization as sort of what happens on the supply side, and democratization is what happens on the demand side. So supply side is a given, it needs to be there. Without the supply side elements falling in place, nothing much is going to happen after that. It's like laying the roads. And really democratization is like, creating all kind of vehicles that can now travel on the roads. So really creating the use cases, the applications, the services, and taking it to users for whom it will be truly beneficial. And I said, let's look at this with few lenses, having looked at what this broader definition is all about. So the first lens I thought we can look at really is a product lens. And when we look at a product lens, digitization is about creating common language. So productizing something is saying, hey, what really are the standards? What's the kind of protocol? What's the specification that needs to be followed? So that when various systems interact with each other, there is a common language that they are speaking to each other in. So whether it's network layer, transport layer, application layer, whatever have you, right? And coming back to payments, it's like the UPI specifications or procedural guidelines and so on that exist. So that really provides the foundation. And what really happens when we look at democratization is the kind of services that run on this, right? So it opens up a layer of innovation that can then be deployed based on the customer segments that really are being catered to. So it could be, for example, going back to UPI, we have the BEAM app on one side, very simple, focuses on payments, person to person, scan and pay, online payments, all that is great. And then you've got, apps that really look at this like a whole super app, right? So you want to make bill payments, you want to load your FASTag, you want to like deep integrate with all kind of merchant experiences. So it's like creating an entire palace of payment opportunities there. So that's because every organization has looked at this in a different way and said, what sort of services do I want to offer? Who's my customer base? How am I going to offer these services? But that happens on the framework that is available. And that standardization of that framework is very important. It goes back to the point Dr. Batra made earlier about what we can do, from, let's say we've got the payment stack, and then, if you take it to a health stack and so on and so forth. But everywhere, it's that framework of standards that forms the base on which all other innovation thereafter takes place. And here, of course, there is personalization, there is user experience. If you look at user experience, it could be, what do I need to do to handle people who need a different language, right? So when we look at democratization, it's not just English for everybody. In a country like India, one will have to look at minimum of 10 languages to say, yes, I've covered most of the population, and then probably looking at 20, 25 languages to really get to the broader base of the country. So the hyper personalization, opportunities around how UX can work, and the whole layer of services that work with it. The next lens thought we can take really is the technology lens. And the technology lens, when we look at the base framework is about availability. When we look at digitized services, they just have to be available when you need it. And in the payments world, this is called success rate, right? So it builds trust. If you go and try your payments a few times and, every time there's a problem, you're not going to really feel that you can trust that anymore. So similarly, across all services, having scale, and when we talk of democratization, we're obviously now talking of products and services that can cater to a very large population, something that can address 1 billion people in the country here. So we're looking at scale and looking at availability. On the bedrock of scale and availability, comes really everything that's to do with tech today. And, this is the Silicon Valley of India, right? So I don't have to teach you about technology, but when we look at everything that's happening around open source, for example, I think the days of experimenting with technology, utilizing web services, utilizing a range of microservices. So no longer is technology monolithic, because monolithic takes time. And when we look at really what we can do to democratize, India is a country in a hurry, right? And we want to achieve all our dreams tomorrow. It's not for the next generation, right? It's for us. So which means that we need agility, we need pace, we need to drive change when we want it. When the market is ripe, right? You don't want to take 2 years to get there. When I hear about digital payment systems in most other countries, it takes sometimes $1 billion and 2 to 3 years to get a real-time payment system up and running. I think by that time, we've gone through like 4 or 5 cycles of innovation here in India. So all that comes from the way technology can support that agility, right? So and that's where we've got microservices. And, really, even at NPCI, we look at this from the context of a tech radar. Tech radar is to say that, there is always a watch out for what's happening on the technology front. What can you do with it? How do you experiment with it? How do you put very early technology into a test bed, start learning the ropes? So by the time it matures a bit, you're ready to actually start deploying it. So you can be there, not necessarily at the very early stage, but you can really get into utilizing technology very early in its life cycle. And the time has probably come actually, for India to also be a contributor into all of this. So, we tend to be users of open source, and I'm sure many of you are on GitHub and several platforms like that. But when do we start contributing, right? How do we also create and give back to this world in a way that supports this democratization mechanism that we are speaking about? So, and all of that is sort of playing out in the tech world. And algorithms, needless to say, right? After the chat GPT world, it's all about AI and algorithms. So whoever's not been on it has immediately jumped into the bandwagon. And needless to say, while of course there's a lot of fear and concern and meaningful AI, and we need to understand it and we need to control it, and all that stuff is happening on one side. But at a basic level, it's going to be extremely useful and helpful to us, right? So we need to just focus on that and get there. And when we look at the evolution, evolution is sort of to say what really is happening in this world of digitization. How does one manage change? And there again, I think at a more framework level, it's about core digitization. But when we look further, it's looking at nodes of evolution, and looking at evolution in a very networked environment, which is not necessarily controlled at the center. And for people in an innovation network to drive change at different pace that they need to. I don't think we're really there yet. So it's a bit utopian, but I think that's really where we need to go to really drive this evolution and change, which can also be democratized. But blockchain is something that everyone is playing with. Reserve Bank of India has already started its pilot with the digital bank currency, which really takes fiat currency as we know it and puts it on a blockchain kind of a framework. And there are a number of use cases. I'm sure all of you know enough about that. So really this whole evolution concept is something that, again, is going to drive a lot of that democratization. And really, what are the business drivers, right? So when you look at business drivers at a very basic level, digitization is supposed to be about efficiency, reducing the cost per transaction, bringing it from, dollars per transaction to rupees per transaction to paisa per transaction. That's really the big game. How do we really drive cost and efficiency, hyper automation? And today I keep complaining that I think even in the fintech world, in the banking world, the operational systems, are still somewhere stuck in time. Those processes are still fairly manual, file-based, and so on. So while the front end has become all cool and sexy and digital and things like that, I think we've not really bothered too much about the back end. We move that at a much slower pace than we move the front end, which is okay, but it still needs to catch up. And that's where automation plays a very important role. But when we look at the driver of democratization, it has to be differentiation. Again, I think Dr. Batra said, don't compare. That's okay. As individuals, we don't have to compare. But organizations have to compare, right? I mean, why will your customer choose service A versus service B if it's not better in some way that's meaningful to them? So differentiation is the key. And how do you really democratize while still differentiating is going to be very important, because from this comes market making, Otherwise, we'll all commoditize everything that we use and there'll be no excitement left in the game there. So differentiation, creation of economic value, making it matter to the customer is going to be very important. And when I look at, for example, we spoke about languages some time back, and we're doing some work with the Bharat for AI group at IT Madras. On the Bhashini project, which is really to say, how do we bring conversational payments? How do we address all the various languages in the country? And, can we bring them back on payment rails? I think those kind of drivers, which bring technology, which bring AI, and which actually make business sense, start creating a lot of value there. So I thought I'll kind of close with an example that we all know, and sort of speak through that to talk about this whole concept of democratization. Which is, so this is really the Jandan Aadhaar mobile. We know about it, but the challenge here sometimes is also the users, right? Everyone has a bank account, everyone has a mobile phone, everyone has an Aadhaar, but is the Aadhaar account updated with the mobile phone? Is the bank account updated with the mobile phone? For example, going back to UPI, we are very excited that we can now onboard customers using Aadhaar. So till now, it has been only using debit cards. And we said, look, I think we've reached the point when the debit card market has already started using UPI. The next swath of customers from these customers who are all Aadhaar oriented, right? But for that, it's very important that the customer's own telephone number is there in the bank account, own telephone number is there, updated with UDI for Aadhaar. And these are some friction points that still exist. So basically, the framework is there, but some of the elements of how these services can be used, what needs to be done to use them. So the whole awareness cycle around that. And then slowly starting to give back control over data to the customers. And that's what the AA framework is doing right now. So customers can give consent to say, hey, my data from this and this and this and this service provider of mine can be utilized by this user to either consolidate my statement, giving me investment advice, whatever have you, right? So a lot of innovation that's going to be happening there because we've sort of put that power back in the hand of the customer. I think the Jandan has been one of the most successful schemes. Overall, has created the framework for digitization and the foundation for democratization in the country. And I thought I'll kind of close with this, So this is the first time I drew it, it was a pyramid. And I said for us to say that it is democratization, it should not be a pyramid, right? It should be like this nice rectangle where everybody has access to all layers. And this has to be seen with a lens of time. So at one point, I think it was to say, look, we've got these bank accounts, we've got Aadhaar, we've got the mobile phones. And so UPI could happen on those rails. And at this point in time, we've got UPI And there are players who are building fantastic engagement opportunity on the back of UPI with very high affinity, right? And I've heard it from everybody today, whether it is bankers or fintechs, to say, if somebody's using UPI, and if I can get them to use UPI with me, either as a bank or an app, then I really hold that customer's loyalty. And that's what affinity is about. And that's what trust building is about. And payment is a very high frequency transaction, right? And that's where that sits. So there's a lot happening in that space. And on the back of that, right? And now if you say UPI is digitized and, this engagement layer is the democratization. And now if we say, hey, this is now the digitization layer, we take this for granted. And the next, sort of summit to be cracked will really be credit. We are still a penetrated country when it comes to credit. We hardly have about 5-6% penetration of credit cards. If you go all the way to microfinance, we're still talking about 10-12%. Amongst the lowest penetration, even in the emerging world, is really where we are when it comes to credit. So I'm hoping that really that's the sort of next big piece that we are able to democratize on the back of everything we've done with digitization so far. So that's it, and thank you very much. Lovely being here. I look forward to catching up, and thank you, Dr. Batra, for the event.
Thank you so very much for. Does anyone have any questions, ma'am? If I could request you to remain on stage. Any questions for Ms. Rai? There we have one right there. Ma'am.
It's fully in market. Yeah. You can onboard on Aadhaar today. So I call it the silent killer. It's been quietly released in market. It's been in works for a while, but it's available now.
Yeah, this Nagesh, it's a wonderful presentation, ma'am. I have a question regarding NPCI integration. Okay, suppose I have 3 or 4 different bank accounts. So NPCI is linked to only one particular bank account for delivering any public services. So I would like to know the reason, or is it going to be integrated to all the bank accounts?
No, you can use any bank account you want. You can link multiple bank accounts to UPI and all. Yeah, no, NPCI doesn't. NPCI is only an organization name.
Correct, but
right? The products are IMPS, UPI, RuPay, etc. You can use any bank account.
For delivering public services in the government. So they're asking to link with NPCI. There has to be NPCI linked.
I'm sorry, I don't understand the question. We can take it offline.
Ms. Rai, what are the 2-3 things that can be expected from UPI? Because you talked about debit card integration. Tell us something that we should expect in 6 months, 12 months kind of horizon as consumers, and then as the ecosystem. A lot of ecosystem players are there. Second is, for example, there is a CoWIN, there will be ONDC, hopefully significant traction over the next few months. There is already UPI. Is there a interplay going on between them? Is there some kind of a super platform that is being developed using 3 or whatever exists in the, now we're talking of DigiYatra, we're talking of DigiLocker. So is there a kind of a, synchronization of data, so to say?
Yeah. So I think we spoke about the 3 emerging sort of things that are in play. So one of it is, of course, onboarding on Aadhaar. That's a very important item in play now. That's really going to cover a large swath of users who probably are not so conversant or, with their debit card, or probably don't have their PIN or don't know where they left it, whatever the reason is. The second is conversational payments. I think, again, both for great user experience for people like us, starting to look at conversational payments that goes beyond payments using a smartphone, be it a feature phone or any other kind of a device, which may not even be a phone, is another play there. And third is credit. I think credit is the big one. The RBI governor last September launched the link of RuPay credit card to UPI, and we're seeing extremely good traction. And I think really heavily focused on credit as we speak. I think interplay between all the various programs running, will obviously be there, not in a tightly integrated manner. That's not the intent, but in a way that they work off each other in terms of learnings, in terms of providing cross services and so on and so forth. For example, we do provide settlement services for ONDC, and yeah, I think such play will obviously exist.
Yeah, thank you very much for a wonderful presentation, madam. I think as an organization, I think you're doing a great work, reaching a large number of population in India. You have any plans to reach to other countries? Because when we travel to other countries, still they are not much, familiar with the system, how it works in India. So you have any plans to go to other
Yeah, I think we do have international plans. So there are three sort of strategic directions that is being looked at. One is foreign inward and foreign outward remittance. That's already sort of available with number of markets, especially the large remittance corridors with India. The second will be for a UPI user to be able to travel, outside and be able to use UPI the way they use it in India. And there, I think discussions are already there. We've signed certain agreements, early stage of implementation in Singapore and some other markets. Similarly with RuPay card, in fact, any place you walk to in UAE, you will be able to use RuPay directly without going through an international network. And the third most important one is to look at really which country wants to use UPI in the form we use today. So I think all of these are currently in play, early days.
Thank you.
Yeah. So thank you very much. I think in the interest of time, we can wrap this up and have discussions later on.
An insightful presentation and also your insights in answering all those questions. Very, very kind of you. And now we are moving on to a topic which I'm sure many of you will have great interest in: innovation as a journey. And Mr. Sai Ganesh Vutkuri, Head Online Applications, NPCI Bharat Bill Pay Limited, will be addressing the gathering. A warm round of applause for Sai Ganesh Vutkuri.
Hey, hello, a very happy morning. To be in a fintech event, it always excites me, and I always feel happy. Somebody coming from a fintech background, it always is easy to communicate and share the passion and the intent we have towards fintech. So and again, right? So why do I get excited is something I keep asking myself, right? And how is fintech different from the regular financial institutes? So each time I've asked myself, the only thing I've got the answer is innovation. And it also asked me the next question: don't the financial institutes innovate? They do a lot, right? So, but then how is fintech different? So again, the answer echoes in my mind is the relevance of fintech is, again, how they see innovation as their core strategy, how innovation is a journey for them, a continuous thing, rather than next tangible goal, right? So I always felt the difference between a fintech and how fintech is relevant in today's market. So I was having a conversation with one of my colleagues recently. So he was talking about how he was on a road trip, and it was a typical a long weekend road trip. He was going with his family, and there was a lot of traffic. So he was going on his way, he saw a signboard saying 1 kilometer for the toll plaza. So he thought to get into conversation with his daughter. So he was talking about how NETC as a technology has helped reduce the time of travel, how NETC is also from this organization, NPCI. And he was having this conversation and saying how they did away with this long queues. And by the time, he reached this toll gate, so there were a couple of cars ahead of him, waiting for the semaphore to clear them. So once it happened, he slowed down his car, and once it happened, he crossed the toll plaza. Once it happened, his daughter asked him, I did see a queue there. So how has it changed? Right. So this made me think. It was a casual conversation over a tea, but it made us think, is this young generation, the new millennials, see in a different prism, a different lens, how innovation is for them? So it also made us think, these new people, right? So they adapt to technology so fast, and they are looking out for what next, how it makes their lives so comfortable, right? So it also made us think, so innovation is something that has to be fast, and it has to be continuous thing. So I went back to understand how innovation is spanned. How innovation is spanned. So I stumbled upon this, right? So innovation in the history has shown that innovation has happened in 6 cycles, 6 waves. The first wave started around 1785, and it lasted for around 60 years. So I'm just going to catch up on one link here, which is transportation, just to be quick on this. Okay. So it started with the first wave was the emergence of water power, textiles, and iron. But this is a phase where still we were using the animal power for transportation. So the next wave came in, it lasted for 55 years. It started with the emergence of steam power and, more importantly, rail. So this again changed, or the start of how transportation changed for us. So the rail made global trade possible. It expanded the commerce. That's the kind of impact it had. And then the next wave, it lasted for 50 years. This is where there was widespread acceptance of, or usage of, the internal combustion engine, which again changed the way we transported, right? So this made road travel or road transportation better. And again, right, the last mile connectivity, all enhanced. And the next fourth wave came with the emergence of aviation. Again, I'm talking on the link of transportation. So the aviation probably opened up a completely different market, right? And how transportation happened and how people travel. So this changed for good, right? So again, the next wave lasted for 30 years. It started with the emergence of software in particular, and digital networks. So how did it apply for transportation? So it changed the way how the power of cars got transformed using the software, and how the safety got enhanced using the software, and how the vehicle were connected, and how people were able to book or pre-plan their travel so easily, and the transportation more efficient. So now the next wave started in 2020. This is the latest wave, and it's still in progress. This with the rise of AI, robotics, drones, and the clean tech, right? So what it is doing for us in terms of transportation is it is leading to a place where we are going to have driverless transportations, even deliveries having in drones without human intervention. What it means is, it also reduces, or in fact removes, the limitation of dependence on the human workforce. So what did I infer, and what I could take away from this was, in each of the waves, we see the duration is reducing, and it's been a constant pattern. It starts with 60 years, and now we are looking at an innovation wave in the cycle to be only for 25 years. So what it taught me was, the duration decreases, which also meant the adaptation by people, where the people were able to adopt to, as also, as rapidly increased, which meant the cycles are reducing. And I try to see if this, applied for other things as well. So one thing it struck me was how the journey of phones were, right? So when the wired phone came in, it took 50 years for 50% of the US population to adopt to. Whereas when the wireless came in, it just took 16 years for a similar adoption. And believe me, when the smartphones came, which were even expensive, right? More expensive than the previous ones, it just took 6 years for the adoption. So that's the kind of adoption cycles are going through. And it also applied to fintech as well, or rather financial institutes as well. Forget about the barter system or the cash system. So when the credit cards came into picture in 1950s, and then the innovation of say the magnetic strip also changed the way how the credit cards were accepted. So credit cards now, it also produced the ATM machines, the POS machines in 1979, and then came the online payments in 1994. Then and then the innovation cycles reduced tremendously with the fintech, right? The mobile payments, the contactless, the wearables, and whatnot. Now we are talking about invisible payments. So this has been consistent with whichever example we could take. So I've just asked me a question: how and why do you think this are reducing, right? So each time I checked it, I could understand only one thing: technology has been driving this change, right? The technology has been the way to go, and technology has created new markets, and that has changed the way people see and people live, right? And also has made people, each cycle has made, the technology has made the people more comfortable to use technology, and the adoption cycles have only been better. And also what I understood with the adoption is no more people see, have this perception of new innovation being a threat to their jobs, right? They now see innovation as more like something that changes the quality of jobs. And with it, when they're able to upskill themselves, they're able to have a better life in terms of better wages and better lifestyle. So that perspective is also something that has been broken, and is what I feel with the adoption cycles reducing. So, and again, I feel there are two ways of, two paths to innovation. One is the inside out approach and the outside in approach. So in the outside in approach, what happens is typically, we take the market feedback, we do market research, trying to get the issues, the perceived gaps, and the perceived recommendations that become the input and feedback into the next innovation cycle for us, or next innovation rather, than creating the solutions for us. So this is something that outside, you're getting the inputs from the outside, you're trying to create and use technology here. So technology here is something that used to create a solution, right? So it is more like how you optimize, use innovation to optimize things, be it process, how or making it more reachable, the last mile connectivity, right? So technology is an instrument here, right? So that's an outside in approach, whereas the inside and out approach is where you start from technology. You see how you want to enhance technology, you want to create new technologies, and how that creates new markets for you. And it changes the perspective altogether, right? So you're no more like trying to optimize things, you're trying to create new world, you're trying to create new markets, new avenues rather. So that's the inside out approach. So in NPCA also, we have this kind of approach where we see technology is the core of everything, like the inside out approach. So we dwell on technology, as Pravina was saying. So technology is used not to just create new products, right? That makes an impact to the society. Rather, we also use technology to scale to billions and billions of value exchanges. So for everything related to this, technology has been our core thing. And we always believe technology is going to even, bring or make the next big thing as well. So that's the DNA we live with. So that's how you see now we have the technology. We also see UPI as a technology. The technologies of UPI, say NATC, the BPS, so are something that has created a base layer, right? For how do I say, a universal capability for a lot of the ecosystem to come in and create their own local utilities. So this is how a technology has created a new ecosystem altogether. So that's our thought process. I just put only a few products here. But again, the driving point here is what we have seen from the waves, and what we have seen is technology is what has, led to the decrease in the duration of the waves and also a faster adoption. The key being always technology here. Okay, so So this makes me think, or probably conclude to come to an end where, I've always wanted to compare this fintech and tech fin. So what does it, how does it, differentiate between them, right? So fintech is something like, we start the thought process, right? DNA, how it starts is we look at how the current financial system works, and we try to use technology to make it better, efficient, cheaper, right? So that's very akin to, say, a faster horse, right? Whereas the tech fin, we start with the technology, the existing technologies. We look at technology and try to create value exchanges around it, to create new ecosystems that creates new avenues. And and it becomes a chain effect where, a different sets of use cases which you've never seen before, and how people adapt to it, or how people use it, in things we would have not even thought about when you designed it. So that's, for me, is the tech fin. And tech fin is something like, it just not, optimizes things, right? It creates new world for you. So if we want to optimize, or if you want to make it better, we should, it's fintech is the way to go, no doubt. But if we are looking at creating new worlds, in my view, tech fin is the way to go. Thank you.
Your presentation saying that you are very excited to be here today, and your excitement is certainly contagious for all of us. Thank you so very much for sharing all your inputs. Our next keynote address, transforming ways of working to unlock productivity. It will be delivered by Mr. Rohan Pagi, Regional VP Slack. If I could request him to please join us on stage. A big round of applause for Mr. Rohan Pagi. We can do a little, it's still early in the day, everyone, a little bit more energy.
Good afternoon, everyone. And we at Slack are really excited to be a part of this forum and platform. So it's great to see that so many people turned up, and I know there's a sort of a holiday here and stuff, but great to be a part of this conversation. I'm Rohan Page, and in next 15 odd minutes, I'm going to sort of talk about how you can unlock productivity with the power of automation and AI, and how you can do that through Slack. So maybe let me start with a sort of a forward statement, because I'm going to talk about a little bit of what we have in future from a roadmap perspective. So if you can move to the next slide, in terms of just a disclaimer there, in terms of roadmap and strategies that I'm going to share with you. Moving on from here, let me start with a thank you. I think it's, again, thanks to the BW team for putting this great event up, and looking forward to engage with a lot of leaders in the future as the day progresses. But also thanking the audience here. Like I said, it's a holiday and all of you have come in large numbers. I'm really excited to share our vision, our strategy as we move forward, and also share some customer success as to how some of the customers are leveraging, as I said, AI and automation powered through Slack as they build their journey within the fintech ecosystem. Before I maybe if you can move to the next slide, please. Yep, I've done that. Maybe move to the next one. I think today we're talking about an industry which is always in a hyper growth mode, right? If you talk about all the great things, I mean, I've been reading about this, talking to a lot of leaders, and what I've come across is, and in fact, it's called out in this forum as well, the market opportunity of 1.25 trillion by 2025. Sure, thank you. By 2025 is a massive opportunity that the fintech industry offers. Add to that 4,200 odd active fintech players that are already existing in this market. Add to that the problem that this industry is solving. It's basically creating financial independence for a certain segment, for the 1.545 billion population that we have in India, which essentially is going to make a huge impact on the Indian economy in itself. Now, as we talk about some of these aspects of hypergrowth and all the opportunity, I'm pretty sure a lot of you probably also would agree that there are certain challenges. I mean, the headwinds are all there. Some people call it a funding winter. Some people are already working on some financial models to try and figure out what's the best model to way forward is, and so on and so forth. But one consistent aspect that has always been represented by this this industry is the hypergrowth. And I think if you see some numbers out here, and there's a reason for us to believe that fintech ecosystem that exists in India can shape up the global fintech ecosystem, because if you look at the fintech adoption, it's 87% in India rather than 64% that exists globally. So I think all these numbers are definitely, sort of exciting enough for us to for us to think that this is the future. Of course, we can always talk about the challenges, the headwinds that are coming our way, and that's obviously the nature of the business. But again, like I said, hypergrowth remains to be the bottom line of what we do. Now let's try and look at the phase of growth. A lot of you probably would have seen this. A lot of you probably align to this. This is typically how a startup ecosystem looks at. I mean, it may not be very exactly as fintech progresses, but I think one critical aspect that we come across in a lot of organizations that we engage with is the phase 3, which is the hypergrowth mode. Now, what do we mean by that? This is a phase where a fintech organization is basically moving from being a mid-size organization to a larger or extra large size organization. And there's multitasking happening at this phase across, the leadership level or the founder level. While you have already defined your product roadmap and the product strategy, you are trying to create that differentiator today or that competitive advantage as to how you can build that up. While you're doing that, you're also trying to figure out your go-to-market strategy and the segment that you have already identified as a key segment for you to focus on. As the people and processes are growing, you are trying to optimize your IT and processes as well by investing into technology and also looking at what investments are going to make sense. While all of this is happening, this has clearly three main builders, if I have to say, as you move through the journey. First builder is obviously as you grow with people and as people come as a part of your ecosystem, an employee experience part of it and user experience part of it starts taking center stage as you build that up. You move to the next part of it, like I said, optimizing your investments into IT while you're streamlining processes, and that's happening at a rapid pace. It's something that your IT teams start working through. But there's one more important aspect that is now, becoming an important consideration, which is regulations and compliances that are coming up. In a lot of cases, what we have also realized is while, there has been a growth trajectory, a lot of these fintechs have been on. Now with this becoming a more and more regulated industry, I think there is an RBI guideline that comes in almost every 6 months. There is the latest one, which has come in June last a week before. It is always a catching up game in terms of keeping up with that. And a lot of investment is now also going into putting a CISO organization and trying to make sure you are compliant, because that can have a massive impact on your growth journey in itself. So when you start building all of this up, of course, you will, probably say there are challenges associated with this, in a hypergrowth mode. And these are the typical challenges. And now, again, a lot of you probably will agree to this. A lot of you will probably align to some of these challenges. The buzzword, I think the first one, cost optimization, right? I think everybody today is talking about cost optimization in some sense or the other. I think that's a word which probably will be used on this forum as well multiple times. Now, cost optimization has two elements in your industry, in the fintech industry. One is how do you optimize cost of acquiring a customer, which is a very important aspect of it. The second is how do you keep, optimizing costs that you're making in terms of the technology investments that you are making. Of course, the way you start looking at that, and that's what we probably some of these yellow boxes talk about, as to how do you bring automation into play for your teams to be more productive as you start going into, as you start, building your efficiencies, which is again aligned to the cost optimization aspect that I spoke about. Now, as you are optimizing your costs, customer experience cannot take a backseat, and probably all of us would agree to this. And we do see a lot of our customers actually coming up with, and this is true and not rocket science, there are multiple digital channels that there's an investment being made for you to take consistent feedback from your customer. That feedback is so important because at the end of the day, as we spoke about in the hypergrowth model, where you are trying to differentiate your product or create a competitive advantage, all that feedback essentially goes into that for you to create that product, right? Now, of course, for that to happen, your engineering, product development teams have to really integrate a lot of their softwares together to, collaborate really, really well, and which essentially will impact the ability for them to get a product faster to the market. I think that becomes a critical consideration at that stage. I think security and regulation, I've touched upon it, so I'm not going to go deeper into it, but data protection is a critical component. A lot of people talk about, yes, there's a lot of PII data, a lot of people don't have access to, but interestingly, we do come across a lot of our customers who are today using some social platforms to really, engage and have collaboration, especially when they're developing joint products with their external partners, banks or NBFCs and so on and so forth, with absolutely no control of what's happening on those social platforms or sort of what kind of information is getting exchanged. Now, that is a clear sort of, a regulatory compliance challenge that you probably will face or would be in process as you move into future. And the last bit is partner strategy, right? I mean, we are in an ecosystem where partners play a critical role. It's a 360-degree ecosystem that we speak about today. I think when I talk about partner ecosystem and sort of, give you a quick perspective, at the end, I think today a lot of NBFCs, a lot of banks, a lot of FinTechs are all coming together to sort of, develop maybe jointly a products, co-branded cards and so on and so forth are already there. But also in certain cases, a lot of FinTechs are impacting banks in a way of their acquisition journey of a customer. All of this, again, requires a lot of seamless collaboration that needs to come together. Today, there are not many avenues in the market for you to do it while you can do it, but you can't do it in a secure way. And in the ecosystem that you operate in. I think there are companies, of course, that are trying to solve a lot of these challenges, but if you look at it, a lot of this approach is a very siloed approach in the way it's being executed. Now, we do see, a lot of organizations are trying to, work in a siloed way. And what that means is you're not able to really leverage the power of automation or AI to really drive that, drive that productivity or efficiency enhancements. It essentially is becoming a lot linear, disconnected, disengaged, and is posing its own challenges. Now, here is where we talk about a platform which becomes a single source of engagement, single source of record, and single source of knowledge. All of that in a secured environment is what we essentially talk about when we talk about Slack as a productivity platform. Of course, leveraging and harnessing the power of AI and automation. I will not get deeper into this. Obviously, I'll stick to some key areas, and we are all here. We have a team that is present here. You can always have a discussion with us. But I'll focus on three critical aspects of this. The first one is accelerating our work with automation. I think we have some great examples of adoption of UPI really at the ground level. Automation needs to percolate down to your every single employee. That's when you will sort of impact your productivity. It needs to be, I as a general employee of an organization should be able to automate my work. And when we talk about automation of work, whether we talk about already available integrations, whether we talk about customized integration that you can come in, whether I talk about a sales guy in an organization who's integrating CRM into my system of record, whether I talk about an engineering person who's integrating Jira and Confluence into my system of record, or whether I'm talking about a usual employee who's integrating an HRMS tool within my system of records, that is where I'm getting impacted on the productivity that I speak about based on the AI aspects that I bring onto the table. The second aspect, I think, and is a very critical thing, and we hear this a lot, is about your ability to share and search knowledge. Today, with the influx of people, like I said, the hyper growth mode, there are people coming in, there's a lot of information getting created, a lot of source of information getting sort of, leveraged into, but there is no single source of, of truth that is getting created, or say a knowledge center that is getting created within an organization. Now think about a scenario where I join a project which is running for last 6 months and I come into middle of that project. And that's a very usual scenario that you probably see across organizations. I have to literally reach out to 10 different people. I have to literally reach out to 10, send 15 different emails to people for me to get the right information coming to me so that I become productive and start contributing to that project. Think about based on the AI search capabilities that bring onto that platform. This is all the information is available for me at a single click. I don't need to go to anyone. I just need to do a search and I have the information, the key milestones of that project. In fact, I can do an organization-wide search. If I'm a new employee, I need some information of my tax, aspects of it. I can just do a search. I don't need to reach out to people. Now, all of that information can be shared, of course, with the right controls and security aspects of it being covered for people to be self-dependent to drive that. And that is where, again, you start impacting productivity, which essentially leads to an impact on efficiency of an organization. And the third aspect of it, connect and engage. I think this is, a lot of you probably say, yeah, communication is a very simple aspect of it. Of course it is. And I think that's not something which I'm going to talk about it, because that's bare minimum basics that you're talking about. But your ability to engage and connect, which is again with the partner ecosystem that I called out again in a 360-degree fashion, is something which is what the differentiator is. Today we are working with one of the, and I think it was called out about, say ONDC was a name which was taken. We are working with that organization in terms of trying to help to build a pre-boarding to a offboarding journey of a partner ecosystem with a vision of creating 1.26 million partners by 2026. Now, how do you create that whole connection and how do you create that whole ecosystem for you to scale it up to that level? Now, that's where we talk about a connect and engagement issue. I mean, if I have to reiterate, yes, I'm not talking about a video conferencing solution. I'm not talking about an email. I'm not talking about an Excel sheets that people are working on different aspects of it. I'm talking about a single mode of engagement, single mode system of record, which is a source of truth, and a single system of sharing of knowledge and information that sits there, which is the reason we call ourselves a productivity platform and not a collaboration tool in that sense. Now, I think if I have to get into KPIs and the beauty of what we do, and again, we have almost 100 odd fintechs that are partnering with us today as we speak within India, and that team is growing up as we speak. I think we have an ability to impact KPIs across an organization, across the different roles and responsibilities, and you can probably see some of the numbers. Whether it's sales, we have an ability to impact their sales cycle. I mean, and some of the numbers are validated by organizations like Forrester's here. If you are talking about increasing efficiency from a services aspect of it, how can you reduce your cost per ticket? That's an impact that we can bring onto the table. Your project delivery teams. I took an example of a project management of a project of an individual who's coming into a project. How can you impact productivity on that front? And the last piece is, which is more internal, your employee engagement, the user experience part of it, right from a onboarding to a offboarding of a particular user. How do you manage that whole journey from an HR perspective is something that we bring an impact on. So at the end of the day, I mean, it depends on what KPIs are driving, because typically all these KPIs are directly related to the business outcome of an organization. And if you start impacting these KPIs that are across the organization, irrespective of what your roles are, that's when you start delivering a business impact or a business outcome that your organization intends to drive out of it. So I think as I move to the last bit of slide, I will be probably doing injustice to the crowd if I don't talk about the buzzword called ChatGPT. How many of you, and this is going to be a stupid question, but how many of you actually have heard of ChatGPT? Oh, that's great. It has to be 100%, right? Okay, let me start getting a little bit deeper into this. How many of you know? Obviously, OpenAI is the organization, right? I'm sure all of you know that. How many of you that know that Microsoft has invested $11 billion in OpenAI? Yeah, absolutely. All of you know that. Do you know there's a commercial engagement also with Microsoft with an OpenAI in terms of go-to-market and all of that? I think that's obviously there. How do you know that OpenAI's entire productivity platform is built on Slack? That's the information I intended to drive. So the point that and just do a YouTube search and you will find a testimony of OpenAI leaders talking about how Slack has made an impact on all these aspects because they use it wall to wall, and in terms of how it's become an ingrained part of their culture. So that's the power of productivity platform that we talk about, and that's a great example. Now that gives me also an opportunity to introduce Slack GPT. And this is something that is currently in beta. A lot of our customers are already experiencing it. This allows us having an opportunity for us to have a bidirectional integration, because one of our customers had built, who's OpenAI, a bidirectional integration with Slack, which will allow our to do again a much more deeper search. Maybe a writing assistance will be available within Slack itself. You can actually summarize the key milestones of a project or of an entire channel that you are a part of it. And there's much more to it that is coming in as we speak in terms of the launch that we are doing. Again, the intent is for us to build Slack as a single point of engagement. Like I said, it's a single point of engagement from a system of record perspective, from a system of sharing of information perspective, and from a system of ability for you to collaborate across the ecosystem that you engage with in a very, very secure manner. If some of these numbers, and I'm not going to deep dive into this, but these are validated by Forrester, and it's an important aspect. We spoke about cost optimization, right? The ROI aspect is critical. Now think about the ROI across different users that we are able to generate. On an average, 300% ROI. This is validated by Forrester. This is not Slack data, by the way. I think you can probably see it. Now, like I said, I think if you are in it to impact KPIs of the individuals that work within your organization, which essentially impacts the outcomes that you are chasing, we are not a technology or IT-driven tool. We are a business-driven productivity platform. So I think if you are in it for it, and if a lot of you probably might be using it, and there is always a roadmap that we come up with. We have now ability to integrate your DLP engines within the within Slack. We do have our native DLP that we have introduced. We have native MDM solution that is a part of it. So we are on a roadmap of bringing new innovation. ChatGPT is a great example of it as we move. If you want to be a part of this journey, please speak to us. We're going to be around. But let me share my last slide probably, which is basically the partners that we already have in India. These are some of the names that you can see. All of them are leveraging Slack for all the aspects that I spoke about. And there are enough and more testimonies of this. You can do a search around it and you'll find a lot of people talking about this. Now, with that, I would like to thank you for listening to me patiently. Do I have a couple of questions that I can take time, or maybe later? Yeah, okay. So maybe I'm going to be around. We have a team here. So please feel free to reach out to us, and look forward to having engagement. You have good rest of the day. Thank you.
And a session. I think we can give a bigger round of applause to Rohan. And we will now be setting up our stage for our very first panel discussion of the day. We've had so many insightful keynote addresses today, and our special thanks to Mr. S. Ravi, Ms. Praveena Rai, Mr. Sai Ganesh, and of course, Rohan Page as well. And it's now time, like I said, for our very first panel discussion of the day, FinTech, imperative role played in the Indian startup ecosystem. This session will be moderated by Vaibhav S. Joshi, co-founder, CBO, and global head, iCart FinTech. Our panelists include Alok Kumar, co-founder and CTO, Karza Technologies, Himanshu Vyas, head, new business initiatives and cash, Usha Murli, CCRO, Spice Money, Nishant Jain, CBO, Network Bharat Pay, Prachi Parikh, Director, Payments Consulting, EY. A very big round of applause for our first panel discussion of the day. Could I request all our panelists to please join us on stage along with our moderator? Come on, we can do better than that. Our first panel discussion of the day. I'm sure all of us are very excited about it. A warm welcome on the stage.
Yeah, hi. Good morning, everyone. Good afternoon, everyone. In fact, Vaibhav Joshi this side. Am I audible till the end? Yes, amazing. So good to be in Bangalore. Amazing weather, especially because I come from Mumbai and it's raining a lot over there. It's been for the past 3-4 days. So quickly, we are going to talk about the imperative role played by FinTech in the startup ecosystem. And as we know, FinTech is extremely important. Okay, it used to be e-commerce, which used to lead and which still leads, the highest number of, say, unicorns or the type of startups that are there in the industry sector-wise. But FinTech has been following up very, very closely at number 2. And if we talk about startup segment or sector as a whole, I think FinTech is really there, enabling and empowering each and every other sector for a lot of things. Okay, may it be payments, may it be lending, may it be banking, may it be investments, may it be insurance. So FinTechs overall has been empowering that entire segment. And while we embark on the journey to discuss the role played by FinTech overall in the startup ecosystem and in the BFSI ecosystem, before that, I'd request my panelists to quickly give their quick introductions. Alok, starting with you, please.
Hi, everyone. I am Alok. I am the CTO and one of the co-founders at Curza, which is a subsidiary of Purview Software Solutions. At a very high level, we look at automating the entire lending life cycle, looking at onboarding, any type of risk checks, your underwriting, recoveries, this kind of an end-to-end automation platform that we seek.
Thanks, Vaibhav. Good afternoon, everyone. My name is Himanshu. I represent Encash. Encash is Asia's first spend management platform. We help businesses automate their payables, digitize their collections, and issue them purpose-based corporate cards for making wise spending decisions.
Thanks, Himanshu. Good morning and good afternoon, everybody. I'm Usha Murli. I'm the Chief Compliance and Risk Officer at Spice Money. Spice Money is a leading rural fintech, and we touch the lives of millions of rural Indians using the internet as well as the smartphone network. And we leverage on a wide network of Spice Money adhikaris, providing employment to that sector. And glad to be here as part of this panel and wonderful audience here. Looking forward to the discussions. Thank you so much.
Hi. Am I audible? I'm not sure. Okay. Hi. So I represent BharatPay over here. I work there as a Chief Business Officer managing the network monetization and network creation for the company. Primarily, BharatPay is centered around the micro and small segment of merchants. It's a B2B platform which aims to create that excess of capital for these merchants who may not so far be part of the formal credit network. We are also a payment player. We are also a payment. Yeah. So we are also a payment player. Our current network is about 3.1 million merchants and growing very fast in about 500 plus cities in India now. Look forward to the discussion.
Hi, everyone. My name is Prachi Parekh. I am a director payments consulting at Ernst & Young LLP. I am a banker for like almost majority of my career, and I've worked in the fintech sector extensively. And right now we are doing a lot of payments and financial services related initiatives. So in fact, we are in touch with the regulators. We're in touch with the entities or who are actually empowering the different financial services journeys. We're also in touch with Indian players who would want to kind of go abroad or international players. Apart from that, we're doing a lot of work around, with this topic, especially on digitization and the next level to it, which is how do we democratize and really make it to the next wave, like is what our agenda is. I'm glad to be a part of the event. Thank you so much.
Thank you, everyone. So moving on, fintech is a very vast segment. Okay, within fintech, we have payments. We have seen, the rise of UPI, which is phenomenal. We are seeing innovations happening where we see, now we have 123 pay. We have account aggregator, which has come up very, very nicely. We have ONDC, we have OCE, and from an enabler perspective, there is a lot of action that is happening over here. If fintech was to, enable the startup ecosystem and the BFSI ecosystem, then probably I feel, all these features, all these products that are there, they play a very, very critical role. So, Himanshu, my question to you is, what do you feel is fintech's role in empowering, enabling this overall ecosystem?
Thanks, Vaibhav. I think the way I'd like to put this is in the entire ecosystem, this entire ecosystem is all about collaboration. When we talk about the banks, the regulator, and the fintechs, I think each of them acts as a force multiplier for the other. Having said that, while you have these large banks and the regulator acting as guardrails, the confines of these guardrails essentially bring in the required homogeneity in terms of how businesses are done. And they also ensure that, outcomes are, beneficial for everyone in the ecosystem and more so for the end customer. The fintechs on the other side, because of, their agility, their sharp focus and tech preparedness, solve for very, very key aspects. One of which is customer centricity, because we've got these so many customers that really need to be taken care of, and bringing in the intuitiveness that is required, right? I mean, we're talking about apps that are going in very quickly. That's one thing that the fintechs are solving on one side. And the other side, fintechs like BharatPe, they're solving for distribution, reach, adoption of this digital infrastructure. I think this collaboration, right, on the rails of what is being provided by these fintechs, I think is something which is commendable today. I'd like to just highlight an example, right? I mean, it's not from my industry, but this is something that always keeps ringing in my mind when I talk about fintech and how it leads innovation in the startup segment. Imagine there is a merchant who has a QR code on his counter. The moment a sale is done, it is recorded in an app. This could be his daybook or any other accounting app that he has. This goes and hits his inventory. So there is, a real-time information on his inventory position. The moment the inventory reaches the threshold of depletion, there is a trigger that is sent out to so many suppliers that are in the back end waiting to replenish the inventory for this guy. Now, this guy who's a merchant has a choice to make among so many suppliers. So he gets the best bargain. He gets the advantage of this competition. Once the order is locked, the supplier who's tied up with a logistics provider already makes sure that this, the item that got depleted is replenished in that store within hours. It gets delivered. So it is just about, I mean, this exactly is the power of fintech, right? A small QR code that is riding on top of accounting, riding on top of the bank, riding on top of credit, and also the supply chain. I think this is huge. This is where I think in my mind, fintech in that sense is, completely innovating or, rewriting the way some of the, things or some of the ways in which business has been done so far. I think that's my point.
I like the context when you said, you spoke about the entire supply chain, starting from a small QR code, and the type of tech that actually goes in behind to empower it is where the role play actually begins. Now here we are talking about, not just fintech, we are talking about, the entire value chain automation. So we have FinTech over there, okay, who is actually looking at, supplying those commodities. We possibly have agri-tech behind, where we are talking about the actual sourcing, the processing and the distribution part of it. Okay. We possibly have, enterprise level tech, where it integrates with the SAPs and the big techs of the world and triggers the orders. Okay, we have a lot of technology, a lot of AI, a lot of ML that actually kicks in to the example that Himanshu spoke about. And so sticking to that QR part, but before that, quickly, I want to add to that collaboration point. So I don't know if most of you know, but, I belong to the Yes Bank generation of digital. So 2014 onwards. So, and Prachi used to be a colleague at Yes Bank at that time. Interestingly, from a collaboration perspective, Himanshu, and I wanted to make this point, I just saw all the names, BharatPay, Spice Money, Encash, and Karza. In the early days, we have worked with all. So the power of collaboration, yes, I do agree with you. So moving on to, Nishant, and BharatPay has been one of the earlier flag bearers of FinTech. Now, let me ask you the same question that I asked Himanshu. How has the journey been? Where do you feel can FinTech empower the overall startup ecosystem? Because if I speak about BharatPay, then BharatPay started with a very, very simple product, at the merchant level, scan a QR code. And from there on, the journey begins. At the back end, there are a lot of other sectors that come into play. Okay. What do you think FinTech has done to empower that for your space?
Got it. So let me kind of build on what Himanshu said. He spoke about the purpose, he spoke about the utility and the form factor that we have seen FinTechs deriving of late. Let me talk about impact and then kind of come to specific point that Vaibhav raised as to how BharatPay has seen this journey and what kind of impact BharatPay and equivalent FinTechs have been able to make. This topic is very vast, in my opinion. And when I kind of try to carve out impact, it becomes very difficult for me to kind of what to miss and what to capture. So let me start with the two most dominant use cases, which is payments and lending. Let me share a few facts to kind of make my point and then come to the specificity. Today, we have close to 30 crore monthly active users, which use any of the top 4 PSPs and mostly transacting through UPI. Interesting part there is that if I was to club all the banks in India and look at all the account holders, barring SBI, they would all put together still not be able to rake up to the 30 crore number, which the PSPs have been able to create in the last 5 years. So that's a phenomenal scale that we are talking about. Giving you another data point, if you look at the daily transactions that happen today, I mean, I'm sure most of you would be kind of updated on these numbers. It is about 36 to 38 crores a day. That's the kind of transactions that you're seeing on a digital stack, and primarily on back of UPI. If you look at the transaction processed at a monthly level, we're looking at 1.5 lakh crores being done just by UPI. Now, the point I'm trying to make is that this kind of a evolution wouldn't have been possible should it not have been an ecosystem play, and which is where Vaibhav and Himanshu also alluded to the collaboration part. The progressive policies of the government, example being a zero MDR, the infrastructure subsidy being provided, the infrastructure creation with bodies like NPCI, and eventually the various FinTechs kind of unlocking their innovation prowess to be able to kind of scale up and make this whole payment ecosystem poster child of our country's success. I think the innovation, the way the whole ecosystem evolution and the way I believe the adoption of the country to the whole development. I think this is a phenomenal pace that we are seeing today. On top of which, if I was to go into a specific use case that we as a company are trying to unlock, which is in lending. So what we do basically is kind of view the transactions of these merchants. And on back of those transactions, we are able to underwrite them, the loans, and kind of facilitate their inclusion into the formal credit cycle. Today, what happens is India being a 3.5 trillion economy, a majority of these MSMEs, I mean, India being a land of MSMEs, some 60 million plus MSMEs in India, majority of these MSMEs do not have access to formal capital. And essentially, banks, etc., are offering loans at a certain ticket size. Given that they don't have any kind of credit history, and given that they don't have any kind of formalization, they so far were being catered through the unorganized segments, the loan sharks, etc. Now that is where players like us and players in fintech segment, multiple other partners are facilitating that journey by offering a way to underwrite their transactions, offering a visibility to their transactions, and on back of which being able to extend them so-called sachet loans. And as a result, today, close to, I mean, if I was to talk about last 3 years for BharatPay itself, we have added 7.5 lakh merchants into this formal cycle and have extended loans in excess of $500 million. Now, what happens is that once these merchants who come into the formal cycle are able to kind of build on that working capital and are able to therefore demonstrate growth, banks start getting interested in them, and therefore they move to the next ladder of evolution, which is entering into a formal network of banking capital and creating that credit history to be able to kind of leverage and kind of build on their businesses further. So, I mean, if I was to reflect on the key theme of what we are discussing here, the point is that you are making so many people kind of come into that fold and build a virtuous cycle for them through a very innovative way of, let's say, transaction underwriting, offering sachet loans, and thereupon kind of helping them grow in their day-to-day businesses. So I think this is what I can say from the as a very, very top level view.
Sure,
on
thanks.
How fintechs are, and these were two kind of examples on how fintechs are enabling in general the overall economy of the country.
Sure, Nishan, thanks a lot. And I agree with you that, earlier players like BharatPay have played a very, very critical role in that, because out of those, I don't know, 2016 report says there are 63.5 million MSMEs in the country. Plus we have, I think only out of that, only 13 million GST registered entities. So which is the formal fold, which probably the formal BFSI channel would be able to cater. So we talk about, NTC, new to credit kind of -1 rating kind of customers whom BharatPay has been going ahead and, doing the lending thing. So I think players like BharatPay, Paytm, and now PhonePe also coming into that fold, they are doing amazing for the ecosystem. Not just that, look at the power of fintech in the overall startup ecosystem with the example that Nishan gave, okay? We are talking about what, maybe 30-40% would be grocery stores, Nishan, out of your...
grocery is the biggest segment.
Biggest, so maybe 40% plus?
Yes, about that.
So 40% would be, BharatPay customers would be grocery stores. So there we are talking about, commodities coming in. We are talking about, food tech coming in. We are talking about distribution tech coming in. We are talking about logistics tech coming in. Okay, these are all startup sectors which are coming in. And these startup sectors would have been, completely futile if that QR code was not put up by somebody like a BharatPay. look at the effect of what fintech is having on other sectors as well. It helps like that. Because of that QR code, cash flow based loans were given to NTC segment. And because of those cash flow based loans, they were able to procure more goods, sell more goods. Okay, now keeping with the same context, Prachi, let me move to you and let's talk about how fintechs empower digital distribution, tech innovation, better customer experience, and how from E&Y perspective, how are you looking at these things from a fintech empowerment point of view? And may I also request, let's try to keep it under 5 minutes so we are able to do a full discussion.
Sure. Thanks so much, Vaibhav. I'm really glad that, the kind of speakers that I'm with have a very diverse experience. Somebody from industry to a fintech co-founder to somebody from the risk side, somebody from actually really done it or set the benchmark for democratizing, with an example, be it payments or any other related industry, we almost have them. But the best part, which I would want to kind of add, and I might take a minute here, is the audience, because I was standing outside and I've been a part since the morning. And I saw the people that you guys are here, and I saw that it's a healthy mix of people from the startup industry, from the fintech industry, from non-financial services wanting to get into that, as well as from the industry or somebody who have already been a part of the industry. So I think for me to kind of really come up with a one-liner solution, I think the way we look at it, and especially giving that movie ka dialogue, like, the Shrivali, main jhukega nahi karke. So I think that's how it is. India's growth has been phenomenal. And at EY, and our focus has been to look at democratizing by focusing on ecosystem play as well as one of the strategic objectives. And I think rightly our panelists also talked about MSME as a sector, and which is really booming. And I was a banker, almost 12 years a banker, and being on the other side of the table, when I were to kind of select a bank, a fintech, or I were to kind of collaborate with somebody who would kind of enable me or be a correspondent or kind of get into those kind of services, I felt that attitude or that risk-taking capacity is something that at that point in time, we were a little skeptical, and we thought maybe the pulse of the market is something that fintech can really capture. And so right now, as we speak, we are in discussions, and we are actually looking at MSME as one of the ecosystem players. We've enabled it for one of the largest private sector banks, and it has phenomenally taken off well. And the best part is that we have enabled collaborations with non-financial services and enablers. So that is one thing. Apart from that, I would want to also highlight that the buzzword in technology, when you talk about fintech, it's like the jazzy and the glamorous world. So one of the things which we think is, okay, AI is artificial intelligence is really coming up great. And you must have heard Prime Minister Narendra Modi ji stating America and India collaborations, and at IFSCA, which is like our center, which is separate in the gift city, wherein we are kind of enabling different fintechs. And there's a recent regulation, which is all, they're trying to bring some regulation to the fintech side. So we are also assisting and discussing with these regulators as to what exactly is that we can do to enable fintechs to do international business, or in the mainland India, what is it that can be done basis the different trends that we see. So like we have a presence across 14 different international locations. So we have experts who have already been there and done that journey. Like for example, USA credit card, or when we talk about fintech in terms of regulations and data security controls or cyber security, which is also one of the very hot topics which we see in our clients. It could be regulated entities or fintechs wanting to get into India, or from the compliance perspective, even fintechs coming in. So what we do is that we help them in kind of strategizing and solutionizing. So just keeping it short, I think although technology is there in the buzzword, but the enablers or the foundations have to be strong. And that's where we also focus. And I think when you talk about democratizing, these are certain things which are democratizing. And the best part is that we are humanizing everything. So when I say humanizing, we talk about personalized experiences, curated offers, and even like, I think there is something which is in the news wherein like there's a fintech entity, and I'm sure you must have known that in the loyalty space, we also are getting into merchant based loyalty, wherein like at one point in time we never thought about all of this, especially the PNL of small and micro enterprises. Now there are actually entities and big entities and having a really good market share, wanting to collaborate and go to the last mile. So that's where I think democratization is really coming up great. And the last part, and I would want to kind of end up with a story, which is a very funny one. I'm not sure if you guys have heard it, but just like bear with me. So if you look at, there were like two people. One of them had returned from the US and had a very good fintech startup and was like really great, doing well in the Silicon Valley thing, and was like really up in the buzz thing. And the other person was like a fintech startup and like bootstrapped and really kind of discussing about what are the new ideas wherein they can collaborate. So this US guy was in that pomp and pause, and he was like, okay, we've like really enabled it, and it's because of our engine that that we are able to service so many clients. We have a really neat user interface, and we really have 1 to ABC top clients, and that's how we kind of regulate. So let me kind of get you to like, one of our, I'll get you some tea and coffee, and let's kind of catch up. So eventually when they catch up at the Indian fintech ke yahan pe. So like, for example, the fintech kind of is in Bangalore, and this guy comes in, the US guy to the Indian guy. The Indian guy comes in and says that, I'll tell you how democratized or how good we are, and you'll see in my place. So what he does is he calls his servant and he says, please come here and bring me some samosas and some idlis, so that we can kind of really get to north and south sort of a flavor. And by the time the fintech person kind of talks about that, this is my product strategy, this is my product offerings, the guy actually gets the samosas and idlis. The next time, and this guy says that this is how our last mile delivery is, and this is a live example that my servant actually uses this basis. This our app is a last mile delivery app. The next time when they meet at the US fintech founder's house, which was again nearby, he was happening to visit at a hotel. And in that point in time, he said that, look at our fintech as an industry, and we are really trying to grow. And he kinds of get into some collaboration with a very big entity. And then he says, look at our app, last mile delivery. And then finally, at the end of the day, he sees that by the time they discuss the starting point of their executive summary, already the day is gone. And then in the next part is that they're not even able to get into like, servicing to the last mile when they talked about the Indian context. So, long story short, what we see is that the buzz has been, okay, India is really good in tech, India is really doing really great, and really going far ahead in democratizing, becoming the third largest entity. But when we actually talk about the other counterparts or the Western counterparts, they have kind of reached to that scale at a very slower pace. So I think there's a lot of scope that we have, and I'm sure with the panelists adding in, we'll be able to kind of really do justice to this topic.
So Prachi, it's like, that sitting at Starbucks, ordering from Zomato and getting it at a discounted rate.
Exactly.
The merchant, rewards that you spoke about. So thanks, Prachi, for a very good perspective. Quickly moving on to Usha, because she was speaking about regulations and, fintech, BFSI overall is a highly regulated space. Okay, if you look at other startup ecosystems, yes, there are regulations over there, but BFSI is a highly regulated. So what do you think can fintech as an entity, show the other startup sectors in terms of empowering its particular BFSI sector? What are your thoughts on that?
Sure. Thanks. Very relevant question for this forum and in general. I think it's a fact that regulated entities like banks and NBFCs are heavily regulated, directly so by the Reserve Bank of India, no doubt about that. But for a fintech, I think it's not just the law or legal obligation. As citizens of this country, we are also, it's a social responsibility to be self-regulated, number one. Number two, I think it's also a business need, because the hands of law, you've heard all these dialogues in movies, they are very long. It doesn't take long to catch up. And if you look at the regulator, what is the regulator actually putting at the center of everything? It is ultimately the consumer. The consumer has to be at the center. The moment the consumer grievance, you are giving rise to that by way of, it can be high interest rates. It could be, no proper resolution of the grievance of the customer. It could be consent issues where there is no explicit consent. Somebody came for something, you took his thumb impression, and then, he didn't know what he was signing up for. So I think if you look at the center of everything and all the regulations and every impact which has come to the sector is because of the focus of the regulator on the customer, irrespective of whether a fintech is directly regulated or not. Self-regulation on this particular aspect is very important. To stay in business itself, it's very important. Second thing, if you look at the regulatory, views and the focus of the regulator, it's also on data security, cyber security, data privacy. I think, again, all of this, a lot of it stems from the consumer angle also. And of course, national security concerns. Every citizen of this country, whether we are regulated or not, we are accountable for money laundering. If we have in any manner, let's say, advertently, inadvertently led to any kind of money laundering, I think the regulator catches up. So while the fintech sector is really agile, and I think the contributions of the fintech sector to the BFSI segment, I think it's immeasurable. I would say it's immeasurable in terms of the customer experience, everything. I think it has changed the face of banking forever, I would say. Gone are the days when we used to queue up at the branches. I've been part of a very heavily regulated entity, public sector bank, private sector bank, all of it. So gone are those days when, customer used to queue up and we used to compare the signature and then pass the check with a token and all that. So I think it's all that is a thing of the past, thanks to innovations in the fintech segment, which has hugely benefited customers, And at the same time, I think self-regulation, irrespective of whether we are, a directly regulated entity or not, the fact that we are ultimately a part of the ecosystem which is regulated makes it very important for us to sustain our business. So I think I would keep it very short and, happy to.
Thank you for very, very crisp takeaways. And I really appreciate, customer centricity point that you made, because that is the key today. If we as a ecosystem, we as a sector, everyone realizes to the fact that, keep customer at the center, then I think, auto regulation is something that will automatically come in, no two ways about it. And on the, again, transformation bit, when you spoke about banking and the public sector banking experience, I think, now even what is happening in banking is, and this has been, I have seen it at least for the past 7-8 years, even when your RM actually calls you on the 29th, 30th of the month to book a fixed deposit, sir, target pura nahi ho raha hai, de do lakh rupees ka fixed deposit. So when you do that, he actually opens his WhatsApp. Okay. And from his WhatsApp, there is bot banking, and he actually takes your customer number. And then from there, he books a FD through a bot. He doesn't get into logs in, he doesn't log into his, CRM or his CBS or anything. The RM also actually books it through a bot. That is how advanced and transformed the fixed deposits, or rather entire banking has become. So now that we are talking about the tech, okay, let me move to Alok. So fintech has the fin part of it and the tech part of it. And very interestingly, fintech is one of those sectors in that entire startup segment, which has really exploited tech to a great extent. Whether we talk about AI, ML, blockchain, not to mention certain words, which I will not, but all those technologies we speak about, fintech has gone ahead and exploited to the very best. Where do you think is the future? The convergence of fin and tech, do you think it's going to, there is far more, or do you think there is, a lot more to be built on the use cases on the tech that we have already developed in the finance space?
So definitely we have still a lot to do. And the way I look at the parallels, if you probably think about any e-commerce product, right? You open up a website and then whatever you want, ignoring the physical delivery and all, probably, once you check out, everything is done. You don't have to speculate. You don't have to think about, there are processes, there are compliance checks, whether I'll get it or not, right? No speculation, you're done. But if you think about any financial product, definitely there are things which we are doing quite well now. But still, a lot of products have, manual involvement. You might have to wait for days, weeks. Hopefully, that's it. But yeah, I mean, maybe a few years back, we're talking about months also. If you're looking at some of the SME kind of loans where, you're talking about processing huge amount of data. And, you need and the systems are not as good as what a human can sort of think about. So a lot of cognitive ability had to be built in. And I think last decade had been really transformative. Every player in the BFSI space has kind of, innovated, has been looking at how technology can be incorporated. While the front end is easier, even some of the speakers were mentioning that it's easy for us to see probably a fancy UI UX, but is it really automated? Are we really exploiting technology everywhere? Where are we sort of, seeing those breakpoints? Your home, you can open up your camera, and then first thing the model can say it's an actual human, or there is probably some sort of a representation attack where someone is trying to spoof your identity. Then from the video we can extract your face, we can extract your KYC documents. Then you have the automated name matching, address matching. Your KYC info is validated. Your photograph is being matched, and in a span of 4 minutes, you have a confirmation from the bank that everything went well. You don't have to visit a branch. That's really revolutionary, and every player has sort of played its part, starting from the regulator itself. They allowed something like this to happen, and then RPA techniques, sort of AI, and so that's kind of the impact that we are. Sorry for this. Yeah, so I was just trying to give an example to, just draw parallels, because all of us broadly look at the ears of the crowd here, at least would have, interacted with bank 3-4 years back. And today, if you see, there's a massive transformation. Is that the same experience for every product? No. And where are we? I won't say we're lacking, but it's just that, we want our computers, we want our models to be smarter. Obviously, Gen AI is cool where it is doing more than what we are telling it to do. It is trying to generalize. There are challenges. You can get hallucinated. And if you're working with, we're working in a regulated environment, how do you tackle these S cases? That's one of the major problems that we are seeing today. We might be able to kind of automate most of the stuff. We can get you that e-commerce experience, but what about that 1%, 2%? And that is probably one leg of innovation that hopefully we should be able to achieve. Given that we are quite short on time, I do not want to further delve into it. But definitely, I guess there's still a lot for us to do. The stepping stone is really great. And the vision, the way I see it, is that we need to reach a place where there is no difference when I'm looking at probably a financial product or any other type of transaction. It should be kind of seamless to the end user.
Thank you, Alok, and very important for all of you to note that the type of work that even Karza has been doing, they are known as enabler startups. Okay, and in the fintech ecosystem, enabler fintech. What it means is that they play a very important role of enabler for the overall ecosystem. Unlike a Spice or a BharatPe or a Encash who build their products on use cases to solve a particular problem, an enabler fintech actually works behind those use cases, works with tech to empower how to create those use cases. For example, on a customer onboarding journey, he would have probably 5 to 10 products. Okay, on a I don't know, a financial profiling journey, he would have 5 to 10 products, so on and so forth. Okay, so enabler fintechs, and why I'm making this point about enabler fintechs is when we speak about the overall startup ecosystem. Okay, if fintech has shown the light, shown the way, that is by the way of creating these micro segments And which is what I strongly feel that in a clean tech, green tech, insurtech, agri-tech, wealth tech, logistics tech as well, enablers can play a very important role, as equivalent to what a B2B player or a B2C player also does, and which are use case specific, solutions. That's it, from my end and from the panel end. I think we have just completed our time as well. So if there is a question, happy to take a question or two, but otherwise, yeah, thank you so much. Yeah, but let's have the big round of applause anyways.
I have a question to Bharat P. Maybe I'm wrong, but then I am a banker for a long time and also been in the controlling areas. I feel the growth in the BFSI has come, but then BFSI has got almost all areas, right? From a chit fund to NBFC to everything under Reserve Bank of India is being controlled under BSI. Whereas a fintech company needs some other regulator who is as big separately to control them so that they don't fall down in the future days. That's point number one. Point number two is, like you had very big industrial houses, ICICI, IDBI, which developed the funding for large scale industries and SIDB for small scale industries. You need a government undertaking also, which should finance or help the fintech companies for funding to this micro level funding, which is happening in the place. These 2 points are more important for growth in the fintech industry is what I feel. Maybe I'm wrong. Just correct me if it is. Thank you.
So I think both these observations are valid. Talking about the first observation where you mentioned about the regulations and how the banks have always been on that side, and how I think what I understood is that fintechs are catching up. They are operating through a RE mechanism as of now, and that they need to make further strides. Did I understand that right? Okay. So
they have for the small finance banks certain regulatory effects, but exactly for the fintechs, they don't have.
Ishant, let me take that. So, sir, what is happening is, there have been discussions both at Niti Aayog level and at Reserve Bank of India level, where, a digital bank kind of an entity may get formed. Okay, the entire fintech is waiting for that. There are also now, if you break up, there are a lot of regulated entity licenses that are available at RBI. For example, a PPI license, a prepaid payment instrument issuer license. Okay. Then you fall into the account aggregator sector. Okay. Now, if we talk about specific Bharat Pay case where you are talking about the lending part of it, okay, then it falls under the digital lending guidelines, where as a DLA or as a LSP, they actually tie up with either the lenders, which can be a regulated entity like a PSU bank, private bank, small finance bank, NBFC, or they actually go ahead and start their own NBFC, and through that they end up lending. So at the back end, there are guidelines. Now, as far as talking about creating a regulator for, so as far as talking about creating possibly a fintech regulator specifically for the fintech segment, I think that's a wish list. Probably, you are a senior banker, you can write to RBI and, put it in the wish list.
One point, sorry. Since we are talking about this, in fact, we are in discussions, and this has been a hot topic with few of the regulators and the entities who would be regulated, which would be fintechs and associated entities. And there is something which is already upcoming. And an example of that is obviously the lending related guidelines, but there is an anticipation. For example, you talked about payments bank. So there is an anticipation around like what could be enabled, what further could be kind of looked at. And when you talk about international regulations, we've actually done sessions with the regulators telling them, because we do not have any fintech regulation as such, like, proper fintech regulation, but we've given them some framework as to how can they look at it. And there is something that they might be looking at. And example is that IFSCA, if you see, they've already made it public wherein they want feedbacks on licensing and PSP. So yeah, it's available in the public domain. Yeah, sorry.
Just if you see the 1970s, 80s of the Reserve Bank of India, you had Exchange Control Department, you had a FAME, you had a FERA, Foreign Exchange Regulation Act. But then, they separately branched off and then it all wended somewhere. And now today they have separate accounts and departments for all. The same is required for FinTech is what I wanted to clarify and insist upon.
Sir, at the broader level, when it comes to banks, as a banker, as an ex-banker, let me tell you, when we onboard fintechs, we follow the outsourcing policy that is laid out by RBI. So outsourcing policy gets followed and entire engagement gets covered through that. So whether we get onboarded as a business correspondent, banking correspondent, as a program manager, as a technology service provider, as a service provider, overall that level. But yeah, we heard your point. I think that's a very valid and very good suggestion. But in the BFSI and fintech space, just for overall audience, today the engagement actually is done at a product level. So if it's a prepaid payment instrument for which Encash is tying up with Yes Bank, then the PPI guidelines will apply. If it is a BBPS or a AEPS or a DMT or a micro ATM that Spice Money is tying up with its bank, then those relevant guidelines will apply. So the overall outsourcing guideline is there and those product level guidelines come in. Having said that, guys, we have really short of way beyond time. So thank you so much. I'll hand it over to her. Sir.
A peer-to-peer lending system. Is there any work going on that?
There are startups who are working in P2P lending space. There are startups.
Has RBI come up with any specific guidelines on that?
Yes, sir. P2P lending guidelines are available online on RBI's website. If you want, we can help you with those. You just go to RBI's website, talk P2P lending guidelines. There are entities who are already working in this space. You can have an offline discussion with Nishant. They are doing a fantastic program in the, the 12% club. Yeah, but I would request you to take it offline because, we are well beyond the timeline. Thank you. Thank you, everyone.
Thank you so much to all our panelists. Yes.
Kind of segue that he was trying to create. From a fintech standpoint, we are being seen as a facilitation partner. So while, and I think these digital lending guidelines that have come up and which Weber was mentioning, I think couldn't have been timed better when the industry is at a relatively nascent stage as opposed to the evolved banking infrastructure. I think this clarity couldn't have come at a better time where they have clearly spelled out the various roles that people involved in this value chain play. So when it comes to fintechs, we are being seen as a facilitation partner, which can be also seen as a lead generator or a collection partner. They've clearly spelled out how the money flows would happen and how the money flow needs to be kind of created between the person who is extending that loan, entity which is extending that loan, and the receiver of those funds, and how there should not be any convolution between the fintech and the money flow. So that clear segregation and therefore those pathways, etc., have been created to facilitate that. Point what Weber was trying to make was that there are different legs at which you kind of interplay as a fintech with different regulators or REs. So for us, for example, banks being an RE, we are kind of acting on their behalf when we are acquiring, or let's say you are extending a loan, you're extending a loan on behalf of a NBFC, and therefore you're just a lead generator. So I think in this ecosystem, there are different players who are trying to create their impact in the overall scheme of things. So what fintech, therefore the tech part becomes very, very important and those flows become important. And yeah, that's the way the whole ecosystem is kind of evolving.
Well, there is a regulator required exclusively for that. That's what I want.
Sure.
Well, thank you so much for all your questions of all those perspectives. And you don't have to sit at Starbucks and order from Zomato because we have lunch waiting for all of you outside. So please do join us for lunch. And if we could request you to please be back in your seats in half an hour. Thank you so much.
Check, test. Check, test. Check, test. Check. 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 Test. Check. Test. Check. Testing. So check, 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 mic testing. So check, check. Check, check, mic testing. Check, check, mic testing. Check, mic testing. Check, check. Check. Check, check. Yes, yes, check, check. Check. Check, check, yes, yes, check.
ಇನ್ನೊಂದಿಲ್ಲ ಆಟ ಒಂದಿರೋದು ಐದವಿದೆ ಮಾತಾಡೋಲೆ
Check, check, mic testing. Check, check, mic testing. Check, 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 mic testing. Check, 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 mic testing. Check, 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 mic test. Check, check, mic testing. Check, 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 this, check, 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 check. Check, this, check, 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 this. Check, check, this. Check, check, this. Check, 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 check. Check, this. Check, check. Check my system. Check, check my existing. Check, check. Check, check my existing. Check, check. Check, check my existing. 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 Check, check.
Hello, ladies and gentlemen. I hope you're all enjoying your lunch. For those of you who have finished your lunch, if I could request you to please move back into the hall so that we could get started with our next panel discussions as well. Thank you so much. Ladies and gentlemen, if I could request you to all move back into the hall, we will soon be starting our next panel discussion of the day, Blockchain Unlocking the India Opportunity in the New Decade. If I could request everyone to please join us back in the hall for our next panel discussion, please. Ladies and gentlemen, if I could request you all to please be back in the hall in your seats within 5 minutes, as we will be starting our next panel discussion shortly. Welcome back, ladies and gentlemen, and thank you so much for being back in your seats at the allotted time. And it's now time to build up an appetite for even more engaging discussions in this. This is post-lunch. We've already touched on this several times during the day, the topic of blockchain, but now it's time to delve a bit deeper. Blockchain unlocking the India opportunity in the new decade is going to be our next panel discussion, moderated by Sharat Chandra, blockchain and emerging tech evangelist. Our panelists include Vivek Madani, lead Flipkart Polygon Blockchain COE Flipkart, Prasanna Lohar, CEO Blockstack, Arushi Goyal, who will be joining us virtually, specialist data policy and blockchain digital assets, C4IR India World Economic Forum, Vivek Gupta, CTO CoinDCX, and Aishwarya Gupta, Ecosystem BD Head India and Global Payments and FinTech Head Polygon Labs. Could I request all our panelists and moderators to join us on stage, please? A very, very big round of applause. Come on, we can do better than that. We've just had a great lunch.
Good afternoon, everyone. So welcome to the conversation and unlocking the India opportunity in the new decade. So if you look at the topic, it's more relevant for multiple reasons, right? So India recently displaced this topic is relevant for multiple reasons. So India recently displaced even UK as the fastest growing fifth world economy. And in today, I came across an article where S&P Global Rating says that India is going to be the fastest economy for the next 3 years in Asia Pacific region. So the opportunity and the potential is huge and immense. And we are at an inflection point where the entire world is facing headwinds of recession, and we are perfectly poised to leverage technology and unlock opportunity. So with this, let me start by putting the first question to Arushi. She's joining us virtually. Arushi, how do you see the virtual digital asset landscape evolving, and how can regulators enable responsible innovation? What's happening around the globe, and how Indian regulators can enable responsible innovation? Your views on that?
Yeah, I hope everyone can hear me.
Yeah, we can.
Okay, perfect. Well, thank you, Sharath, for the question, and good afternoon, everyone. Would have loved to be there. Unfortunately, I could not make it. So recently, we published a paper on this very topic that was a global approach to crypto asset regulation. And as a part of that, we analyzed close to 20 jurisdictions to understand this regulatory evolution. And we found some common trends, right? The first is that most of the regulators in the space are either central bankers or financial sector regulators, which also means that most of the frameworks that are emerging are incorporating learnings from our existing financial service frameworks. And it's also possible due to the fact that most of these crypto asset use cases actually just pertain to the financial sector. We've seen very limited work being done on non-financial use cases, such as enabling brand management with NFTs or driving sustainability initiatives. Within the spectrum of AML, within the spectrum of bans and legal tender, we've seen a large focus on building out a licensing regime with a strong focus on ensuring AML CFT controls and consumer protection. We're also seeing debanking emerge as a big concern, and more regulators and governments are paying attention to it. Because if you're unable to provide banking services to an entity, you're virtually pushing them outside your jurisdiction, which can hugely limit the regulator's ability to supervise effectively. And finally, we also see a lot of efforts from the industry side by, for example, a lot of entities tend to voluntarily ring-fence transactions to comply with capital control laws. To your second part of the question, Sharath, in terms of what can be done to drive responsible innovation. And obviously Web3 is a much, much broader concept, something we all look at as the next iteration of internet, open, decentralized. But what we found that on the regulatory side, it helps to have more clarity and certainty. Agility is extremely important, which to some extent is possible through regulatory sandboxes. We are also seeing more and more efforts that need to be done in leveraging tech itself. Blockchain analytics, for example, is an excellent tool, extremely useful in even reimagining for better regulatory tools, right? On the industry side, I think they're extremely well placed, similar to the internet or telecom era, to evolve best practices and possibly technical standards to ensure interoperability within the ecosystem. Thank you so much.
Thanks, Arushi. And I will pick two words from your response. One was debanking, and second was the sandbox, right? So I think debanking is one of the biggest roadblocks where it's kind of hampering innovation and stifling, if I can use that word, right? So let me put this to Prasanna, you being an ex-banker. So put on your maybe banking hat and tell us more about what is the role of banks and incumbent players in financial services in driving adoption of blockchain technology? Since you have been interacting with both regulators and different ecosystems, what are the use cases of implementation, which are the potential of disruption? Your views, please. Yeah.
I think so. I think wonderful, Sharath. I think banks. If you look at overall blockchain adoption, since blockchain has becoming another prominent technology after internet, and since 2009 we have seen how cryptocurrency has been rise with the Bitcoin, with Ethereum. I think almost 50% plus projects on blockchain are on the financial side, followed by insurance or media entertainment, and furthermore gaming and all. And banks, and if you look at the rise of banking from brick and mortar to internet and mobile, internet mobile typically backed by internet as a technology, internet banking or mobile banking. And the most of the business model today, which is aligned with the FinTechs, which is aligned with external entities where we do opening of current account, savings account, or lending, everything is now going digital. Why? Because internet is that foundation technology which comes and ease out the customer experience for offering multiple products to the various types of customers. This is what is happening in India, outside of India also. Now, while doing this, there are still gaps, so-called trust gap, right? How do we, and these gaps are called as operations, right? So how do we really create an account? So there is an operations or man in middle between who will act called as a maker checker, or reporting of frauds. There again, there are manual actions. Likewise, if you sit inside a bank, you will find at least there are 300 plus operations or gaps who needs to be nullified as an automation. So as an automation, every bank will keep doing their automation, but at a larger scale, if you have to bring on complete banking with a better experience at a scale, then we need to look at what is the next level of internet. Then obviously the blockchain technology comes and says that I can create that network effect, impact, where opening a bank account typically might take 5,000 to 10,000 rupees, or it takes at most 20,000 rupees to open a loan book for any bank. And again, that customer, if you have to go to another bank, you have to redo that same exercise with some operations. That is an additional burden. Imagine some of you must be having minimum 3 accounts and you must be banking with only 1 or 2 banks. What does it mean? That third or fourth bank has unnecessarily invested that much to provide that banking experience, which what we can do, we can create a KYC experience, do the KYC once, and that KYC is available to other banks whenever customer give that consent. And that is technically possible on blockchain. But how do we bring on a better guideline or a better functional thing? That I'm talking about one use case. Now imagine there are other use cases where reconciliation, settlement, where merchant is paid out on the next day on UPI. You guys are happy with the UPI, but UPI is again a victim of that internet and a lot of frauds are happening. So blockchain comes and says that whatever has happened so far, it's okay, but we can give that judgment that we can do better automations to the overall banking ecosystem. Another example could be reporting of a fraud. So fraud, suppose reported today, Vigilance Department has to re-report to the RBI, and that data has to be aggregated in a central fraud registry.
So typical cycle for this whole thing is around 45 days. Imagine some of, or not some of you, some fraudulent customer comes and he's aware of this gap. And we have seen those gaps with some examples like Niro or Malyas, right? And they have identified those gaps and they have done a lot of frauds in a banking ecosystem. So likewise, what regulatory is looking at today with some companies like EBIC is one company which has come up is recently with 18 banks coming together. Or we have seen how RBI Innovation, which is arm of RBI, has done some POC pilots on trade finance, LCBG. So I think individually banks has understood power of a blockchain, like Yes Bank has done with Bajaj Electrical, ICSA with Emirates NBD. And like Blockstack, we are working closely with some banks to do some automation. But as a network effect, which the example which I was giving you, and imagine over a period of 5-6 years, not only these models, which is traditional account opening or so on, tomorrow digital asset, tokenization, the way JP Morgan is working closely with OINX, same kind of model Indian banks will adopt. Recently, JPM announced that they are working closely with the 4 Indian banks. CBDC is another example of a blockchain-based application. So I think so in a nutshell, within a bank, there are many areas. And if you sit and ask that every process, is it a manual process? Is it a multi-party process? Do we require some reconciliation settlement? Do you need some reporting? Whenever these things comes, automatically what happens, RBI every year over a period of last 20 plus years, they come up with a lot of guidelines. Imagine KYC has gone through multiple revamps. Your paper KYC has become an actual norm in 2004. And since then, they come up with eKYC, followed by video KYC, followed by they are talking about CKYC. And still these KYC is backed by a lot of operations. Let us bring on another KYC, which will nullify all those controls which we have created last several years, right? So blockchain comes and gives some kind of advance to the regulator, which typically talks with the other banks and recreate another experience, right? So it's a foundational technology. It will take its own time. It's not like you got a smartphone and you started operating and your life has changed. So, and more actors are involved, right? So where more actors or more companies are involved, you need to look at regulation aspect, data governance aspect. How do we share this data, KYC data from one bank to another, right? So I think there are a lot of such things, like even you talk about CBDC, where there is a cost of a printing currency. Right after printing, there is a cost of distributing option of this currency to the various branches called as a chase branches. And after that, money moves from those branches to in the van with a third-party service provider called as a cash management system. So what happens at the end of the day? It's all manual reporting back to the bank that this much cash is loaded. And at the end of a financial year, some banks are in the room of almost 1,000 crore plus amount will be parked in a suspense account during their financial report. CBDC comes into the picture, it will revamp that whole thing. So while we talk about these couple of use cases, if you sit in a bank, you will come up with a lot of such path-breaking use cases. And recently DLT committee, blockchain committee at RBI started doing this kind of a study. So eventually, the way we have seen guidelines on mobile banking or internet banking or digital assets, similarly, you will see some guidelines where blockchain should be an integral part of every system eventually. So that's in a nutshell, and how banking is supporting for many other areas. Thanks, Prasanna. Now let me come to Vivek. So there was a recent report by Bank for International Settlements where they talked about the future of the monetary system, the concept of a uniform ledger, and the concept of tokenized money. But there's also a notion, there's also a narrative about the future of finance is going to be decentralized. So what are your views on the global opportunity, what it means for India, what are the challenges, roadblocks, how do we overcome that and unlock opportunity for India in general?
Sure. First of all, thank you for organizing and having me here. See, I think we all believe very firmly that India could be a powerhouse as far as Web3 is concerned, given our technical prowess, given the digital penetration in the country, our demography. There is an opportunity for us to be, what could be an engine for, what could be the future of the new internet, right? So I think there is no doubt that we all believe that we could be that powerhouse. In terms of, some of the prominent use cases that I see coming up in more recent times, and which would be, I think, equally relevant to India, could be one could be around tokenization of real world assets. I think when you think about on-chain tokenization of real world assets, or in any form tokenization of real world assets, I think blockchain is a natural use case for it. And as per a new study that has been done by, I think, Boston Consulting Group, about 16 trillion worth of assets will probably be shifted to blockchain by 2030. Citigroup has called it the killer use case for blockchain. And if you just think about it, right? I mean, if you want to store, the data in a tokenized fashion, and you want to basically be able to track that in a transparent fashion, where else would you do it if not on blockchain? We have been calling digital assets on blockchain tokens forever, right? So if you're not going to do tokenization on blockchain, we are going to do it. And there are several advantages with that, right? The first one of which being that you can actually do fractionalization of assets, right? Imagine you've got your real estate, and real estate can be sold in very small blocks. Then the efficiency gains, you can do it pretty fast, right? You can actually move the transactions, really, really fast. And all of that becomes very, very relevant for India, right? I mean, basically we have upwardly mobile audience. We basically got young audience. And in this world, India is actually seeing a very, clear, distinct shift towards financialization of assets. Take a few decades back, and you will see that a few decades back, we used to invest a lot into illiquid assets, right? We would buy lands, we would buy properties. But now the current generation, at this moment, India is very much focused on investing in liquid assets. We are restless. We want things to move really fast. We want liquidity to be available to us. We want our assets to grow. And that is where any of your illiquid assets now can suddenly become a very liquid asset because you have tokenized that on chain. Right? And then obviously the opportunity that comes from, being able to tap assets globally. You can actually get access to any of the assets anywhere in the world, internationally, simply by basically tokenizing and putting on blockchain. Obviously, when you talk about, international, you have to talk about legal aspects, you have to talk about compliance. And that is where I think the second use case, and I think Prasanna briefly touched about it, the second use case comes in, which is decentralized ID. I think decentralized ID will be a killer use case. As per me, I think that is a killer use case for blockchain because it in itself actually unlocks several other use cases. For example, how do you tokenize an asset and store that asset on chain if you are not able to, basically associate it with a proof of human? And proof of human is what actually you get from decentralized ID. You get proof of human, which is reusable, as Prasanna was trying to say. And then you are able to apply any sort of legislation on top of that ID, be it global legislation, be it your local legislation, and then you're able to do that. And I think that is what I see as two primary use cases that will be, I think, driven through blockchain in the coming times. Obviously, blockchain is expected to touch almost everything globally, but I think these two use cases will be very, very prominent. Besides that, having said all of that, right, I mean, there are definite, challenges to the adoption of blockchain, primarily around the headwinds that we are seeing in the due to the compliance and, the legislative aspects of it. I truly firmly believe that the real push for the blockchain adoption will actually come when we start getting clarity around regulations. Meaningful, clarified regulation is key, is central for us to be able to, bring the adoption of blockchain everywhere. And personally, I am pretty hopeful that we will positively see a positive regulation. India is probably poised to take lead in that. The question, and I think, like I was trying to say, I think this train will arrive. This train will take off. The question that we need to answer is, do we want to be a compartment in this train, or do we want to be the engine of this train? Right? And this is the opportunity differentiator, getting some clarity around regulations. We have the innovation, we have the technical prowess, we get this, and then we are basically have the opportunity to be that powerhouse that will actually drive Web3 forward.
Thanks, Vivek. In fact, I would echo your sentiment when you say that we don't have to be the second compartment and have to be the engine, because the time to play second fiddle is over. The time to lead for India is now. So let me move on to Vivek from Flipkart. And Blockchain Center of Excellences, they have become breeding ground for innovation, product innovation, and adoption. And since both Vivek and Aishwarya, you are part of Blockchain Center of Excellence. So I will begin with Vivek first and get his views on what you have been doing at Flipkart as far as digital commerce and Web3 is concerned. And what is the opportunity for India in general? What are the roadblocks? What are your views on that?
Yeah, I too echo Vivek's thoughts, by the way. I definitely think that regulatory clarity is a must. Anyone who is a builder, operator in this space has run into enough and more challenges And it gets frustrating, but at the same time, you know that, okay, if it comes through, and because the opportunity size is big, right? So I think, yeah, like fully echo the optimism that the regulations need to come through and there needs to be enough clarity. I think so at Flipkart, the way we look at it is at least from a consumer standpoint, right? And there is enough stuff to be done in, like, say, the banking sector or even the B2B, but like the consumer opportunity is actually massive, and it goes beyond crypto, right? Like, so I think on like the first like killer use case was to actually get like CoinDCX and the likes of like these exchanges to onboard users. And they were able to do this because to the user, like, I don't think users really had to buy into the idea or like philosophy of decentralization, right? Users cared about like owning something which could make them a healthy return or like an even greater return than like other forms of asset. And the experience was akin to buying stocks or mutual funds, right? Which is why you ended up onboarding so many users. So how do you like then think of like other use cases which could like bring like a lot more masses to adopt to stuff, but like you need to build stuff that is useful as well, right? So there are three like broad areas that we look at. Like one is access. So can we there's a lot of data on transactions, right? So like most e-commerce transactions actually happen in cash, right? Which is like transactions that are available to like e-commerce platforms but not available to anyone else. And I think if you think about it, like access to credit is going to be unlocked in a meaningful way with the whole account aggregator framework, right? So, but that's still not going to capture like a lot of the cash transactions that are happening. So the moment you're able to capture that in a trustless manner and make it available, you unlock credit to a lot more people. So you give access for a lot more people to be able to transact and buy things and like enter the economy in a much bigger way and for the economy to grow. So I think like unlocking access has like a very, very big opportunity. Then the second thing is engagement. And engagement is what we are currently building towards and what we are most excited by. Most membership or loyalty programs, the data of like, you know, a customer being loyal or having a certain number of points or a certain membership is again sitting in a very centralized structure, right? So what happens is that you may be sitting on like a ton of like, you know, airline miles or like, you know, even we run our own loyalty points called super coins. But it becomes very hard for you to use it outside of that centralized ecosystem. If this thing is put on chain, it becomes very easy for everyone to know what the treasury looks like, what are issuance, earn, burn mechanisms, and for other people to be able to issue and accept it, right? So I think like just the amount of usage that you can unlock through putting it on chain because it becomes interoperable is very exciting. So that's what we are sort of like foraying into, and we have recently announced the launch of our waitlist for Firedrops 2.0 as well. What we're excited by is like what Starbucks did, right, with the Starbucks Odyssey Web3 loyalty program. We think that we have that opportunity because like we work with thousands of brands. All of these brands cannot like, you know, create their own Web3 loyalty journey, right? So like, can they launch engagement journeys where rewards are something that the users earn, right? Like by engaging with the brand. And if those rewards, including say a discount, right? Like you win 1,000 rupee off of a Poco phone, but you just ended up buying another like phone like a year back. You're not looking to upgrade. Can you sell that discount itself, right? And we think we're excited about this because NFTs in India, like at the intersection of community or art may not work, but India really, really cares about value, right? Like if you can tokenize discounts and stuff that people are anyway like using, could that you know, unlock some sort of use case along with, of course, like points and other things. And lastly, I think it's about like more verifiability. I think we were just having this discussion over a coffee break earlier that we end up seeing like a lot of you know, like counterfeit products, right? So if there is an opportunity, we don't know how to exactly solve this. I'm very open to brainstorming with everyone here. Like if there's an opportunity to solving for verifiability of products, trusting reviews and ratings a lot more, trusting sellers a lot more, and that can extend beyond like, the entire sort of country, right? Because if you think about it, ONDC is a protocol, but the protocol not on chain. The a very similar protocol could actually unlock a lot more, because then everyone can read like, you know, data about like products, merchants, sellers, ratings and reviews across the board.
Yeah, thanks, Vivek. In fact, you rightly pointed out the potential of putting data on chain unlocks opportunity for all the players in the e-commerce ecosystem. Let me come to Aishwarya and get his views on what Polygon has been doing, because Polygon is at the forefront of enabling Web3 adoption across the globe, right? So a decentralized identity is one of the key players of, again, enabling the proof of human, as Vivek rightly said, right? So give us some sense of what is the roadmap for Polygon, and what are the plans of increasing adoption of Web2 audiences or Web2 businesses into Web3?
I think earlier Vivek also said about identification on chain and everything. So like with Polygon, we are building multiple products as blockchains, infrastructures, and Polygon ID is one of that product. And like how I see identity. So today, when you go and do a UPI transaction, so when you start a UPI transaction, actually your bank, you send a message which connects your bank account to your UPI ID. The KYC is verified and everything is done, right? That's how your UPI ID is created. And after creating that UPI ID, what happens is anytime and every time you're doing a transaction, your KYC is not moving with you. What is happening is there's a token generated, which essentially goes out and binds every transaction with that UPI ID to prove later on that it was you who did that transaction. So that is what we are trying to do with Web3. I mean, a lot of people want to go into Web3, and the first question always that they come up with, how do you know like who is doing what, right? And a lot of people in Web3 say that they want to be anonymous, right? So we try to solve for that. How did we do that? We created a way in which any one of you, like probably there would be a lot of KYC providers here. And what Polygon ID does is it actually goes out and connects with your identification system, the Web2 KYC platforms. Once it is done, the next step it does is it goes out, takes the data from that KYC provider, whatever data you have already given to the KYC provider, to generate a decentralized identity. And after generating this identity, we delete all that data which we have taken, which means now we do not hold any data. So if we don't hold any data, there's no breach. First thing. Second thing is, now when we have created this ID and this ID is attached to your Web3 address, anything and everything you're doing is getting binded, which is exactly what UPI does today, right? And once that is binded, now tomorrow, let's say someone comes in and says, okay, so this address seems to be doing something which is breaching FEMA and everything like that. Now, what essentially you have to do is, as an issuer, you just have to go back to the KYC provider, tell him, okay, this is something where we need more details on. The KYC provider will provide you the data of who is this person, and then the law enforcement can do whatever they want to do, right? So that way it unlocks a lot number of potentials. And being working with a lot of fintechs across the globe, and this is something which I've been implementing with a lot of them. So within your fintech app, I think there's a company called Get Cogni. So I was working with them for like 2 months to implement this. And how they did it is, they are a fintech. They are FDIC approved in US and everything. In order for them to go out and issue a Web3 address within itself, we incorporated Polygon ID there. Now, each and everything that is being done there is being done through that identification system. So now let's say there are 200,000 people in that fintech using things, going into Web3 and doing XYZ things. Everyone can be tracked, traced, and that is very powerful. But while they're doing it on chain, because nobody actually got out and recorded their name in a public domain, there's no way for you in the Web3 community to actually prove who is this person, right? So that way people can still remain anonymous. But at the same time, they can do a lot more transactions. So that way we are trying to go out and bring compliance into it, ensure that that is maintained, and go towards it with that adoption. So I think one of the good things that happened after this, and they actually, once they made this whole thing out, they went for a approval and a patent in US. And while 90% of them are getting rejected because there's a crypto element and everything like that, they got it in 1 week. So that is like where I think identity is playing a major role. And I think in India also, a lot of things where a lot of companies, a lot of startups are doing that. So that is where this identity will play a key role in bringing a lot of people on board and telling the regulators that, okay, it's not that if someone has created an ID or a Web3 address, it's only for illicit activities.
Yeah. So I think what Vivek spoke about and what everybody speaking about, regulation is required. So primarily, what is regulation? Regulation is all around your customer experience and how are you taking care of a customer data and how are you taking care of customer grievances and all. While we talk about blockchain, blockchain goes beyond that, right? There are a lot of use cases in every area, financial, healthcare, where we will have to really retransform the current operational model onto the automated blockchain model. What regulation is required is all about new business cases, which we have not seen earlier in the internet era, which are going to be prominent use cases. Tokenization, as you said. So why I want to touch upon this angle? Well, because today, earlier we used to have a one silo service coming from one hospital or one bank. Now that has moved totally on marketplace like Paisa Bazaar, Bank Bazaar, and so on. And what study says, and even our friend can agree, the study was given by World Economic Forum itself. More than 400 entities will come on marketplaces where same individual will want those services everywhere. That is where digital identity comes into picture, where these guys can really avail those services everywhere. And what you earn as a token, right, or what you as a value in one marketplace has to be reutilized somewhere else. These are the futuristic model. What we have seen yesterday as of economics, starting from 2000 till now, world is going to change. World will be around your devices, world be around everywhere. You want to keep your presence for the limited time as far as your consent is required. So that is a more power of a blockchain, creating that trust with the right tokenization model and identity model. And these regulators are not ready for that. While regulators are ready for transformation model of a KYC or some of them, that is the study or that is the thing they are cautiously doing. Some regulators worldwide have done it very well, like Switzerland, some are, and in India, they are tried doing it, right? For example, recently SEBI announced some guideline, but eventually a lot of efforts are going. Look at IFSCA, which is a regulator giving a lot of warm welcome to all those tokenization companies outside of India and in India also. And similarly, regulator like RBI are looking at how it can be really be useful. So once again, regulation is more required for that angle. And while that push like G20, where we have taken a lead as an engine, certainly let us look at how we will build that that ownership or authorization for this year. And certainly we should see as a Web3 how we can become a powerhouse, or certainly we can become powerhouse where polygons and many other companies should support. Yeah. Thanks, Prasanna. So we're running out of time. So I'll put the last question to Arushi and get her views as a closing remark. So what do you think from your vantage point? What is the role of India in enabling this regulatory framework? And what is the possibility of a comprehensive global framework coming by September when G20 presidency ends? Your views on that?
Thank you, Sharath. Very interesting question. I think India generally is a major player for any sector, not just this sector. So it has a huge role. It has a huge stake to actually bring about a comprehensive, clear, certain regulatory framework. We already have massive talent, right? That accounts for something. In terms of how things are going for G20, I think they're going pretty well. There's already a mandate to work on it along with some of these international organizations like FSP and IMF and World Bank. They're already pretty much working on the process of it. We've already had some of those principles having been laid out by FSP in previous publications. So the hope is we will have at least a text to start with, but how that consensus gets built is another whole story. But there's a lot of effort behind it, I would say. So fingers crossed on where we see this evolving. But then just the global framework itself is usually not enough, right? We need to see how it gets implemented in each jurisdiction. So
yeah. Thanks, Arushi. And I think multilateralism and cooperation is the key here. So with this, we are coming in to an end of today's session. Let me thank Vivek Gupta and Prasanna, Vivek Madani and Ashwar for sharing their views, and all the audience for listening to us. Thank you.
Thanks, Sharath, for having us.
anyone is open to brainstorming off stage as well. I think Vivek would like to brainstorm with several people, which he mentioned. So you can always continue the discussions as well. And here's to India being a powerhouse in Web3. Thank you for shedding light on that India opportunity. Our next panel discussion is universal access to financial services. This session will be moderated by Prithvish Sinha, Associate Director, Payments Transformation, PwC India. Our panelists include Shashank Sharma, Director, ScoreMe Solutions, Radhika Binani, CPO, PaisaBazaar.com, Nishant Kumar, Financial Inclusion Lab Lead, MSc Consultant, MSc, Nayan Ambali, SVP, Business Development, M2P FinTech, and Tirunavakarusu Thiru R, COO, Kinara Capital. If I can ask our panelists and moderator to please join us on stage, a very big round of applause for what is sure to be a very interesting discussion. A big round of applause, ladies and gentlemen. We can do better than that, can't we? Come on.
Hi, can you hear me? Hi, good afternoon, everyone. So the topic is universal access to financial services, which essentially means financial inclusion. So financial inclusion, we have seen the history goes like, our next door neighbor, Nobel laureate Mohammad Yunus had pioneered microcredit. Post that, we have the then RBI governor in the year 2005-06 coined the word financial inclusion. And in 2010, in G20, in the agenda, financial inclusion was included. So we have seen in our central government working on various initiatives, right, towards retail consumers, on the MSME side as well. We have seen state governments taking initiatives for financial inclusion. For example, the Odisha government, they started Mission Shakti for women entrepreneurs. We have also seen that, there was a recent publication by Asian Development Bank, which has come up with an index called financial inclusion. And they have made it into 4 dimensions. And one of them, the key dimension is FinTech infrastructure. And coming to FinTech, we have seen a lot of collaboration between banks, NBFCs and FinTechs to share the cost of credit, basically serve the unserved or the unbanked, right? So over to my panelists now. So just to start with, what does financial inclusion mean to you? Shashank.
Thanks, Prasush. Good afternoon, everyone. I think, so from a financial inclusion perspective, I can answer it in 2 parts. One is from a Fin perspective. So from a Fin, it's basically, and from a tech perspective, should be digitizing the last mile. This is, what I believe in that. Yeah.
So hi. So I lead a program called Financial Inclusion Lab, where we have incubated around 40 plus startups in the early stage, which are working exclusively on the inclusion side. And I think one of the critical factor which we still have to surmount is trust. Trust at all the 3 levels on the platform, at the ecosystem level and at the financial products. The gap that we are seeing today, of course, there are a lot of work that needs to be done on the product side, but it's also a factor of the relationship between underserved segments and how they trust the formal financial products at an individual and at a household level.
Yeah. Good afternoon, everyone. I'm Thiru, CEO of Kinara Capital. So to answer your question, financial inclusion, the one word for what comes to mind is progress for me, because when India is trying to become a $5 trillion economy. The only way to achieve this is to empower the citizens, and particularly when I talk about more financial inclusion from the MSME sector, which we are working on, that will help us in reaching the goal. So for me, financial inclusion is progress.
Hi, everyone. For me, financial inclusion is 3 A's: access of affordable products in an access of appropriate products in an affordable manner. So all three are very important. It can't be any product is mass transmitted to different parts of the country.
So financial inclusion is something that's very close to my heart. I mean, I strongly believe that financial inclusion means it is a fundamental right. You have to ask me like in one word, because access to education, access to healthcare, access to justice, right? I mean, it's all possible only like you are financially like empowered, right? So I strongly believe that access to finance is one of the fundamental rights.
So thank you. Yeah. So what we understand from you, so in one word, obviously we'll delve on the topic now. But yeah, financial inclusion is affordability, giving access to every Indian citizen and getting them under the ambit and educating them as well, right? On the importance of, the financial product, how it can help them. So my first question to you, Mr. Thiru, is that, you are working at Kinara Capital, you're working with MSMEs. And in a recent survey conducted by the organization, 55% of the MSMEs said that, they need a line of credit, right? They're a requirement. So what, according to you, is how important are MSMEs to the economy and how it can help boost financial inclusion?
Yeah, thank you, Prakash. Yeah, so we at Kinara Capital focus mostly on supporting the micro entrepreneurs and micro businesses in the larger MSME sector, which is micro, small, medium. We focus mostly on the micro segment. I mean, we adopt a blended fintech kind of a model so that we adopt both feet on the ground and also full utilization of technology for process automation in a very faster way, and also for decision making to remove the people bias or the human bias. So I mean, we are a fintech company, but we have a ground presence so that there are a lot of other non-financial services also is required. See, financial inclusion is not only just giving a loan, but also giving other non-financial services also. Coming to your the first question on we did a survey recently around 3,000 MSMEs. We did a sentiment survey in which I mean, these are all the customers who have already taken a working capital loan or a machinery finance or an asset finance loan. Even though they have a long-term loan and these kind of asset financing loan, almost 1 out of 2, almost 55% of the customers said that they need a line of credit product. See, this is line of credit is nothing but a kind of an overdraft kind of a loan which the bank provides. But from an NBFC, how do we design it? How do we give it to the? I mean, because these customers does not have collateral to give it to any formal financial institution to get these kind of overdraft loan. So the line of credit is very, very important aspect, because they need to make immediate payment to the vendors. They need to make immediate payment to the salaries or the, I mean, there are a lot of small payments. Basically, it's matching the working capital gap. So that was one of the important product. And most of them also kind of said that they need a business credit card, which is now as an NBFC, as per RBI, you can provide business credit card, but there are different process to follow that. But that also we are exploring that. So that's one aspect. But the most, apart from that, the most interesting finding is also people ask for the non-financial services also. Like they want to have supply chain linkages, the buyer-supplier linkages. That is one big ask. And apart from the normal bookkeeping and the financial literacy, all those things, this is one of the biggest ask. And also they are willing to pay for it. in the survey, that is also coming out that they don't want these free services kind of a stuff. They want to pay for it, like creating a website for them, creating a digital marketing for their product, all those things they are interested. So it's really interesting to see how, what we think, what they want and what they actually want, and how do they want to achieve it. That's more from a financial inclusion perspective.
Thank you. Absolutely agree with you. So as you said at the end, that non-financial needs is something also needs to be looked at, because in fact at PwC we have worked on a couple of engagements wherein we have seen that once we solve the non-FS needs, the FS needs automatically gets embedded in the journey. So how do we solve the non-FS needs is something which is a question or a problem statement to us. So the next question to you is, Shashank, is how do you think, at ScoreMe, you're working with a lot of data. So how do you think AI can help understand, the needs of the unserved, the credit unserved population, and how it can boost financial inclusion?
Thank you. I think from a perspective where we analyze a lot of data on a daily basis, and yes, algorithms keep refining them, but we have to look at it from a little historical perspective. I mean, if we go back 10 years, it started with Jan Dhan. I mean, establishing those digital footprints is what laid, for us to have that access to the data. So today, if you talk about just introducing a scheme doesn't suffice that. So, after the Jan Dhan was launched, today we are at a stage where I can say that we are having 81% operational accounts in it. Before this, the accounts were not operational. There was zero balance accounts. Close to 8% are still zero balance accounts today. But still, now what we see is, from where a use case generates for us is, we see that Jan Dhan accounts are getting operational. That's fun. Now, accounts getting operational means transactions getting routed through it, but doesn't mean that these are digital transactions going through it. These can be cash transactions. Then came UPI. UPI came with its own advantage, but yes, internet was a major blocker there. With BI 123 being recently announced for feature phones, that it's a voice-enabled UPI transaction which you can do. That, I think, will now set up a next layer of footprints for these unserved customers, where we'll have digital transactions getting routed through the accounts. And transactions, subject UPIs has increased a lot. We were from 2,000 crore transactions 5 years back. We touched 9,000 crores last year in terms of number of transactions which are there. From perspective, once this comes enabled, again, this forms a the digital footprint getting. Now, once we have an operational, cash flow based algorithm to analyze these account transactions, I think that's the most, what I can say, best use case which can be used as an AI. That is the role of AI starts in. Now, from this point onward, and you start picking up trend analysis, help the unserved customers getting that layer of eligibility policy. Doesn't only stop till the point that AI helps you to understand it. The major use case which NBFCs have still solved it, payday loan companies have still solved it, public sector banks or private banks have still to see is how a digital business can be derived for these unserved customers. Because having a data pattern part, but you internally having a credit policy which will allow us to serve them digitally is a very crucial on the ground. Because if public sector banks may not have a digital lending policy for a 10,000 rupee loan, and that has to go to it. But on the contrary, government has a PM Swanidhi scheme, where you can get a street food vendor can take a 10,000 rupee tranche from any of the public sector banks. But on an average, PM Swanidhi 10,000 rupee tranche gets disbursed in 45 days, because it first goes to ULB, from there it goes to Udyami Mitra, then it goes to bank. So we recently have now started picking up use cases on easing of digital scorecards for these institutions by giving them more parameters to analyze. Although yes, with the advent of internet getting penetrated to an extent, it helps, but assessing the cash flow is getting relevant. We have already solved use cases on that, where UPI-based transactions can be dwelled upon, assessing the turnover when it comes to a business customer, assessing the credibility when it comes to a retail customer, and just to understand a free flow basis when it comes to an agri customers, because RAM is one segment which is typically forming in the financial inclusion side. So from there, we picked up these use cases. We provided our analysis algorithms that helped them. Then we are now in the process of working on creating digital lending platforms for these type of institutions. Like very recently, we have done a PM Swanidhi's journey, which is a STP journey. So there is no manual intervention. So the target is to basically bring down that 45 days time to probably 1 day's time at the context, and a few minutes going forward, is the target is. But I think the major focus still remains that AI is now helping, because we have been able to set up that footprint. That is one, and more transactions are getting routed through that. And I think with the advent of more, new initiatives coming in for the lower side of the last mile customers, we believe that a lot of data can further be analyzed, correlated to different sources, like we do for slightly higher ups. If we go for MSME customers, where we are able to today see that data between the GST can be correlated to a bank account statements, and a cash flow lending can be achieved. So for these set of customers also, once these data points start becoming more operational in the day-to-day activity, that is where I believe, from a KYC perspective, which remains, the second part, I think the Aadhaar adoption has increased to a great extent now. And from that, where solving a liveliness case, validating a customer sitting in tier 3, tier 4, or maybe a village in the country on a digital platform is now possible. So next layer of liveliness cases to solve is again, becoming very, very operational with the institutions. No, I think so. Picking up these footprints, digital BREs, platforms, liveliness check is where we feel that, combination of this would certainly help the credit to grow in this segment.
Correct. Thank you. So yeah, so data, if you see on the push from the regulator as well, from the government, the bill which is about to be passed, the government has recently asked on the digital data protection privacy bill. The government recently opened it to the public for their viewpoints as well. So there again, the roles are clearly defined, right? On data principle, on data fiduciaries, giving the power to the consumer, how the data is going to be used. We are seeing from the regulator side, while you have UPI is the digital money, we are working on digital currency as well, on offline payments, right? On CBDC being tested right now on offline as an offline use case as well. Yeah. So my next question to you is, Radhika, is that while financial inclusion is generally about giving a bank account, we talk about giving bank account to somebody, we talk about giving credit to a Indian citizen, but there are other financial products as well, right? Like investments, insurance. So how do you at Paisabazaar, being an important stakeholder in this entire ecosystem, financial inclusion, see that what is the role here, and how do you see that? How can you can help boost the financial inclusion piece? Yeah.
I think I'll also stay with credit also, because it's not as if we've sorted the credit inclusion. So I'll stick more on the credit aspect. So I think as a company, we've been around for 8+ years. So there are 3 large things that we've worked on to increase the access. Earlier, I was with Michael and Susan Dell Foundation for 2 years before I came in here. It was almost like, okay, government is doing something or MFIs are doing some of the things. But then you realize in the real world also, access to credit is a big challenge for, like what Thiru spoke about, MSMEs, new to credit customers who are just 23, 24-year-olds who are choosing alternate careers, say housewives. There are many different types of people who are still excluded from the ambit of financial inclusion. So the 3 things which sort of helped us which is moving the needle for us. The first thing is creating credit awareness. When we started the credit marketplace, we started investing in the brand. We started receiving inquiries from almost 1,000 different cities in the country. Then you realize that the rejection rate is around 50-55%. And bulk of the rejection rate is because customer is not aware of their credit score. So the credit score, even being aware of the credit score, the model earlier was you send a DD for 200 rupees, send it to the credit institute, the credit information company. They send back the report. It all used to take a minimum of 4 days to anywhere between 10 days. So that too, being able to for it to be available instantaneously to the customer, available in vernacular languages, because that's also a great inclusion leverage, because it's a country, it's not one country, but 20 or 30 different countries. So making it available in the language of choice for the customer to understand the credit score, and then having the ability for the customer to make actionable insights from that. I think that's the starting point. It's almost like the next step of financial literacy. Financial literacy is what is debit, credit, what is savings, what is interest rate. But then from there on, if you want to move up the channel, to borrow responsibly is very, very important, especially the current scenario. Even RBI is sort of talking about it, because with a lot of credit being easily available, you don't want customers to get into the credit tab. So that is one large area of work that we worked on. Happy to say that we have more than 35 million customers registered on the platform, available in 5-6 different vernacular languages, available instantly, and also available at a regular frequency, so that the customer can track. It's not like your health report. It's like your health report, right? It's not like it's available, okay, my blood pressure is okay now, but it is a continuous monitoring, enabling the customer to continuously monitor. So when he or she is wanting the credit is available to that customer. And not like when I go to credit, oh my God, there's something wrong with my credit score, let me fix it. And then it takes another 6 months for me to be ready for credit. So that's one large stream of work. The second one is digitization, which I think overall as a country, we have progressed immensely, and post-COVID more so in the credit side of work, because insurance was almost very much digital process. You could get a paperless insurance policy issued even before COVID. But during COVID, the credit institutions, we realized that it almost had come to a standstill, and we needed processes which they were there, but somehow it was all not coming together. But then with the government also promoting a lot of eKYC, DKYC, all of that came together. Then of course the presence of the inclusion, because customer is in a very, very far off location and there are no branch, that's not the talk. So I think digitization has helped all of us get the inclusion aspect going. The third thing which I think we are proud of is co-creating products to suit the customer. So when I even talked about what does inclusion mean to me, making appropriate product available. So it's like, for example, there was a lot of work. Why was Jan Dhan very popular? Because it helped that, okay, no minimum balance. It was almost delivered for that set of people who did not have a bank account. Similarly, the micro insurance product, micro pension, micro savings. So all of those things which are relevant to the customer. So we've also worked with banks to sort of, one example which I can talk about, 30% of our customers are credit impaired. So even if a customer has a credit line, their subprime customers have a problem with their credit score. So how can we create products for those customers so that they get into the credit cycle? We have co-created a secured credit card where if there's a small fixed deposit, a customer can get a credit line on that fixed deposit, which sort of gets him into the credit ambit. If he or she can repay well, show repayment capability on that credit card, and then they can get upgraded to a regular unsecured credit line. So working on these 3 or 4 aspects has helped us, the organization, to have a DNA of inclusion, while it's not the regular stream of things when I initially thought of what inclusion means. So I think it's been a great journey.
Yeah. Thank you, Radhika. So I think to add to it, so we have been talking about credit, accounts, other insurance, investment products. So to add to it, looking at financial inclusion, where we have to work at the grassroots level, right? So the financial literacy is very important, right? So we have seen that a lot of campaigns being run at Aadhaar Seva Kendras, right? Local panchayats. And, I was talking about the Mission Shakti program as well. So there, the women entrepreneurs are literally stocking or saving money to run their household. They do not know what to do with that money. So which is, again, the financial literacy is very important to add to, working on various products and looking at the penetration level as well. So my next question to you is, Nishant, right? So you have been working with a lot of startups. Now today, startups have to balance between both. One is that, they have to look at their operational cost, the high cost of, acquisition, the customer acquisition, and also they want to be a part of the financial inclusion, right? So how do they balance both, and how do you think we can help them? We can help the startups here.
So see, under the lab, financial inclusion lab, which is incubated with IIM Ahmedabad CIE, we have roughly 42 fintech startups, early stage, working exclusively with the Bharat segment, what we call as low and moderate income segments. And we have worked with them very, very intensively. So see, in the financial inclusion space, as Prithvish was mentioning, that it has started with the MFI. They did a very fantastic job, and they were able to crack the business model. Okay, you have to form the group. There has to be a certain geography. This is your operating cost. This is the profit margin that you will be able to achieve. Post 2016, when this fintech wave has come because of India's tech and this geo revolution, this is an uncharted territory. Now, what we hear, if we are sitting in a very learned group, but if we go by what we hear in the market, it's a very untapped market. 600 million people are being unserved. That's not the case for a fintech. For a fintech, if you do the slice and dice, he will be working with one segment or two segment at max. He'll be working with one merchant, maybe the Gen Z community, and then within Gen Z also, he has to define if he's working in the underserved segment, whether he has to work with the blue collar workers or he has to work with the gig workers. So if you do a slice of this 600 million, he will be left with only a small pie where he can go and serve them to an extent, right? Now the other question comes, okay, now you have identified your target segment, very good. How you are going to discover them? Tell me, out of this 600 million, despite the Geo and the smartphone, how many fintechs can tell today that they can discover even 10% or 20% of this 600 million underserved segment? It's not there. There are no platforms where these segments are getting aggregated. Now government has invested a lot in the FPOs. SHGs is there, but again, that is mostly women, and their presence, their digital presence is left a lot to be desired, right? And there are social conditions, there are economic conditions. I don't want to get into it. I think we all understand that very well, right? A third factor, where I have started with, is the trust factor. Okay, we at lab, even credit space, I go and interact with many of these customers whom our fintech community is serving. You will not believe, even if the fintech is coming and giving the money, 60% of them refuse if they are coming for the first time, because they are afraid of digital fraud. They are afraid of, they have heard about harassments and all. I'm talking about just credit. Savings and insurance is then again other complexity of the products come into the picture, because in credit you are getting the money. In savings and insurance you have to pay the money and then wish that something useful will happen in the future. So there the trust factor requires 10x than what is perhaps is required in the credit segments, right? The third and the most important factor is this digital trust, which I'm talking of. And what we have done, Prithvish, is when we have seen this trend, what we have done is we have said that, boss, as a fintech, what is your strength? Your strength is that you can play on the technology, you can customize the product, play on that. Okay. Ensure that you are able to target one segment so beautifully that you are doing it much better than any other financial institution available in the market. Go deeper. Now that's again is not easy. Most of the fintech, in my experience, find it very difficult. What Thiru was mentioning, or what Prithvish was mentioning, moving from solving for financial products to non-financial needs, it's not easy for a fintech. It's not in the DNA, and they require resources in order to build solutions around that. I've seen very few fintechs been able to do that. The third and the most important piece for the discoverability factor is you go and do the tie-ups. Tie up with the financial institution, tie up with the non-financial institutions. There is a reason that today gig workers are flooded with the options of credit, because they can be easily aggregated. They are easily aggregated at some level, right? So we need to do a lot. Financial capability can solve a lot of these issues, because customers can then understand the product. They can interact with the digital platforms much better. But the question again becomes, who is going to invest in that? The startup, as a founder, I have very limited resource. I'm not going to solve for these systematic issues, right? So somebody else need to come and do the heavy lifting. I think as an enabler, as an India stack, a lot of this has happened. But if we want to bring the true inclusion, then we will have to also look for solving for these systematic issues in order to have a much deeper inclusion than I think we are just scratching the surface right now.
So, yeah, so the startups cannot work in silos. They cannot do the heavy lifting themselves. So they need to be part of the ecosystem and work with the various players to, towards the financial inclusion agenda. So my next question to you is, and so at M2P, you have done a lot of investments in the financial inclusion space. One of the recent acquisitions was this company, which is in the digital identity space. So how do you think this digital identity space can be leveraged to boost financial inclusion?
Hello. Because of the time availability, I'll try to be like as crisp as possible. If you refer World Bank's 2020 World Bank Financial Inclusion FinTechs report, so one of the main reason for exclusion is the about 1 billion odd people do not have verifiable identity, right? I mean, that is one of the major reason for exclusion, right? In the financial inclusion, the identity solutions are extremely important. A person might have a government issued identity, but like whether it is verifiable, whether it is verifiable at affordable cost, at on time, is the biggest challenge, right? So at M2P, like what we have done is that like as you mentioned about citizen product identity management, right? So we're encapsulated all the possible the government issued like identities. Like, how can you with one channel, right? Like how can you like verify the authenticity of the document, right? And whether it's been issued by the issuing authority, right? And also like whether that particular document belongs to the customer, right? I mean, like, in one case, document could be valid, right? It could be valid, but does it really like belongs to the customer who's applying, right? So this is one of the key problem we're able to solve at a scale, and I strongly believe that having a right identity solution to validate the authenticity of the customer's government issued ID is one of the key enabler for financial inclusion.
Thank you, Nayan. So yeah, in the interest of time, just to wrap up, so we have seen that how in financial inclusion it is important that the digital identity space is important, how data can be leveraged to increase the penetration of financial products in a country, importance of credit, importance of non-credit instruments as well, MSME being a key player in our Indian economy, how their working capital gap needs to be met, and of course, how startups need to collaborate with the traditional lenders for like banks and NBFCs and work towards the agenda, right? And we have seen that how internet penetration has increased, which is again a key, while we are working on various offline use cases. But we have recently, I think just 2 days back, Airtel has done a collaboration with Google, right? They're working on laser technology, right? We have been doing those underground optical fibers for internet, but they're working on that. So we hope that we'll achieve that in the near future. Yeah, thank you very much. Thank you to my panelists as well.
Financial inclusion is progress. Financial inclusion is a fundamental right. Thank you so much for that insightful and inclusive discussion as well. Moving on now to our next panel discussion, unlocking the potential of embedded insurance in India, which will be moderated by Surya Saha, author, InsurTech Disrupted, and founder, InsurTech Story podcast. Our panelists include Karan Thakuria, Head Partnerships Discovery, Prasad Krishnamurthy, VP Products Perfios, Hemant Tathod, COO Bima Plan, and Ankur Agarwal, Strategy FiMoney. Could I invite all our panelists and our moderator on stage, please? A big round of applause for our previous panel and our upcoming panel as well.
Okay, very good afternoon to everyone. I think we have discussed a lot about inclusion, with respect to banking, what technology like blockchain can do. And it's now for insurance to take the role, and we'll see how embedded can actually build the future of insurance in India. So India as a country is definitely, an underinsured place. We have a general insurance penetration of less than 1%, and life
a little over 3%. And where the protection gap, or rather the coverage gap in India exists, and how embedded can be a road to actually deliver the solutions over there. So with that in mind, I would really like to discuss on how the potential of embedded insurance can be unlocked in a country like India. And with that, my first question to Prasad is, how can digital platform and fintech companies leverage embedded insurance to enhance customer experience? I believe it's one of the critical aspects today, and definitely how it can also drive the financial inclusions in a country like India.
Thank you. Even in the previous panel, we heard a lot about the primary target for embedded finance being access to credit, right? There was a lot of discussion about access to credit. Now, most of the ecosystems, the marketplaces, or okay. So most of the ecosystems and marketplaces that are available today are mainly providing an access to credit as part of embedded finance. Now, while embedded insurance has penetrated mostly for small ticket items, okay, so where you can have an insurance while booking, say, Ola cab, right? So those kind of small ticket insurance has come in. It has not penetrated to a larger ticket where there is a point of sale need for an insurance. So the digital platforms, so even where we work with a large set of marketplaces, aggregators, ecosystems, even ONDC-based ecosystem, which bring together a lot of different parties, the digital systems enable the financial institutions to provide not just credit, but also insurance. So when we talk about credit, there is an immediate need for trade credit insurance. And today, trade credit is mostly an offline process. It's done through banks and the insurers at an offline process. And at that point, the insurers rarely have any access to details about the actual customer, right? So this problem that insurers face while selling this as part of an ecosystem or through a direct digital sales is lack of information about the customer, right? So this results in two problems. So one is that most insurance customers are single product customers. So almost 90 or more than that, 95 or more customers of insurance companies have only one product from them. And this is because the insurers rarely have any information or a customer profile where they can keep them engaged over a longer period to sell appropriate insurance. What the digital ecosystem with respect to marketplaces or aggregators provide is a better customer profile, number one, right? So the insurers have a larger amount of data, larger amount of information about the financial profile, the identity, the employment, if it is an employed, if it's a salaried segment. These details help them provide a better insurance product directly at the point of need rather than later. This also helps them continue the engagement with the customer over a longer period. With the availability of these open APIs, like we have certain open APIs which have come into this segment, helping the embedded finance, right? So you have ONDC and OCEN, which has enabled open access for credit. Now, while individual tech companies, including us, are working on an open layer where not just credit, but also insurance comes as part of the open API. I feel going forward, this open API, along with the availability of the data, is what is going to drive insurance in the embedded platforms. Thank you.
Absolutely. No, you mentioned about appropriate insurance, right? So the point of sale, what the customer is actually buying, what product from the third party offering, and what type of insurance is actually embedded or attached to the product is very much important for the customer's accessibility, right? So moving on to the next question for Hemant. What are the key challenges and opportunities in scaling embedded insurance within India's digital economy you see, and how can stakeholders collaborate to overcome them?
Okay. So I think there are three parts to this question. One is the challenges. The second is the opportunity part, and the third is the collaboration, right? I mean, I don't want to be very, very theoretical, and want to take one case study of one of our client. And this client is called Samunnati, and they are a unicorn now, and they are into agriculture sector. So they are doing backward linkages, working with the farmer producer organizations. So while implementing embedded insurance, I mean, the key challenges which we faced, right? Obviously, everybody today spoke about customer awareness and trust, right? So that's the big challenge. Customer says, okay, against what I pay the premium, in lieu of that, what am I getting? Because in case of term insurance, aap kaise samjhaoge? Because the premium you are going to get is after your death, right? So that is one. Second thing is, in case of hospital insurance, the thing is like, I am not ever going to get a dreaded disease, or I'm not ever going to get hospitalized, or a very over optimism kind of feeling. I mean, while I talk to these customers, and I'm talking about this underserved segment, which we spoke in the earlier segment as well, the 400 million kind of segment, which is 30% of the population. There is a feeling like Apunish Bhagwan hai kind of feeling is there, right? I mean, nothing is going to happen to me, so why should I buy a insurance? So that's the customer awareness part of it. The trust part of it is, okay, I buy the premium, and then will I get, what will I get? I mean, will my nominee get the premium, or the sum assured out of it? So there is a trust factor element there. So that's the first point, the customer awareness and trust, which everybody spoke about. Second thing is about the integration part of it, the technology integration, because when we are talking about embedded insurance, we, Bima Plan as a technology service provider, want to integrate with the platform providers. So let's say if I have to talk about FI in that case, or any fintech company for that matter, the challenge in front of the product manager is that in a fintech company, should I be integrating the APIs of my core banking solutions first? That is what is core to me, right? In terms of feature functionalities to be added, or should I take insurance, which is an auxiliary ancillary kind of product? So product roadmap mein, where will it come up in terms of priority? So that's the biggest, that is another big challenge which we have seen in terms of embedded insurance. The third part obviously is the data protection and privacy, because when we say embedded insurance, we are talking about data being flowed, customer data being flowing between the platform providers and the insurer, right? So the data framework, governance, the data protection regulations, all has to be complied with. So these are the quick three challenges is what I see. In terms of opportunities, obviously the increased reach to the customers. We have already seen solid use cases which are very successful. Something like accident insurance provided along with on the IRCTC website, right? That's a very great use case, scaled up use case. The second use case is Make My Trip providing travel insurance, or ride sharing apps like Ola providing trip insurance. So these are the so basically the benefit of embedded is it provides you the great reach, right? Which otherwise was not possible. The second is maybe the customer experience, which we provide in terms of instant policy issuances, digital claim processing. So, and maybe the understanding the customer preferences better, so that products can be curated and designed according to the customer segment. So that's the second opportunity which I see. Third is the product innovation. And I was talking about the Samunnati kind of product, wherein we are providing insurance product to the farmers, which are curated for them, and they come at a cost less than 100 rupees kind of premium for a year. And the products are curated like vector-borne diseases, snake bite kind of things, or electric shock kind of things, which are very, very relevant and contextual to these farmers, right? So those kinds of products are co-created along with the client and along with the insurers. These are not generally would be available off the shelf. So I think these are the opportunities, and this is how maybe the stakeholders can collaborate with each other. So kind of I'm joining both the answers there, and yeah, I mean, that's my take on it.
So, Hemant, so you mentioned a couple of interesting points there. So in a country like India, when I'm buying a product or a travel ticket or make my trip, for example, so I would try to understand how, when I'm buying the product, how can I get an insurance on that if I'm really aware of that. So in such a situation or in such an ecosystem, I mean, all three of you also can jump in. Who do you think drives it? Is it the consumer driving it, or the insurer who is offering the policies driving this embedded insurance, this trend?
So let me go first here. So, okay. See, if you look at, I mean, kind of visualize a pyramid, right? Tip of pyramid is a white collar or a business people who are well aware, educated, right? I mean, there you don't have a challenge to educate because people are going to make my trip. They know what it is and they are going to buy it. The bottom of pyramid, which is the below poverty line we are talking about, there are a lot of government schemes which are there, right? Pradhan Mantri Jan Arogya Yojana, which is covered under universal health schemes, right? So their distribution is already there. See, the challenge again is towards this, what we call it as missing middle, the 400 million population we are talking about. That is where the awareness challenge is there. And in case of Samunnati, if I have to say again, in this case study, what we did was we identified the, the entrepreneur kind of farmers, the bigger farmers, the FPO directors. We leveraged them and did something like train the trainer kind of thing, making them aware why it is required. And the truth is that insurance is a push product, right? So what is important here is to make them educate. See, in case this happens, this is what the benefit you get. And we drove it via the FPOs and obviously using the business teams of Samunnati. So that is how we were able to create awareness, and then creating videos which were multilingual in nature. These FPOs are beautifully using, I mean, we in urban India think that people don't use smartphones there, but there are these 6,000-7,000 rupees smartphones available. These FPOs are communicating via WhatsApp a lot of these agriculture related inputs to these farmers. So we use those channels to create awareness of what is this product is all about, why it is required, what are the benefits, so on. That's my take.
I could just add to that. So Hemant spoke about the demand side of things when you talk about awareness and building awareness for the people for whom the insurance is created. But I mean, the way I would like to look at it is embedded insurance is essentially extremely contextual. And I think everybody spoke about that. People at large understand insurance to be life insurance, health insurance, motor insurance, maybe asset insurance. So the onus of creation lies on the supply side, lies on the insurer to create the right product. Let people know that, okay, these are also risks that you can insure. And once those products are in place, after that, I think that is where insurance becomes from push to pull. So equal ownership for driving embedded insurance also relies with product creation and creating contextuality to the journey where it is being offered, to the point of sale where it is being offered.
Yeah, absolutely. One of the major factor there would be pricing element in embedded insurance, because to make it more accessible and inclusive for Indian consumer in particular. One example comes in my mind is how Ant Financial has offered an embedded product in Alibaba's marketplace just for the SME sector. So it's not just the B2C, they're talking about the B2B element as well, to provide risk coverages worth just 50 cents for any sort of a business interruption risk. So that, and how they have actually calculated the price to actually reach the masses who are actually representing the middle class or the small and medium enterprises. So
see, I mean, just to add, I mean, here at India, right, we have seen that 35 paisa you get the insurance in IRCTC, right? I mean, that's the reach we are talking about.
Yeah, absolutely. I mean, that's something that we have to work on.
Similarly, just a short addition, because you touched upon the SME part, right? So that is the major chunk of the underinsured segment, which is commercial insurance. In India, commercial insurance, in any general insurance company, mostly one of the smallest segments, right? So, which is hugely underinsuring the amount of that are there. The platforms that we have today, the networking platforms, even ONDC based, which has become an open network to enable these MSMEs to come into that, becomes a very good place as you mentioned, like products specific for these customers to be able to provide. And what helps in the right pricing is the availability of information, right? So you get better information about the entity, you're able to underwrite better and provide a cheaper premium to these insurers.
Yeah, absolutely. No, in India, of course, it's a developing market, and even in developed markets like the United States, 80% of the SMEs are not insured at all. So the opportunity is not just localized; the opportunity lies globally for the product it embedded. So moving on to Ankur, in the era of data-driven insights and personalized experience, we have also heard about this aspect in the previous panels. How can embedded insurance leverage digital technologies to create customized and tailored products and solutions for diverse customer segments in a country like India?
I think some of this has already been touched by the panel. So for example, the way I would like to approach this question is in terms of breaking down what are the current problems that our customers face today in insurance, right? One is the right product for the right customer. In a lot of places that is not available and the relevance for the customer. So a lot of mis-selling happens. Technology can help us arrest that. Second is making the comprehension of the policy better for the customer. A lot of people don't want to go in through the documents, understand what is included, excluded, etc. All of that. Conversational AI can help over there. The third problem is basically increasing the perceived value of the product. So for example, when you're pitching it to a customer, a lot of people feel it's protection. I'm not going to gain something from it. And there's a huge drop off. That to some extent can also be prevented by technology. And the final thing is improving the claims process, right? Which is the final nail in the coffin to actually seal in the customer, because you give a great claims experience, you've won the customer for life. So I'd like to talk about the first thing, which is, the right product for the right customer, and would actually point out to what Prasad earlier mentioned with the availability of these data ecosystems like account aggregator or ONDC for that matter. It opens up like a plethora of information. I'll take a use case that, when we are looking at insurance, we actually have account aggregator data wherein you can actually look at the kind of spends that the customer has done, because you can track their spending. You can also understand what ticket size the customer is spending on and the kind of categories the customer is spending on. So for example, if somebody is doing a lot of pharma transactions and you are able to map that with a certain level of accuracy based on your ML models, you can actually figure out whether health is the right, offering for this kind of a customer or not. The second thing is you can actually whitelist these products for the right customers. So for example, in advance what customer qualifies for a certain product based on what is written in the policy document. For example, income protection, I know that's a plan that can only be offered to salaried users. So I can only whitelist the product for them versus, approaching the whole universe, just to make it more relevant. And I think the third point that I'd like to talk about in this one is the relevancy or innovation, which Karan pointed out to. Basically, with the technology, insurtechs have become more innovative because they can also take those bets to underwrite newer products. The cancellation for any reason on Make My Trip is a beautiful example. Income protection, again, is a very good example in the current job loss market. Right? All of this is possible because people are betting on the fact that, hey, you'll have data in the future and you can, underwrite things much better to be able to give it to the customer. The other thing is comprehension, right? Comprehension, basically conversational AI, generative AI. With the question and answer format, you can actually understand what works better versus not in the policy. Policy GPT is a great example. Plum is doing that. And it's super simple for a business to inculcate something like this, wherein you make the conversations more relevant for the customer and engage them more. So one is you've got a qualified lead, then you engage them more via conversational AI engine. And the way to do that is, for example, custom GPT. It's a B2B software which, customizes chat GPT for you and builds the software for you on top of that to be able to offer a conversational AI engine. The other thing, which is the key point, like now you have a qualified lead, you've already engaged the customer via conversation. You also want to communicate the right value proposition to the customer.
So when you talk about value proposition, it's not just the point of sale, but also how you communicate with the customer during their journey on an ongoing basis. And here there are three things, right? Writing the right price, the underwriting, personalized underwriting, which we already spoke about. The second thing is preventive, going preventive, wherein you actually preempt that there is a probability of claim and you alert the customer in advance. And third is utilization of the policy better. In the interest of time, I'll just take one example from each. So personalized underwriting, the reason it's possible is because one, you have so many data sources, then you can train your ML engines better, get an accuracy. Once you do all of this, you're able to create risk cohorts of customers. You have a risk cohort, you're not only able to map which new customer will fit into this risk cohort, you're also able to map what is the price sensitivity for this customer based on the ticket size, based on the kind of transactions that they've done. So it's very priced to a great extent, to a very granular level for a customer. That's a value add. And how do you go preventive? Preventive is when, so for example, Healthify Me, ecosystems like Healthify Me, they have a lot of information about the customer's health data. They know, what kind of health habits the customer has. They can actually sell health insurance. And at the same time, if there's a potential risk of a lifestyle disease, let's say I'm eating food outside, not eating the right calories, or, not working out enough, you can come in advance and tell me that, hey, there's a potential risk, you might want to look at that. That creates a great customer experience because the customer feels that, hey, they are connected to me. And finally, the third thing in the value proposition is utilizing the policy more, wherein, let's say, again, going back to the account aggregator example, if I know somebody is spending a lot on, let's say, Apollo Pharmacy, I can go and, in advance and tell them that, hey, you have this OPD policy already active. Why don't you go ahead and, claim this? And I can support you further with the claims journey. So that helps the customer understand that, hey, the care, the provider is concerned about me. They're not just looking at the point of sale today. They're also looking at my journey in other levels as well, right? And finally, very briefly, we'll touch upon the claims part. Ease of raising claims has become super simple. The OCR technology that has gone from rule-based to deep learning models, wherein, you can actually analyze pictures better and have customers just click pictures and upload onto your platform and you do the whole processing for them. Second, again, conversational AI. You answer their question on the go. And third, ML engine actually tells you what is the probability that the claim will be processed. So right at the point of filing the claim, the customer has knowledge on, what is the life of this claim, how is it going to look like? And fraud detection becomes much easier, right? Because again, when you're looking at fraud detection, you can look at one-off cases much better with AI by feeding that synthetic data into the system. Whereas it becomes much difficult when you have humans involved because they have to go through tons of data. There's risk of manual error, wherein when you replace it by a machine, you can actually fill in the right data. You can actually feed in the right data and get the right sort of output. So I think that's how all of these things will play a key role in engaging the whole, the customer in the whole ecosystem. That's where the whole tech lies. But there's just one caveat that I want to point out. All of this looks great, technology is great, AI is great. But at the end of the day, insurance is an industry wherein you look at 100% results. 90% accuracy doesn't work. So it has to be initially a combination of obviously human plus AI. As we sort of go ahead in this ecosystem, there are examples wherein companies have actually slowed down their AI strategy because they want to automate the basic use cases first and then graduate to more complex use cases. So that's something that one needs to be really aware of when they think about this ecosystem and entering this. And I think the final point that I'd like to make is in the dream that, IRD has pointed out that you want to make insurance for all by 2047, essentially it has to be a mix of both these things, right? I think tier 1 metro customers, great, AI works great, but eventually what Hemant pointed out, for the customers in the hinterlands, you obviously need to have a more human-driven approach because they are not yet that adopted to technology, and that will come with time.
Yeah, absolutely. I mean, this is certainly going to arm the movement, what we're trying to do through embedded, solutions and products. Just quickly moving on to Khan, how can collaboration between traditional insurers and digital platforms be fostered to drive the adoption of embedded insurance in India? And what are the key considerations in forming such successful partnerships? What's your views on it?
So when it comes to embedded, this is one place where collaboration between the insurer and the distributor, the digital platform, I think is the most important. You can have any other go-to-market by one of the two parties, but it is where both of them need to work together. And for any collaboration to sort of work really well for the entire ecosystem is for each player to understand the context of the other. So insurers need to understand the fact that for a digital platform, the user journey is extremely important. They need to understand the customer, not just focus on the product that they're offering. The platform needs to appreciate the complexity of the insurance product being offered, needs to appreciate that the fact it's a regulated entity and work within that framework. So as long as there is enough appreciation of each other's context, I think that lays the foundation of a good partnership between an insurer and a digital platform. The second point of aspect of having a successful partnership especially in the embedded space, I think is technology. Because embedded is 100% technology driven, you can't really have embedded insurance without an enabling technology backing it up. To make embedded successful, and I think this has been repeated multiple times, that you need to offer the right contextual product at the right point of sale. Are you able to do that? You need to ensure that the way you offer the product is extremely frictionless, and which is true for any other digital product, not just insurance, but any digital product needs to be frictionless for the customer to adopt it. So to make embedded insurance scalable, it has to be contextual, it has to be frictionless. Is there technology available to do that? Can adequate data exchange happen in real time that enables the user to have a fantastic experience? If I were to sort of break that down, when you talk about contextuality, it is not just contextuality to the point of sale, it is also contextuality to the customer itself. So can technology identify the right contextual product for the right customer and offer a personalized experience to each customer on the journey? That's one way technology can help, right? On the other hand, since embedded is essentially a part of another journey that the customer is doing on a digital platform. For example, they're taking a loan or they're booking a flight ticket. At that point, not every insurance could possibly be offered in a manner where data is available. So just to give you an example, if you were to look at embedding a health cover in any journey, now the data available with any digital platform may not be enough. Either you take the easy way out, saying that, okay, instead of a health cover, I'll embed a personal accident cover, or you use technology to ensure that you create a journey where the required data points can be collected. So keeping context and frictionless experience centered, and by understanding, I think, each other's perspective of importance between the insurance and digital platform, that can really help grow embedded insurance from where it is today to the next level. One more point actually I'd like to touch upon is what basically Prasad mentioned about using data better. So digital platforms have a ton of data. A lot of external data can be used, yes, but the digital platforms today know a lot about the customer. Can that data be used to underwrite insurance? Today, embedded insurance is largely pre-underwritten products being offered at the point of sale. Can we move away from that? Can we look at underwriting in real time? Can we enable exchange of information in a manner that the pricing and the coverages are personalized to the customer? As long as as long as the right product is being offered in the right way, I don't see any reason why embedded should not achieve the potential that we all hope it will achieve in the next few years. That's my take on it.
Yeah, absolutely. And you mentioned a very key point there, that one end of the spectrum is the frictionless, efforts that you put in the solution. Another side is the customer experience. So yeah, so I think embedded insurance is going to be the future, and how it actually drives the journey towards getting better penetration for India is going to be interesting. So with that, we come to the conclusion of this panel. Anything you have, to connect with this gentleman, we can do it at the end of the event. Thank you very much for your time. Enjoy the rest of the afternoon.
Thank you so very much to all our panelists. We've had certainly a series of thought-provoking discussions today and enthralling sessions as well. And I think it's time that we look back again as to what all has gone into making this event the success that it has been today. Could I request the BW team to show us today's event audio-visual? And I think it's also a great opportunity to take time to thank our partners for the day as well. Festival of FinTech 3rd edition is powered by Bharat Pay, Knowledge Partner Resurgent India, Associate Partners Discovery and Slack, supporting partners ScoreMe, event partner The Thick Shake Factory, Joy Travels Private Limited, Beanly Coffee, JustBark.ai, and Fandrum. Our media partners, Realty Plus, Exchange for Media, IWM Buzz, Impact, and Pitch. Can I request for the partner audio visual, please?
दुनिया को भीड़ में जो नहीं दिखते वो चेहरे हमें नजर आते हैं। कल को रोशन करने वाली चिंगारी पत्थर में छिपे हीरे नजर आते हैं। हमें अन्ना कॉफी वाले के हुनर में अन्ना कॉफी हाउस नजर आता है। किराने वाले गुप्ता जी के अपनेपन में हमें गुप्ता सुपरमार्केट नजर आता है। और सोनिया ब्यूटी पार्लर की कस्टमर सर्विस में सोनिया सैलून दिखता है। 6 बाय 6 की दुकान में सलीम के सपनों का साइज नजर आता है। सोनू ऑटो वर्ल्ड में सोनू की बड़ी सोच दिखती है। दुनिया को जो छोटी छोटी दुकानें दिखती हैं, हमें उनमें छिपे बड़े बड़े अरमान दिखते हैं, क्योंकि हमें है यकीन इनके हुनर पे, इनके हौसलों पे, इनके जुनून पे और इनकी न्यू एज सोच पे। हमें है यकीन इन सब पे। है यकीन भारत पे।
Leading investment banking firm, we provide bespoke funding solutions. Our service offerings: debt syndication, private equity, valuation services, financial advisory services, credit rating advisory, TEF study and DPR report, insolvency services, training. Debt syndication, a loan offered by a group of lenders who work together to provide credit to a large borrowers. Private equity, an alternative investment class and consists of capital that is not listed on a public exchange. Valuation services, valuations of business, tangible assets, intellectual property, intangible assets, stock and securities, ESOP and private debt instruments. Financial advisory services, primarily focused on providing advisory services in the areas of corporate finance, capital structuring, transaction advisory, and M&A. Credit rating advisory. Our team's experience can bring in immense value by getting the desired rating upgrades or saving them from downgrades by fine-tuning the strategy. TEF study and DPR report. Evaluating the technological feasibility and economic viability of project to finding out the degree of risk involved. Insolvency services. Assess the financial position of the firm, partnership, LLPs and individuals in several instances and try to save their business. Training. We are a pool of senior bankers, academicians and professors specialized in all kinds of soft skill training. We are specialized in solving your all types of financial needs. Leading fintech company in India. Scomme Solutions, an innovative analytics software company in the fintech space. Our service offerings. Bank statement analyzer. Analyze prospective borrowers' bank statements to assess the creditworthiness and eligibility for loan. Financial statement analyzer. 360-degree analysis of financial statement of borrowers. IDR analyzer gives you the visibility of your borrower's financial health. GSTR analyzer. Analysis the raw data of GST server and gives insights on the various state and purchase transactions to the lender. Digital lending software. Platform originate loans and is powered by Scomme APIs for determining loan eligibility using analysis across financial statements. Credit monitoring. Highly flexible and scalable software enabling the lender to analyze large volumes of data as per requirements.
A very warm round of applause for all our partners who've made today possible. Can I get you to join me in a warm round of applause, please? I'm feeling very lonely up here. All right, thank you so much. And after several engaging panel discussions, it is now time for a keynote address on trends in fintech. It is my pleasure to call on Jyoti Prakash Gadia, MD Resurgent India, to address us all. Sir, the stage is yours. A big round of applause.
Good afternoon, everybody. What can a finance person tell you about trends in fintech? It is like Lata Mangeshkar ko koi gana sikhane ke liye koi bulaya ja raha hai. It is something like that. But I will just try to analyze the trends in the fintech from the other sides of the perspective, that how the other world views the fintech, how the other things are viewing, how the banks are, jo outside the boundary line ke bahar jo log baithe hain, how they are viewing the things together. So let us go and see. We can analyze the things from that perspective. Just to give you the background, since I run a financial consulting firm called Resurgent India Limited, where we act as an intermediary between the clients who is looking for funding and the banks and institutions which are giving them the funding. So based on those experience for another 10-12 years or so, we decided why can't we enter into the fintech, because there were a lot of anomalies, a lot of other things that were coming it out. So one important thing which was coming out of this entire experience of working in Resurgent India was this: how can this, everybody is talking about this data is money. And since we are into this banking world, we understand that banks earn money in two ways. One is that they earn money by giving interest income. Another is the non-interest income, which is by charging some sort of commission or something like that. First trend in the fintech, which I think is that the time is not far away when we all will be chased for giving a loan. When banks will be offering you कि मैं आपको इतना पैसा दे रहा हूँ, आप हमसे लोन ले लीजिए, instead of asking you कि sir आप मेरे से लोन लीजिए, and I will charge you the least rate of interest. The time is not far away when definitely banks will chase you all कि sir you please take loan from me and I will give you this much amount of interest or this much amount of incentive to take the loan from me. Understand, sir, India's largest bank, they might be carrying around 5 crores of account data with him. He exactly knows that in this PIN code, so many customers, they are eating Chinese, they are going to the Chinese restaurant every month, once in a month. Every bank or that bank also knows important thing, how much money you have spent in a mutual fund, what sort of status you are, whether you own a car, whether you own a residential housing or not. Plus, he also knows that how much of shopping that you have done on one of the e-commerce website also. So he has got that data with him. And thereafter, he will go and encash that data. He will go and tell that any of the new Chinese restaurant coming up in that area, he will say, hey, in case if you want that 50,000 customers to be traveled, we want that 50,000 customers to be diverted to your restaurant in first month itself. Give me some sort of an incentive, like he might take 50% discount. He will take 10% with himself and 40% he will pass on to his own customers. That's how the entire banking world or this entire world is going to make money with. Whether it is the interest income or not the interest income, that would be a passage. That is going the time that is going to pass by. Few months before, when I was in California attending one of the event, the most interesting thing as the MC, they definitely praise whoever the speaker is. So there was a Levi's CEO was supposed to come and speak on that event. So Levi's CFO came. So as the MC world is, they praised him for 2-3 minutes. Levi's, which is the headquarters there in California, they praised him for 2-3 minutes. Levi's CFO came in the dais and he told that I am an IT company which manufactures jeans. So this is how he introduced himself, and he told that why he's saying so. Well, sir, we are developing an app like in which, sir, there will be all like 10 to 5. You have to attend an office, so you have to be at a very, very decent office attire. So in that app, you can definitely decide which color code that you want of that dress app and everything. As you change the color in that app, your dress code color will be changed. At 6 o'clock, you have to meet your girlfriend or anybody that you want to meet, and you want to have some funky outfit there. So when you have that funky outfit, you will just change the design and the color into that app. And definitely you are fit and ready to meet your girlfriend there. And in the night, you want to go back home. So you don't want to see as this type of a brat boy in front of your parents. So you want to behave as a decent guy. So definitely you want a change in the color in your dressing. So that changes can also come in there. Again, it doesn't stop there. He also told that we are also trying and experimenting something like that. You want to stay in a 24-degree temperature. You just choose that temperature into that apparel app and into that app. That apparel itself will try and make you feel into that temperature itself. So this is how that everything will be an IT. What business you do over and above that, that would be there. So what the trend that I can foresee is that whatever is e-commerce, commerce would be there. Thereafter, it will be E. Anything, any commercial activity, whatever that you are doing, that would be there. Can I have that PPT run? So I have just highlighted 4 or 5 trend analysis, whatever that I foresee that some highlights, like Times of India highlights, which is there. Can I have my PPT running, please? Only the headline. Again, given this amount of thing, any bank, any email ID that you will feel that any of the banks, they have reduced the home loan by 25 basis point. There will be carpet bombing of 5 lakh emails the next day that home loan has been reduced. Bhai, you know exactly whether I have recently purchased a house. I have recently owned a home loan there. So customization is definitely the king. In our MBA days, we used to learn everything, ki, sir, economies of scale. We would have learned everything, ki, sir, jitna bada hote jayenge, we have got economies of scale. Whether that economies of scale theory is still valid or not in this customization era, that's where we need to think and thought about it, that how we can have customization, including in this economies of scale. Insurance, like we are working in a banking sector, there are a lot many bankers I could also see here. In all the rating agencies, there is a risk premium which is associated, like if it is a A-rated account, if it is a BBB rated account, if it is a AAA rated account, it is MCLR plus spread which is getting decided. That risk premium. Again, that risk premium is all the clients which are falling under that A category client, everybody will have that spread which is there. Now, if you talk in that insurance premium, in this insurance premium, they will talk to you about your age, about your gender, about what job profile you are in, what sort of work you are doing. And it doesn't even stop there. I was surprised to know that color of the red color car insurance premium is 3 to 5% costlier than a white color car, because red color car tend to have far more accidental, it is far more accidental prone, red color car, because people might look at you and they might bang on the car. So there is a high probability of a red color car having more crashes. So that is how the insurance and the data analytics, it means they will ask you 10, 15 questions, or they will ask you numerous questions, and then they will specify and tell you what sort of premium you need to pay. So no average. Earlier, what you used to do, this much of loss making which is there, all these statistics, all this analysis, it is all based on average. It is all based on median. It is all based on any sort of average setting mechanisms. Whether this averagization, average world, whether it will still remain or not, that's where the question is. Whether it is individual specific at this point of time, again, that individual might change, that balance sheet might change every month. So my premium, my rate of interest will go on changing month on month, or it might change at every point of time. So insurance premium, ROI calculation, everything, it would be customized. It will not be it would not be taken as an average that you are in that age bracket, you are in that rating agency, you are into that rate group. That won't be there. So the work that is going to be done, that how you can do in terms of individualization with a mass approach. So times is not far away when definitely you will have a chassis of Maruti, you will have the body of Honda City, and you might choose that seat of any other car, which is whatever is there. So you might pick and choose the car design, and the car will be delivered to you next day. So that type of thing which is going to come up. This is about KYC, sir. KYC, what we all understand this KYC. I think so it is called kill your customers, sir. Because why the kill of customers, sir? They will ask you so many questions before even entering, and not even entering. Even when you transact the account with your own money also, they will ask you so many questions at any point of time that it is going to be called as kill your customers, sir. So KYC is not limited to your ITR, to your Aadhaar, to your all the KYCs that we all understand. KYC also understand, sir, whether what age profile I am, what income group I am, whether I'm in that income tax category, how much of mutual fund investment I have, whether I'm married or not, whether I require a car loan or not, whether I own a car or not, whether. So this is all KYCs are. KYCs are not limited to income tax return or my Aadhaar or my driving license. So what we are talking about, it is not kill your customer. KYC is basically that how better you can start understanding the insights of your customers. That's where the KYC has going to be there. Data is money. DLP, I suppose there are a lot many people who will understand this, that digital lending platform. What is now happening? Every bank has got approximately around 26 to 30 of their products, which is individualized. And they have started making journey based on this individualized DLP. So it means if you want to have a home loan, you have a DLP for one home loan. DLP for one home loan means the customer will check into that app itself, and he will walk out with a sanction letter in that DLP itself. That's what DLP defines it. So customer onboarding to sanction letter, it is DLP. Now in that DLP, at the present moment, there is a little advancement. So we have started making product-wise DLP. I think so the time has come, because same customer might require 5 products, or it can be input specific DLP, or it has to be a customer centric DLP. It can't be a product specific DLP, because same customer might require a car loan. If he has taken a home loan, he has to pass through the entire journey again. So how that customer, which is an one individual, has one data profile, he has got varied requirements. How can we customize, how can we create that type of an ecosystem so that this DLP can be also taken? Again, I don't think at the present moment we have been born, brought up, we are seeing everything. Sir, customer has to go and tell to a banker, sir, I require a loan. Why can't there can be a reverse way around? When the banker itself knows, sir, I might require a 20,000 crore of loan maybe tomorrow. Can there be a situation that can arise instead of banking, instead of the customer going and asking, sir, I would require a loan, thereafter the entire process start? That process should stop. It should come and tell, sir, banker should go and say, sir, boss, I think so. Or you definitely require a loan tomorrow at 10 o'clock. Believe me, आप आज ही ले सकते हैं तो ले लीजिए, नहीं तो कल सुबह 10 बजे तो आपको लोन लेना ही पड़ेगा, sir. So this is where the proactive anticipation and personalized pre-approved loan is not. It is not a carpet bombing pre-approved loan where you approve a 50,000 rupees loan based on his past data and you just carpet bomb with all the common platform, with all the common BRs running, sir. Sir, this is not going to work out. Yeah. 100% FinTech is given. How much manual is the question now? I tell you, 100% FinTech is given. 100% automation is given. How much manual is the question? Where you want to stop the process, where you want to have your checks and balances. Sir, vendor onboarding process, I would require to have at least one physical visit of the vendor. You require the process there, but it is all depending upon the customer requirement. It is all depending upon the SOPs that you prepare. Automation to पूरे process का end to end. कितनी बार रोकना है, कब रोकना है, और किस स्टेज पे रोकना है, ये आपको डिसाइड करना. तो इट मींस कितना मैनुअल होना, ओनली दिस इज द क्वेश्चन राइट नाउ दैट एवरी पर्सन हैज टू फेस. Question is not of automation. Question is now it is of manual intervention. Again, black swan events and everything. Do you not understand that how these black swan events impact the financial world? Like suppose we are into all the banks evaluate all the loan giving process ki sir kisko 15 saal ka loan dena hai, kisi ko 10 saal ka loan dena. Bank has to decide what should be the tenure of the loan. I just give you some of the data point to understand how difficult it is for a banking sector to understand that what should be the tenure of the loan and how the long-term tenure loan has become so difficult. In 90s, all the top 10 commodities, whether it is iron ore prices, whether it is zinc prices, whether it is aluminum prices, they used to take approximately 8 to 10 years of time frame to hit the high and the low price. Iron ore key prices to hit the high and the low, they used to take at least 10 years of life. Then this 10 years got reduced to 7 years. Then it got reduced to 3 years. Last year, 8 out of top 10 commodity prices fluctuated by 70%. Imagine you have to give a loan to some party where there is a profit margin of only 5% in that, and 85% of that component or 85% of that COP, cost of production, which is the raw material cost, which is fluctuating by another 70% in a year. And as a client or as a banker, you have to assess the loan for another 15 years. You don't even know what is going to happen in the next quarter. And you are asking them to give a loan for 15 years. I'm not even talking about the technologically advanced thing where I was, last 2 years before, I was in a social function of some marriage of some senior banker and all the senior bankers were present. I just asked them casually, कि sir, आज यदि Bill Gates, आज यदि आपसे Bill Gates या Steve Jobs आपसे लोन मांगता तो आप लोन देते क्या? I'm not talking about 2007. I'm not talking about 1998. Today, if Bill Gates and Steve Jobs would have asked you a loan, whether are you in a position to give him a loan or not? Invariably, sir, all the top bankers of the country were present in that dinner meeting. Everybody said no. Today also, this tech components की बात में नहीं कर रहा कि उसको तो लोन नहीं मिल सकता. But I'm talking about the traditional businesses, where also this raw material component prices, because of all this advancement that we are seeing it is 70% up and down within 1 year, 8 out of top 10 commodities, how this financial viability and how we are going to spend into that. So getting ready for the black swan events means that we also need to get ready that every day something else or the other will happen. How this entire financing world is going to move from short term, everything from long term has moved to short term duration in life. So how this long term asset would be created, how more ports would be created, how more roads would be created, how much more infrastructure would be created, where definitely you would require a long term loan. So definitely a new approach, a new thought process, where every day the lender and the borrower will sit maybe within a quarter, and then they will understand how this quarter would behave, how much loan he is going to repay in this quarter itself. So again, we all talk about Amazon, we will all talk about that it is an e-commerce thing, but we all understand that how this e-commerce function or this, what is that e-commerce? What Amazon is going to do, that Amazon is going to see that it will create a marketplace, and whichever is the highest selling commodity or the profit making commodity, Amazon will have its own SPV where they will start manufacturing that. So that's where they make money with. So ultimately, who is the customer owner? He is the business owner. Business owner, so it means reach, delivery, and product will no longer be differentiator. Please understand. Reach, हमारी 50 दुकानें हैं, I am present all over the world, I am omnipresent, whether that reach, delivery, and product, whether these three things are differentiator or not, you have to understand. But whether you own the customer or not, that's only the important. It is only the customer experience which is going to take into account. We have learned in our school days, in our MBA days, while learning in the business, that customer is the king. I think so. Now customer is no longer the king. Customer is the dictator now. Now this is so important that 31st March financials, sir, 765 days depend only on 1 day financials as a finance person. Us din, balance sheet always says it is balance sheet as on particular date. My rating agency, my bank's appraisal process, my financial ranking, everything depends upon how I performed my balance sheet on that single day, how my business performed, and my last year and my coming 1 year is depending upon on that 1 day performance. I think so this is going to have a sea change where we are going to have a dynamic rating, like a stock market में जैसे रोज price ऊपर नीचे होता रहता है, you will have everything, bank statement, GST, everything linked to the rating agency, and you will have the rating agency coming every day up and down. Reliance might have a rating of something of AAA 1 day, he might have a AA 1 day, he might again come back to AAA the 3rd day. So you never know that. So that's how it is. Rating cannot be static. The financials, it cannot be static. It is changing every day. So how can the financial implication of that has to be also changed every day? Data will be ubiquitous, sir. I 100% tell you, sir. Every platform we are saying till the time all the IT companies, all the fintech companies, we have so many fintech companies, we have so many competitors, we have so many collaborators, sir. Just because all the data are not talking to each other at the present moment. I suppose the time is not far away when each and every data will start talking to each other. They will start collaborating. I'm just 1 minute more. I will just wrap it up. I will not take more. I will not get into more experiences. So all these data points and everything, they will all become one. All the platform, all the data points are going to become one. So let's be prepared how we can embrace this changing world. And I think so we are in this right changing world, because in fact, if we don't change, every day how much we can change, how much we can spot the change, and how much we can just collaborate, and how we are not here for competition to that change, because you can't compete with that change. We are here to collaborate, and we are see that how we can embrace the change to the best of our advantage. Thank you so much. I will not take into more of the time. Thank you so much, friends. Thank you. Thanks a lot for everything. Thank you.
I talked about praise from MCs, but genuinely, sir, thank you for that presentation. And you made me rethink getting a red car ever. So thank you so much for that presentation. And it's now time to move on to our next panel discussion. That is open banking, leveraging fintech for nationwide growth and economic development, moderated by Krupesh Bhatt, founder Sign Desk. Our panelists include Dina Jacob, co-founder and CFO Open, Aishwarya Jayashankar, co-founder and COO Hyperface Technologies, Nilesh Sangoy, CIO FinCare Small Finance Bank, Hina Mehta, co-founder and CEO Basis, and joining us virtually, Sabyasachi Senapati, business head Trillion Loans, a Bharat Pay Group company. May I request our panelists and our moderator to please join us on stage. A very big round of applause for Jyoti sir and of course our next panelists of the day. We will be setting up the stage for our panel discussion. I request all our panelists to please join us on stage. Sabyasachi will be joining us virtually. A big round of applause, everyone, for our panel.
Hi, folks. Good afternoon and welcome to the open banking the session this afternoon. So today I have the privilege, I have many privileges, in fact. To start with, I have the honor of hosting 3 women entrepreneurs. And also this actually, if fintech is, the cutting edge banking, then open banking is a cutting edge fintech. So we also have another honor of making it, the truly cutting edge in spirit by having one of our the panelists joining remotely. So Mr. Sabyasachi, I think is I think we'll do the intro quickly. Just to start with, my name is Krupesh Bhatt. I'm a founder at Sign Desk. We are a document automation, the solution provider with the stamping, signing, and contract lifecycle management. So I think we are running short on time. We'll keep it the crisp, and then we'll keep it short. So we will start with the introduction. So we'll start with Dina.
Hi, everyone. Good evening. This is Dina Jacob here, co-founder and CFO at Open Financial Technologies. We are a SME-focused neobanking solution, a neobanking platform and based out of Bangalore.
Hi, everyone. I'm Aishwarya Jayashankar, co-founder and COO of Hyperface. We are a credit cards as a service platform. We help banks and co-brands launch credit card programs faster and better.
Hi, everyone. This is Nilesh Sangoy, CIO of FinCare Small Finance Bank, one of the new age banks.
Hi, everyone. I'm Henna Mehta. I'm co-founder and CEO at Basis. We're building a women-focused financial services platform. We recently launched our card on the Hyperface infra. So we're a happy customer and are looking to do all kinds of financial services, all hyper-focused on urban Indian women for now.
Yeah, hello everyone. I'm Sabyasachi. Firstly, I really regret not being there in person. I just logged in some time back, and from whatever I could see on the stage and off the stage, I think there's a certain amount of energy that's visible. I would have loved to be part of that. Plus, I think I have a certain connection with Bangalore, having spent 2 of my formative post-graduation years there. So generally, whenever I get a chance, I make it a point to be there. Today, unfortunately, I couldn't. I'm part of the BharatPe group. BharatPe recently acquired NBFC called Trillion Loans. I'm a whole-time director and business head at Trillion Loans. Thank you.
Thanks for the introduction. So open banking, we'll open banking discussion with the Bank Open, the CFO and co-founder of Bank Open, Deena. I'll start with the first question to Deena. So I think we were discussing, and then we're talking about the challenges and the difficulties and the journey when you start and then launch a neo-banking platform in a country like India. Obviously, went through multiple challenges. I think you've been there and done that, and now I think this is recognized as one of the platforms. And then I think it's all, you also build the reputation for being one of the pioneers in this space. But how does the future look? Now, I think thanks to the economic changes and the global, the meltdown recently, that the most of us have started beginning to realize that the sustainability, the profitability, and the values, all these things matter, right? So in the light of this, how do you see neobanks evolving and then the maintaining their competitive edge going forward?
Thank you. That's a great question. In fact, there is a lot of questions around the survival of the new age models, neobanks. The first thing to understand is to get our minds clear about what is open banking, neo-banking. So when we look into the future, what's going to happen is that traditionally we have seen banking taking care of the entire channel, taking care of money flow, the trustees of money. There's a lot of trust factor around it and has been traditionally or offline. But in the last 5 years, if you look at it, even in India, when you look at it, from 2015 onwards, it started with payments slightly earlier than that, and then started with the lending from a completely digital perspective. And today, if you see, the entire banking is moving towards the digital part of it. Thanks to demonetization, thanks to the GST which is coming, thanks to various other things, internet penetration, a lot of these factors has led to this. And now talking about neo-banking, it's nothing but it's a new way of doing banking. And the new way of doing banking is going to be digital. Let's make peace with that. And that's where what is the proposition we are giving to the customer is the true thing which is going to define whether people are going to, are you actually solving a problem? Are you actually giving a solid proposition to the customer? Based on that is what the customer is going to pay you. Enhanced user experience, a UI UX is not what open banking or a neo banking should stand for. How digitally cohesive, a very good journey you can provide to the customer, experience you can provide to the customer. When it goes back to some time back, we were hearing about the lending, as simple as that. How do one consume dynamic data? How do one get data from multiple aspects? How can technology take care of that from the customers, consumers' perspective? What are their demands? What are their requirements? So this is where the future of banking is going to be. Bank is not going to be completely separate entity with one branch name standing there, but it will be embedded into your workflows, your transactions, and where the requirement is of the money flow happening. And that's going to be the future. If you're playing there are a whole lot of solutions which we can build around and to solution for the customers. And that's where I believe that's the way to go. A digital bank is a way to go.
I think it's on the asset side of the journey, right? I want to ask this question to Aishwarya because she runs a company where they empower the people with the new age credit cards. another kind of open banking and then financial services. So on the asset side of the story, is it any different? How do you see it? And then what has been your experience post-COVID?
I should start thanking Dina on contextualizing embedded finance so well, because we have today come to a point where we can talk about contextualizing and the bank going to the customer rather than the customer going to the branch. But trust me, there was a time that banks were designed with locked up branches. The systems that were designed for the banks didn't even have APIs. I mean, I've been part of digital initiatives across banks. We have had to wrangle out API after APIs from partner to build the bank's own front end, leave alone partners. Today, see where it has evolved. Every bank has got partners worth their salt. You know, the larger banks are going with players like Open. I mean, even the largest of banks today are talking about fintech partnerships. We ourselves have signed up with a clutch full of banks. Opening up banking in its truest sense to me is what Hyperface powers on the credit card side. Co-branded credit cards have been there for years. People have used their petrol cards to shopper stop cards to whatnot to get loyalty programs. But bringing the level of customer experience that is in a bank app or even better, because credit cards are always known for rewards and benefits. The challenge has always been, where do I go claim them? You know, every one of us have got 4 credit cards, but I'm sure it's still a mystery to figure out where the reward points come and go. Where do I go for the lounge access? At Hyperface, we are trying to bring a single window programmatic management for banks to offer these multiple benefits and for a co-brand to be able to embed it. Imagine in your co-brand app, if you're told that this is the cashback that you've earned, you're able to see the breakup. You're able to immediately transfer it into a checkout within the co-brand. Or even better, you could redeem it back into the bank's reward program or bank benefits like a lounge access. So to us, as Dina said, you know, going to the customer really matters. And for banks to grow, it will, COVID was great. It brought in digitization. I would call it the first wave. Today, every bank knows branch pay dhanda nahi chalne wala hai. I think the next wave is coming and the next wave is here. Every bank, big or small, is partnering, and embedded finance is going to play a big role. And on lending side, I'm very bullish on credit cards because of the transactional nature of the credit. Typically, customer gets a credit line one time, but in a transactional credit, this underwriting cost comes down significantly. But far often than not, the glamorous lifestyle part of the credit cards get focused. But if you look at a product like UPI on credit card, if you could give it to a customer at a 10,000 ticket size, imagine how many lifestyles at a lower end you could impact. A farmer could go buy a seed to the procurement products and not just get a loan and its interest keeps growing. So I think transactional credit is at its cusp in the country. We are barely at 1 crore credit cards, and at Hyperface, we are trying to build a technology stack that will help banks scale easily on that.
I think the credit card as a credit instrument was kind of, the written off for a long time in India, right? So many of us thought that the invention of UPI and the fintech and then open banking probably is going to kill the credit card business. But that hasn't happened. So now, this question is for Hena. So she is the one, actually, she is empowering women with financial services, and also she's empowering them with credit card as well. So, how is this, the story has changed? We thought that credit cards are going to go away, but then now actually we're talking about credit cards and then the financial services, and then, the fintech stack built on top of credit cards in the credit system. So what has been your experience, and then how do you see things are evolving, and then how did you use technology to solve this problem? And also, I think you operated a different segment where it's not being marketed as a credit card for everyone, but then you're addressing a problem for a very the niche segment, also something that was much needed for the country.
Sure. Thanks, Krupesh, for the question. So just to clarify, we're not doing a credit card. It's actually a prepaid card, which has worked out really well. And to your point on, could UPI kill these sort of payment instruments? We've seen quite the opposite, right? I think customers are looking for experiences that actually work for them, right? Why would someone use the basis power card over 10 other ways or 5 other ways she has to pay? It's because the context, the personalization, the curation of the experience works for her. So with the Power Card, we've built out our own reward stack. We've partnered with brands and products that women actually spend on and care about, and have sort of personalized the experience that way. So that's what we've seen, right? I think customers are looking for that relevance in what they use. It's not just about making the payment, but also, the experience around it. And then we've added bits of community and financial education to the experience. So as a card member, as a Power Card member, you get access. It's a membership, right? You get access to community events. We will continue to be your partner in terms of educating and keeping you informed on your personal finance. So I think that's where these curated, customized experiences really come about. Of course, the only way to really do it at scale is through tech, right? I think credit cards have existed for decades, cards as a form factor, of course. So of course, digitization has helped scale, has helped with access. And I know our topic today is around open banking. I think open banking and open APIs have allowed us to make it personal, right? Have allowed us to tap into data that we wouldn't have access to otherwise, have allowed us to create experiences that actually work for customers because of how open data has played out. Of course, we have to maintain privacy, security, and all those things. We're all building financial services businesses, so that is in our DNA. It's the name of the game. But if we're able to balance the two, I think it would create exceptional customer experience, which is what our end customer is always craving for.
Thank you. So I think one of the things that are common themes, right? The fintechs will have to face many challenges, and one of them is, whether you the fight or partner with the establishment, could be a regulator, or could be, the banking system, or could be, the financial system. So I want to ask Sabyasachi, who's the director at Trillion, the loans, and then now it's part of Bharat Pay. So how did you face this challenge, and then why do you think the banks need to open up, and then what is the way for fintechs to open up this conversation, and then like opening up the banks, the APIs, or the system, or even actually to get them think about some of these aspects is not easy, right? And how did you overcome these challenges, and then how do you see this mutually benefiting, and then importantly, how would it help the country overall in opening up the complete ecosystem, so that the unbanked and then the people from tier 2 and 3 towns will benefit from this innovation by bringing the traditional banking by bridging the gap between the traditional banking and then the new age fintechs.
Thanks. So I think without doubt, collaboration is the way to go. And yeah, and over the last few years, you have seen collaboration between banks and fintech, right? So obviously there is a section, there is a certain perception where people view it as a competition or a certain kind of friction between the banking side of the world, which is more regulated, and versus fintechs, which are more new age. But I think if you see over the last few years, right, both by design, and then say design is by the set of regulations, guidelines coming about, plus also by choice, where people are, both from the fintech and banking side, more open to collaboration. I think both by design and by choice, you are seeing more and more collaboration between banks, NBFCs, other financial institutions, and fintechs. I think both have a certain set of strengths to bring to the table, which will help in, you mentioned the point about financial inclusion, or rather I would say financial empowerment, right? So banks have been there for decades. They stand for a certain level of trust. They have a strong brand name. They have a strong recall. They're governed by a certain set of compliances and regulations, right? And broadly perform within a defined set of framework or rules, right? Now, fintechs, on the other hand, when they came about, right, they came with a certain set of, understanding about, so I wouldn't say user experience, right? As one of the panelists earlier mentioned, user experience is just one part of it. I would rather say the whole thinking about product, right? How do you view a product and re-engineer, restructure a product end to end? I think that's the kind of thinking, both from concept to implementation, that fintechs have brought about, right? So a product, user experience, adoption of new technologies, how do you leverage data, the massive amount of data that's available, that's always been available, but obviously with the increase in computing power and the increase in access of this data through smartphones, your ability to leverage the data has just sort of gone up, right? They bring about some of these trends. And if you just see what I've outlined, a lot of this is by design complementary, right? Fintechs working with banks, it essentially enables better access, better distribution of products. And when I say better access distribution, it's, there was this old school BCs also. Banks used to rely on BCs to get access or distribution to, let's say, a certain segment of society, or let's say MSMEs, or getting into tier 3 cities and so on, right? So it is, fintechs are not just solving the distribution access problem, but they're also getting a lot more product, a lot more segment of people under the right kind of products, right? And then personalizing those products to meet the requirements, right? So closer home, I'll take an example. For example, when BharatPay started, we started with a QR-based payment product, right? And one of the USPs then was, and this is like 2018, was we came up with the first interoperable QR, where irrespective of which consumer app you're holding, you could use any consumer app to make a payment on any QR. So it was more of a, and now everyone has interoperable QRs. Now, we worked with banks, obviously, on the UPI stack, right? That had to be the UPI rails with organizations like NPCI, with banks on the core banking stack. We had to work with them to ensure that this is scalable. It is able to, there is the ability to support a certain TPS and a certain volume. And then that collaboration has only expanded over time. For example, because we had access to a lot of the data around the QR-based transactions, what we call as TPV, we could use this data to do a better kind of facilitate a better risk assessment of the merchants, right? Our core segment is essentially the small merchants, the Kirana stores, the neighborhood stores, who typically were less banked. I wouldn't say unbanked. A lot of them had accounts, but they didn't have access to, let's say, formal credit, or they didn't have easy access to other products beyond, let's say, a plain savings account, right? But because they're now part of a payment platform or payment ecosystem, where there is a lot of data that could facilitate sort of credit risk assessment or other kinds of assessment about the merchant, we could work with banks and other NBFCs to start lending to them, to offer add-on products to them like cards and so on, right? So essentially, I think by one means or other, now whether it is imposed through guidelines, rules, or whether it is through choice, whether it's market determined, let's put it that way, I think we are seeing increasing amount of collaboration between banks and fintechs. And I think that is the trend going forward as well.
Thanks. So I have the two-part question to Nilesh. I feel that presumably I feel that you are at a great disadvantage being the small finance bank, because you have the privileges of the everything that the traditional established bank has in terms of the regulatory, and then the access to distribution, all of it. But then at the same time, you can actually move quickly, right? So probably this question I think suits you better in terms of the tech adoption in banks, right? So what is really happening? I mean, the pace of tech adoption, obviously, it has gone up over time, but then in a banks like yours, how different it is, and then I can't really complete this conversation, this panel discussion, without bringing Gen AI and then Chat GPT. So the second part of the question is that do you see any disruption happening with the new age technologies such as the AI, the Gen AI, and then the blockchain, and then IoTs, right? So how do you see this space evolving?
Sure. So I'll speak about our bank, because the banks could be in absolutely wide spectrum. There could be banks which are run very traditionally, and there are banks which, so I mean, we were speaking about fintech and the great capabilities, like we spoke about user experience, we spoke about, end-to-end digital product re-engineering. And so when FinCare got established 5 years back, we made it a point that, by DNA, we will be a fintech. And though we have a banking license, we'll try to build our in-house capabilities around a lot of stuff on tech, on product, on design. And that's the direction we have always followed. We built a 200-member team of engineering products, and we built a lot of capabilities around some vendor products like core banking, etc. That how do we build a large set of APIs so that the core banking as such doesn't become a bottleneck for us to innovate. And we can always, without touching core, we can build systems around that. So that has been the journey, and continues in a very agile way. We moved to cloud. We run multiple CI/CD pipelines, and do a lot of agile rollouts. So that's about the banking journey. And yes, AI or machine learning as such is obviously goes without saying. Any business today needs that. And banks obviously has a huge amount of data. We have 5 million plus customers and history of many years of data. So we use it around underwriting, we use around customer service. We built up a bot. This was before Gen AI, generative AI. We had built on NLP bot on WhatsApp. 100 plus use cases can be solved in a conversational multilingual mechanism. And now we are working on building that to ChatGPT kind of a solution with a more expanded solution around that. And then we worked around fraud preventions, fraud detections, anti-money laundering, and many such use cases around risk profiling of customers, about cross-sell, upsells, various products to the customers through machine learning models. So there are constantly new solutions evolving.
Thanks, Nilesh. We'll also take a couple of questions. Being this being an open banking discussion, we'll also open the floor for questions. Maybe I think we can take a couple of questions. But before that, do any of other panelists, want to talk about the disruption that is happening, right, from the technology perspective, and then what is happening with the Gen AI, and then what is happening with the newer the generation of technologies, right? Some of the devices and the technologies that probably that will be being introduced for the first time.
I'd just like to add to what Nilesh was saying. So I don't, again, see it as disruption. I think it's more augmenting and making existing processes and all of that more efficient, right? So with AI, of course, Nilesh talked about a bunch of use cases, whether it's around fraud detection and prevention, better customer service. We actually built out a personal finance assistant on Basis. It's a GPT-3 model based bot who has learned from tens of thousands of data points in our community. So we've been running our community on the app for about 3 years now. And so she's trained, her name is Minty. She's trained on these data points and actually gives great answers. It's information, of course, it's not advice, to very contextual questions around money, right? So I think we'll see a lot more of these AI assistants coming up, and then it all boils down to great customer experience, better risk management, whether it's around underwriting for loans, for insurance, claim settlement is another one where there's just so much data, it takes so long. So I think we'll see, I don't see it as disruption. I think it's just making things better from the way it was done in the past.
I would just like to add there. I mean, being an ex-banker, I can't not think of the kind of use cases that AI would bring into back office, right? I mean, for long, one advantage that banks have is the reams of structured data they've been sitting on, thanks to the regulator. I mean, something as simple as you resetting your PIN, last 7 years of your logs have to sit somewhere in the bank system. So the amount of data that's already sitting, because when building AI models, that's the biggest challenge. I'm sure Hina had to feed a lot for Minty to reach to the point where it is. I would like to think banks are actually at an advantage when it comes to structured data. And when it comes to big pockets to invest, we all know where they are. So I think it's a very exciting, what should I say, a space to watch out for, because I'm sure as we speak, banks are thinking about it. And I'm not so much towards generative AI, but predictive AI already has been used and we will see more and more of it. I don't think banks would need 100,000 employees. That could be the reality that spins out very soon, is my guess when it comes to AI. Second is exactly what Hina said. FinTechs will be 1 to 5 steps ahead in bringing out the powers of AI. Obviously, will banks following suit. So there's going to be very interesting times, I think, from a backend as well as a customer experience perspective on AI use cases.
Just to add, I mean, can't agree with everyone more. When we look at, even for that matter, be it open banking, be it, the goal we are trying to reach in a country like India in terms of the inclusion, the development on the economic side, I mean, more stress can't be given to how important the new technologies are supposed to play a role, how important a role they are supposed to play. Coming back to why digitization is important, a country like India, offline models cannot service everyone. And that's what we have been seeing in the past as well in terms of the banking penetration, how many people have access to banking. That's when we started about inclusion, everything. And today, for example, when we picked SME as a model, initially we were also apprehensive how many would understand, how many would have access. Interestingly, surprisingly, as we said, probably in the last 3 to 3.5 years where we started scaling up, we have about 35 lakh SMEs covering almost 80% of the PIN codes of India. Unthinkable. And going forward, in the sense 80% of the PIN code people are accessing. And this is where technology has to play a role, because this has to be, that is where whether it is generative AI or whether it is a kind of, the machine learning, for example, the models which has to power, this is where, whether it is just the user experience, it is not. What they experience has to be deep within what the product is giving it to them, which is where how their data is being analyzed, how the need even is being analyzed, because that's something even a consumer doesn't know, where they really need, when they need money, which is where, predictive AI could come into picture, or when they would actually have a shortage of money or a surplus, how it needs to be done. And this is where, the interaction happens. That's where generative AI also comes into picture, wherein, interactions, how easy the interactions can be and how easy to pull out, and in terms of user experience can be. So this is where each of these models are going to tie in and then ensure the efficiencies in terms of the cost of, operational cost, which has been the hindrance for banks to go out and capture offline in multiple places. That's going to come down. And that's exactly where traditional, while banks from a trust perspective, from the traditional perspective, money flow perspective, they hold the entire part of the money which is required as a trustee. There are these partners who are into, various partners, right from infrastructure to enablers to technology, which is a collaboration which is coming in today and effectively going to the end customers. And this is how the real open banking and the nation building and inclusion is going to happen. And that's where technology is going to play a great role, all the newest technologies for that matter.
I think the India has provided technologies, like UPI and then Aadhaar and India Stack, and hopefully we could do something similar in the space of AI as well, which is going to be the future for the next 4 to 5 years. I think it's going to keep all of us busy, that's for sure. So we have another 5-6 minutes, and then I have a lot of questions, but I thought I'll give this opportunities to the audience. So we will take a few questions. Okay. Can someone pass the?
I think it's a great session and thank for your inputs. Just another point to make there that I think the open banking and the work that I think has been done in India, there's something that a lot of other economies in the region are looking forward to learning from. And I think it's a great story for and a great opportunity for our fintechs and many of the others to actually take it to the external world. And also on the point that big banks move slowly, you'll be surprising that big banks are also now transforming themselves into big tech. So the amount of work which is actually happening in large firms also, so you'll be surprised with the agility that they are also able to move because they also realize the threat from fintechs. So interesting times to come in, but I think it's an opportunity for fintechs and others to actually take the great work which has already happened in India to the rest of the world as well. Thank you.
Thank you. I think there's one more question.
Hello, everyone. So my question is around startups and so more and more the banks are becoming like startups. The banks are becoming more like fintechs, and the fintechs are also getting into banking licenses, right? So where do you see this become? Like, do you see more banks build their own technology, and how do startups sort of anticipate their future in an ecosystem which is so dynamic? Where do you see the evolution happening? Thank you.
Just one thing what Nilesh said really connected with me, which is he said we have to work around core banking, right? I mean, we have all tiptoed around core banking, sir. So I completely get what you meant by that statement. I'm just coming to your answer, right? I think therein lies the challenge. We often tend to think when we say bank builds technology, user interfaces building or journey building or building middle office, all this is possible. But the core, treasury management, deposit management, CCMS, your laws, your LMS, those are extremely complex machines to be built. And that is where tech needs to be re-engineered today. So when we talk about banks becoming tech, I think of it more as that agility part that he spoke about, to be able to work around limitations. But when I think of myself as a B2B infra who's building this core system for banks, I would like to build a system that can seamlessly merge into the front office or the user interface aspects that the bank wants to build. I'm sure what Open is building also fits into that. So we need better core banking systems. And who are the tech players who are going to come in? So it is not about banks are building tech, so do people die? Fintechs are building user experience. Does it mean banks die? We are a country of over 1 billion Indians. Do we all have, just see what Hina talks about or what they are doing in MSME space. There are so many Indias within this India that needs either a fintech or a bank to actively look at and service them. I don't think any of us are going anywhere soon. If anything, B2B infra players, we all also morph into direct to customer, right? Open also has direct to customer products. So in that sense, to me, there's either or thinking somewhere. I think it's just in discussions, people have gone beyond and started collaborating, which is a reality. I don't think it's either or at all.
So just to add to what Aishwarya mentioned, from our experience also, we work with 15 banks in India, including public sector banks. And we as a fintech, this is specifically on the SME part of it, on the solutioning. We join hands and we are giving a better solution to the end customer. This is where I mentioned between bank and fintechs increasingly in our last 6 years of existence. In the last 2 years, we have seen it increasingly in collaborative approach. And that's going to continue because ecosystem is also realizing that it is not a battle that only one or a single entity can fight. And that's going to be a battle which is going to be like, just too huge a problem and too huge a customer base that we have. It's something which each of the parts have to be beautifully collaborated or beautifully crafted by different people. When you talk about technology also, think about the depth of it. That is what the differentiator is. Technology can be just one solution or much deeper, which stitches together into one complete experience for the customer. And that's where the differentiator comes. Which part is being done by whom?
How many startups or fintechs in the audience? Can you raise your hands? Okay. Maybe as one last question I want to ask the Nilesh, right? So what are some of the areas you see for collaboration or building new products or the opportunities to work with banks for fintechs and some of the new age startups, some of the unsolved problems?
I think banks, the word legacy for banks, it's a very big positive when you look at from a business perspective. Because of legacy is what we put our money in the bank, because there is a trust factor. But when it comes to tech, the legacy is what it becomes the stone around your neck. So I think the tech legacy is always something that banks would fight. I think FinTechs has a big role to play to modernize that, to work collaboratively with the banks. And there are areas we spoke about: the customer experience, the distribution, the product innovation. All of these are the areas. I think most of the fintechs are very highly focused on lending. I think, and that I'm sure there is a lot of depth in that, but then there are many more things that, I will not give areas because that's the whole challenge for fintechs to identify those new areas and come up with the new solutions. Thank you.
All right. Okay, Aishwarya is going to send a pitch deck to Nilesh. All right, folks, I enjoyed this conversation. Hope you all did too. Thank you. Have a good evening.
So opening and having an open discussion as well with everyone. It's nice to see some collaborations already happening on the stage as well. That's what it is really all about. And it's now time for our next panel discussion. How can we make fintech organizations more productive? This is going to be moderated by Parimala Shashidhar, Account Director for Enterprise Sales at Slack. Our panelists include Karan Batra, COO FISDM, Jatin Basin, CPO Axio, formerly Capital Float, Ananda Padmanabhan Ramabhadran, Head Business and Growth at Zolve, and Mohan Shushantam, CDO Vivriti Capital. May I request all our panelists and our moderator to please join us on stage. A big round of applause for our previous panel and for our upcoming panel as well. A big round of applause.
Hello, can you hear me? Okay, so the photo is confusing. I'm not Harsha. Unfortunately, Harsha has to go on personal emergency, so I came on last minute. I'm Parimala. I look after the enterprise business, fintech business for Slack in India. Today we're going to spend some time on productivity and efficiency, etc. But before that, I would like to ask all the speakers to introduce themselves, their role, responsibilities, and about your company.
So hi, everyone. My name is Karan Batra. I'm the Chief Operating Officer for FISDM. FISDM is a wealth tech company which helps all its customers save their money across mutual funds, stocks, and all other instruments. What differentiates us in this little crowded market is our go-to-market strategy. We work with banks. We partner with over 15 large banks and are the plug-and-play wealth management department for these banks. And we help them with tech, and we also help them with people and help them manage their wealth management business. Thank you.
Hi, good evening, everyone. My name is Mohan Shushantam. I'm the Chief Data Officer at Vivriti Group. We are a group of two companies right now. One is Vivriti Capital, which is an NBFC. The second one is Vivriti Asset Management. which is into AIFs, which is alternate investment funds for high net worth, ultra high net worth individuals and institutions. Here I'm setting up, I'm part of the data team. I'm setting up the data team actually, trying to use data as much as possible in different domains and trying to see how we can become a data-driven organization. And in fact, the end state is how to boost productivity and optimize it to the maximum using data. Very happy to be here. Thank you so much.
Hi, everyone. My name is Anand. I head business and growth at Zoll. So Zoll is a global neobank helping immigrants moving to US get checking accounts, credit cards, etc. while they are here and kind of then start their life when they move to US. So what happens in US is like credit score is super important in the US and they don't take into consideration the Indian credit score. And our thesis has always been that credit worthiness of an individual has nothing to do with their location. It's a reflection of their behavior. So we use like the Indian home country bureau data and then underwrite and issue credit cards for people, students and professionals moving to US. And today we now are open to anyone from the world actually moving to US. So great to be here and talk about productivity because that's the.
Okay, so I think last few years, it has been at the last 3 years, I could say it has been a ride of a lifetime where all of us are kind of going through series of surprises, starting with pandemic, and then the corporates face the after effects of that, the year of great resignation, and now the year of great layoffs. So everybody's mind is around cost optimization, efficiency, productivity. These are the buzzwords. And everybody is thinking, how do we ensure that we do more from less, right? So especially now today, my panelists, I would like to spend time with them to see how they are looking at productivity and efficiency in their world, and what are the challenges, opportunities, and then how tools and AI are helping up. We'll take one by one. So first start with Karan. So what is productivity for you and your company, Fisdom, at this stage?
Okay, so I think productivity is something which every organization is trying to work on. And as you said, getting more out of less, or maybe more out of, let's start with the same input and then working to less. For Fisdom, I think productivity is a combination of two elements. One is tool, software, tech, and second is the people aspect. And maybe I'll little deep dive into the people aspect. As you said, I think the pandemic changed how work is seen or how productivity is seen. Maybe pre-2020, it was productivity was a factor of how many hours you were clocking in office. Were you in front of your manager? Was he seeing you work? Were you online in terms of, your online ticker? I think that has had a huge change where flexibility in a much broader sense has come into the workspace. And when I say flexibility, and I'm sure, a lot of you will agree, earlier, if somebody said, I'm working from home, the first thought was he or she is not working. I think that's the first sea change which has happened, that you can work away from office. That's very, very important. So coming to that point, that trust factor has come in, both from the employee and the employer, because the employee also has to work and the employer has to believe that he or she is working. So I think the way we see productivity, it is not about how many hours you clock in. It's not about, are you online? It's about what is your output. And what I mean by that is every employee at Fisdom, and I'm sure, for everyone else, for that to happen, it is very important for them to know what is their deliverable, what is their part that they play in the overall story. So one thing that we do, or we emphasize a lot on, is helping each employee understand their role in the larger story of Fisdom, telling them what exactly they need to do. And post that, it is about helping them with tools. And that's where tools come in. So I don't think productivity is a function of tools or softwares. It's about the individual believing that, yes, I need to do this, and having that trust between the employee and employer. And then you put a layer of tools on top to help that employee achieve what he needs to do. So I would say productivity at Wisdom is good, but we are always working on making it better because it's a journey. So yeah, that's how it is.
Of course, productivity, I think with so many things going on, it's always a journey than an end destination and keep evolving. So going to Mohan, I think what is the same question to all of you, but what is productivity for you?
Sure. I'm glad it's a journey. It's not a destination. If it becomes a destination, we will be out of our jobs. Right? So yeah, at Vivriti, and because we are working across different verticals. So NBFC, we have working capital loans, we have supply chain loans, and we have term loans. So there are 10 different products. Similarly, on the asset management side, we have PTCs, we have MLD. So there are different investment products that we offer to a different set of customers. And then obviously there is a tech team, there is a data team, there is an HR, corporate finance. So there are N different types of businesses. And for everyone, the meaning of productivity or the key KPI that they are tracking will be different. And that kind of segmentation is always necessary for a RM, for a business RM. Probably the AUM that the RM is driving in a particular year becomes very critical. For a tech team, a number of user stories that they have been able to deliver, the number of products, number of features that they have been able to deliver, that becomes very critical. But see, there are two aspects of productivity as I see it. The one is the effort part, and the one is the outcome part. The effort part is where we try to measure how much of effort did you put, and if that effort was genuine. And even after putting all that effort, and I can talk, let's say, on behalf of the product team, they spent all the effort to do user research. They wrote a BRD. They created the entire document. They went to engineering, and engineering said no. Now that fellow has put in all that effort, right? So there has to be a feature. There has to be a weightage given or assigned to the effort part. Obviously, the outcome is disproportionately high because at the end of the day, you have to drive outcomes. And I can talk more from a data team perspective, right? So data team is typically a support function or an enabler. And in some of the organizations, at least we are trying to make it a revenue vertical as well. We just don't want to be the cost center. But then how do you measure productivity, let's say, of a data analytics, data science analytics team, right? So productivity cannot be measured in terms of number of models that I delivered or number of dashboards that I built, right? It has to be closely tied with the business outcomes that I'm driving. And that's what I always tell my team. We are not here to build exotic solutions looking for problems to solve. It has to be the other way around, where there has to be a problem and then we are building something. And the problem can be solved by a plain vanilla scatter plot, or it can be a plain vanilla linear regression model. As long as it's solving the problem and we are delivering the solution in a particular span of time, that is what is productivity for me, as long as it's impacting the top line or the bottom line. And that's the principle we follow at Vivriti as well. There's obviously an effort element, because not everything is dependent on how much of effort you put, but at least you put in that sincere effort. And obviously there are outcomes. And for every team, we have different KPIs. You measure those KPIs, you break down those KPIs in various parts, and that's how you track and move forward with it.
Great. Over to you, Anand. I think I'll introduce him, but I think over to you first. Then when I have time, I'll come back to introduce.
Yeah, sure. So I think at Zolve, pretty similar, right? So again, more out of less. But again, the more fundamental aspect is getting the buy-in of the employees on what we mean by productivity. And, a lot of earlier understanding is that, hey, I put in a lot of effort and that should kind of be it. But again, to his point, effort and outcome, that's how we look at it. The largest significant focus on outcome versus effort. And just to give you an example, right, I have my credit and collections team, and they can have a productivity metric of, hey, how many calls do I do? Or how many messages do I send a day? But that doesn't really matter at the end of the day, because what really matters is how much dollars you have collected from the customer versus how many calls you have done. So it doesn't matter whether you do 100 calls and 10 messages and collect $1,000, or you do only 10 messages and collect $1,000. The ultimate outcome is the business outcome. Of course, from a hygiene perspective, it's important to maintain that kind of an effort outcome. At least tell them that, hey, you're expected to do so much, but keep them as a core part of the decision making. Hey, you let us know whether calling is working or not. Let us know if messaging is working or not. Okay, if calling is not working, should we change the script, right? So the way we again look at it is primarily outcome, effort as more of a hygiene.
Awesome. So Jatin, thank you for joining us finally. So I think first let's introduce yourself, your company and your role. then I'll ask you about productivity question.
Hello everyone, sorry for being a couple of minutes late. It's like the famous Bangalore traffic and the rain, but I'm Jatin. I head product at Axio. And our three most popular products are the buy now, pay later, for which we work with large e-com players, payment aggregators, and so on. The second product is personal loans. And third is the personal finance management app, where you can do your spend tracking and so on. This is what we do.
Perfect. So the way we started off is in the new buzzword is productivity and efficiency with the afterwakes of pandemic. So everybody asked them what is productivity for them and their company. So just wanted to know what is productivity for you and Axio.
Yeah, productivity essentially, as most of the folks have been saying, that how much effort you're putting on something and what is the outcome you get out of it is probably the plain simple thing. But I can maybe answer what all stuff we have been doing for different teams, right? Post-pandemic, I think mostly we have tried to make conversations async. Of course, using Slack and all that is hygiene, which I'm sure most of the companies must be doing, but we have taken it to the next level by, especially from the product management side, because a lot of stuff keep getting released and they keeping a meeting for an hour, everybody joins that meeting synchronously here and probably not able to think of all the questions in those meetings and then come back. We have started using tools such as Loom, where you can record it, your face comes, we talk about it, share the video, people comment on it, and they can think and then comment, and you continuously keep getting, you can have a better reach. People can go through that whenever they're free. So in teams like product team, we have done something like this. For tech team, we have changed our structure, in fact. So the unpopular thing is we have gone against sprint, which we feel is, in our opinion, is not productive at all, because you measure something to be done in 2 weeks. What we have done is we create a quarterly OKRs, and we are like, this is the list. Keep finishing stuff, keep picking up, keep finishing and keep picking up, and then continuously keep monitoring. Otherwise, managing sprint, what has to go in, what has to go out itself was taking a lot of bandwidth. And for teams such as sales and collections, there are dashboards internally, and a lot of stuff has been automated, right? So to your point, like in collections, like a case, depending on what is the value, what are the chances that the person is going to pay back, and so on, is how the case is assigned. It's not subjective left to a collection agent and so on to pick up a case. So we push that using algorithms, and that's how we are able to increase or improve the productivity.
Awesome. So I think the ideas are great. Everybody comes with new ideas to improve productivity, but the acceptance of the employees. So the way employer thinks productivity, the way employees accept, there is always a little bit of difference. And Karan, you mentioned about human element and tech element. So I wanted to know, how are you kind of managing this gap between your expectation to your team's understanding and kind of be on the same page?
So it's not easy, to be honest. I think everybody is always trying to achieve that. And that's why productivity or this whole process is a process. It's something where you need to get the buy-in. As I was saying, that at the end of the day, technology can only play a supplementary role. If the employee does not want to do something, he or she will not do it. So it's very important to put processes and systems in such a way that you get their buy-in. So I'll give you an example of one or two things that we do at Fisdom. So we have a training called First Time Manager Training at Fisdom. And the logic behind that is, this is across functions, sales, product. When you manage somebody, it's very important for the manager to be told that just because you're becoming somebody's manager, that doesn't mean you have to keep an eye on them. Or, the basic things of making sure that, they're supposed to do A, B, C. It's about having empathy. It's about, helping them. If you're able to get your managers or your middle level to also believe the same philosophy, then it trickles through the system. So I think that's one of the initiatives that we really focus a lot on, to make sure that we communicate to all the employees what is in it for them, why, and how does it help them. And then we ask them what are the tools which will help them deliver. So it's a process, as I said, that it's about constantly touching base, taking feedback. Sometimes, like I'll give you a classic example. in sales. And I've spent, a lot of time in a bank. I was with HSBC for almost a decade. And one of the things which every salesperson over there hated was the CRM system, because they had to come back and they had to enter into this system, which looked so like the color was gray. And, I can go on. But the fact is, nobody ever asked the salesperson that, how is this going to help you? So nobody ever saw that helping them. And that's why adoption was a problem and multiple other things. So it's very important to make sure that, one, you constantly touch base with your employees, speak to them, bring in tools which enable or help them eventually, because no matter what technology or what tool you get, it could be the best in the world. If adoption is not there, it means nothing. So I think the training, constant feedback, having a structured approach where, things like, I'm sure every organization does it, but it's a combination of it, from onboarding to making sure that once an employee comes on board, you tell them exactly what they're supposed to do, what is expected of them, and then what are the enablers for them. Then constantly touching base with them through town halls, through, mini workshops which happen. So it's a constant process. And then eventually, hopefully it leads to a state where the employee and the employer somewhat come on the same page, but there will always be gaps. And we have to understand we live in a world where it's not possible where everybody is on the same page. So that's how, we are trying to tackle this problem.
That's a very nice way of saying. And I picked that topic of onboarding. I think, Mohan, to you, I think any organization, it's a very overwhelming time for a new employee to join a company. And I think everybody's smart enough, if they have a data to understand what they have to do, they will do it. The biggest challenge is don't know where to go to have the information in hand, either the project they're supposed to take continuation, or where do I start? So how are you kind of doing it today in Vibhriti from an ensuring that there is absolutely no delay from an onboarding and time taken to learn and then continuation?
Sure. And it's a very non-glamorous solution originally, actually, from a data perspective. If I hire an analyst and tell him that, can you bring all the data together at one place and make the data available? And I don't tell him to build an XGBoost model, right? So it becomes a very non-glamorous solution, but it becomes, from a org perspective, it's an extremely, extremely important place to be in, right? What impacts productivity, how I have observed across organization, be it relationship managers who are dealing with clients, or be it people on the field who are trying to get new leads, is that everything that they want is not available to them at one place. So they have to log into, let's say, a Salesforce system, they have to log into an operation system, they have to log into a collection system. There are n different types of systems available. Some of the data is lying around in Excel sheets, especially true for a lot of companies that are just starting up and setting up their processes. So solving the problem of data availability for a new employee, especially, so that he doesn't or she doesn't have to go to 10 different places to get that information, becomes very, very critical. But for a data team, that's not a very cool solution to build, because what are they doing? They're just pulling the data together and maybe creating a visualization on top of it. And that's where a lot of conversations need to happen. A lot of incentive alignment has to happen, saying that this is what is driving the top line or the bottom line for the company. I'm bringing all the data together at one place so that someone doesn't have to spend a lot of time, energy, and effort looking for it, or take a decision for lack of data. I mean, that would be the worst thing to do, right? And secondly, just to add one point to your first question, when you said the employee and the employer, how they look at productivity and how they think things can help. So I was working for Mahindra Finance. This was about four years back. And we built a nice app so that people at the dealerships can create personas of the walk-ins at let's say a car dealership, and then talk to them, give them personalized messages. And the adoption was very, very low, right? And then I was sent on a field visit and I went to Chandauli. People who don't know Chandauli is in the eastern part of UP. And then I went to a sales rep and asked him, why are you not using the app? And that sales rep told me that, sir, mujhe mat sikhao. मैं customer को देख के पता कर लेता हूँ वो कार लेगा या नहीं. That's the answer. So your app is completely useless to me. And app was not useless because we knew that I'm providing data and those who are using it have ended up with higher productivity. And that's how you sell a solution, right? You cannot sell a solution from sitting in the headquarters. You have to go in the field and align the objective of the app with the incentive of the employee. And that's how we started driving it. We told the employees that you are going to achieve your target in 20 days instead of 25 days if you start using this app. And that's what intrigued them and pushed them to start using the app more and more. It was called Sales Genie. And then that's how the adoption picked up. And that is how you bring the incentives, you align the incentives, you solve the principal agent problem, and that's how you achieve the end result.
Awesome. And I'm a salesperson, and I can definitely feel the way how the salespeople are very proud and the way they do it. So Anand, with respect to the productivity, I know there is an old way of measuring and then the new way of measuring. So what is the structural changes that you're looking to bring in an organization to ensure that it is measured in the right way for the current scheme of things?
So I'll answer that with an example, right? So traditionally, if I take a function like customer support, they are measured on metrics like AHT, right? Average handling time. Fair enough, reasonable metric for a customer support agent, and maybe also maybe CSAT, they should be measured on that. But maybe for the product team or for the company, larger company, is AHT the right metric? We don't know, because see, our customers, at least our TG, are quite digitally savvy. They know how to work with tech and so on. So if a customer support agent can solve the problem, which means the customers themselves should have solved the problem in the first place. So we measure productivity by, or at least the target is to say, hey, we shouldn't get tickets. I don't want to measure AHT. We shouldn't get people on the chat. Instagram doesn't have a chat support. Right? I don't know LinkedIn has a chat support or not, Facebook has a chat support or not, but those companies don't have a chat support. Why should we have a chat support? Why can't customers solve problems themselves? So should a product be kick-ass enough to not let customers come to a chat? Right? That's how, I mean, it's not like I don't think it's impossible to have a situation where there are no customer support agents, especially we are a bank and, a lot of transactions happen on a real-time basis, but still, can we reduce focus on that, make customers solve the problem themselves rather than, having the chat agent measured on AHT and rating and so on and so forth. So that's the structural shift we are trying to bring, saying, hey, a product team or business team, figure out a product, you keep on a very real-time basis, keep seeing the feedback that you're getting, keep seeing the complaints that you're getting, change the product so that those complaints you don't get, right? So that's the way we are looking at structurally shifting how we look at productivity. Awesome.
So Jatin, I think every single panel today spoke about AI, GPT, etc. So I wanted to know, I mean, everybody's saying with the whole AI being there is going to be boost to a productivity. So what's your take on help of AI in boosting productivity? Are you looking at utilizing this in a whole new way in your organization today, or you're going on drawing board and how to look at AI in that sense?
So I 100% believe that AI eventually is gonna take productivity to the next level. There is no doubt about it. I believe we have to start embracing it. I feel most of us are not there yet. We are seeing a lot of cool demos and so on. And the issue is that the expectation is 100% sort of correctness. And that's where things are falling apart, right? So it's very weird to call ourselves humans while discussing AI, but I think the problem what we have with us is that when we give a person a task to do, we are okay if the person does some mistake. We in our mind think that, okay, this level of margin of error is okay. But when you're paying for a software, especially when you're paying, it's a paid software, then the expectation that the output may not be 100% okay is like zero. So that's where when you get an output and it's not perfect, we just like, it's not working, and we don't go back to it anymore. If we embrace it, be empathetic towards it, that it just keep feeding in, machine learning models are going to improve themselves and the output is going to come. Eventually, one will get benefited a lot. Smaller examples are like this Loom example, what I was just talking yesterday. I was recording a video for one of the demos, and it just prompted me, do you want to delete your ums and ahs from what you're talking? And I just selected that and deleted all that. Instead, think of it, if I go play back all the, like a 3-4 minute video, keep hearing it, again redo it, like do it 10 times to make that perfect video of the demo what I was about to share. It would have taken me a lot of time. This is a smaller example, but places where I think it's going to work amazingly well, where you said generative AI. A lot of my friends are doing startup in this space. So this set of friends I know do a company called Vocalo. What they are trying to do is that they're trying to sell their product to VC firms, research analysts in the companies, where, and I tried the demo myself, it's magic. Basically, you have to go to the tool, write down exactly what you are looking out for in a certain space. So for example, I just write competitive analysis in buy now, pay later in India. It gives me an options, what all companies you want to include, what all companies you want to exclude. It's search first, that is search. I say, okay, exclude these and so on. These are the parameters which we will be analyzing on. Are there more you want to add or reduce? I did that. 3-4 questions. I say generate. In 2 minutes, it generated a PowerPoint presentation generated, not searched and filled. It's real content. 95% of that was 100% correct. 5% there were issues and errors. But I feel if this work was supposed to be done by an analyst, it would take at least a week time to create that report. Now it's a good starting point for them, that it gives them a structure of thought that, okay, this is there, and now they can deep dive, now they can evaluate and see. So this is something which is live. I've seen that working. So just think of it, what is live now, and like in a decade's time where we will be, right?
Yeah, I think to that point, I think from Slack point of view, we have something called as Midas bot, which we have built, which essentially I as a salesperson have to waste time to understand what is the usage like with my customer, where are they using, how much they spend, how much messages are sending, how much integration are they doing. It would take maybe 3-4 hours to do that. But this Midas bot that they have built, we just input the account, the information, it gives us in next 10 minutes. It's presentation ready for me to go and present to the customer, but basically saves a lot of time. With that, I think I want to ask Karan, from what are you thinking from GPT point of view, from productivity? How are you looking at interested to use this technology from productivity boost?
So firstly, I think it's really, really exciting. I think, as Jatin said, we haven't even scratched the surface. So there was a report, I think from Slack itself, which spoke about that amongst all the developing countries, adoption of AI in the workspace. And I didn't expect India actually ranks the highest amongst all the countries, which was really surprising to see, because I actually didn't think that would be the fact. But when I see it in our own workspace, there are certain functions or departments where the use cases for AI is far more straightforward. So our marketing content team has been using different tools on AI. Our engineering team has been, but what we've realized, it's the employees who are early adopters themselves who are actually taking this path. It's not necessary that it's every single function which has a structural approach to it. What organizations need to do now is to bring in a structural approach for different departments, because every department has a different requirement which will come in. But productivity, if there's anything which is going to give it a boost, it is AI for sure. I think what we are seeing today, and maybe we don't even have to wait for a decade. Decade is too long when it comes to AI. Maybe the next 2 or 3 years, what we know of productivity and at an employee and an employer relationship and everything put together will be completely different. And as organizations, one, you have to be open to change, because a lot of times people feel, oh, there's that fear that it'll replace people. When internet came in, I'm pretty sure it was the same thought process, and look at where it's got us now. So AI needs to be, the use cases for AI needs to be understood. It has to be programmed in such a way that even somebody who's not an early adopter is actually able to kind of come in and use the tools. And the future looks really, really exciting with AI in place.
Awesome. So the data scientist, I think you will have more use cases than the...
Yeah, I can actually talk about a LLM use case. So we, as I mentioned, that Vivriti Capital is an NBFC, and we are into B2B business. So we lend to mid corporates, right? And these are large ticket size loans in the range of 15 crores, 20 crores, 25 crores, all the way up to 100 crores. So now how does a typical process work, right? It's very different from a B2C business. So in a B2B business, what happens is You identify a lead, identify the need, the kind of product do they need. Then you talk to the sales team. They collect the application forms. The operation teams get involved. Then if the company's organization is interested, the risk and the credit team will go there, take notes, do the due diligence, the DD process happens. Then again, operation teams get involved. And then a CIR, a credit note is created, which is presented to the credit committee, which is like the CFO, CEO, and the chief risk officer. And then they take a call on a loan by loan basis, whether this loan should be approved or not. Now, our strategy or our way to get new sort of customers is we are going to do this process in a much faster manner than a typical bank does, right? That's my that's the edge that I have over banks. Now, this entire thing, even after doing it in a much faster way, takes about let's say 3 weeks. And the most of the time it's spent on creating that credit note, which is like a 40 to 50 page document, which is all the information that is there probably in Tableau dashboards or in the notes that was taken during a due diligence process. So Tableau dashboard will have like the P&L statement, the balance sheets, the cash flow, and all these details, right? But bringing all the data together is now being done by, let's say, by a chartered accountant, by a team, by a sales team, and then they prepare their 40-page document where they talk about all the things that company is doing and whether a recommendation, whether the loan should be approved or not. Now, can I, because all the data is there, all the notes are there, everything is in English, can I build that CIR, Credit Information Report, or Credit Note, Credit Committee in 7 minutes instead of 7 days or 14 days, right? Now, with the same set of employees, I will be able to scale, right? Right now, I have 100 employees who can cater to maybe 200 companies just because the entire process takes 2 to 3 weeks. Now I'll be able to cater to probably thousands or maybe 5,000 companies with the same set of employees. And imagine where my productivity goes. Just because the entire process, because it is so mundane, right? Creating the credit note process, it's a standard process that can be very easily automated and a summary can be written. And this is something we'll genuinely try once we have the systems and processes. As I said, we are building the base. So my data engineers are building the base for something like this to be done. And once this is done, the credit note process is automated. I'm hoping, and we are hoping that it's going to be revolutionary.
Awesome. I think it's an ocean to uncover so many use cases. Yeah. Same question to you as well. How are you looking at AI?
So we are looking at it in 2 dimensions. One is internally how we use it and how do we build some customer facing features using AI, right? So internally, at least ChatGPT has been quite useful. We are, I think, fairly advanced in terms of how we use ChatGPT. I think the one tip is that think of ChatGPT as a very smart new employee you have, who you need to give some more context in terms of what you need, and then you will get it, right? So we actually spend a lot of time on the prompt. Sometimes my prompts are like 10 lines, and it analyzes and gives the output that we need. Like, even for example, we wanted to create a product marketing video, right? And a character animated video. And we were thinking of different scripts. So I got 5 options in 5 minutes. And we could mix and match and come up with a very good script, which was like a professional storyboarder director would have made, right? So we are using it for push notifications to say, hey, give me 10 options. I might not use the exact notification, I'll mix and match. I'll say, give me WhatsApp messages that are quirky, give me WhatsApp messages that are formal. So spend a lot of time on the prompt. So sales team, marketing team, creative team, content team started using that. Similarly, Midjourney and DALL-E to get some understanding of what kind of illustrations that we could use. That is on the internal side. On the external side, as I think Hina mentioned in the previous session about Minty, right? So we've created something called a ZAI. So we have fed in all our chat history from the past, all our FAQs from the past. And so we've created a tool where customers can just come and say, hey, I need to pay a bill. And it'll directly take them to the bill pay. Hey, I need to file a dispute. So let them file a dispute then and there, right? So that we have done, that we have launched. And it just took us like 3-4 days of engineering effort to do that. Wouldn't say it's most refined yet. It's learning and it's building, but we are also using it to create features for the customer.
Awesome. I think I want to add my ChatGPT use case, and absolutely salesperson, and most of the time I spend in reaching out to customer and being contextual, and we end up writing really, really big mails. And what I do is basically I draft my first and put across ensure, tell that ChatGPT, can you please concise this for me and be more contextual with that. It has saved so much of time. I mean, it's unbelievable. I think before I move on and keep asking this question, we have another 3 minutes. Anybody in the audience have any question to the panel? Okay, no questions. All right. So I think as a any final remarks, I'll leave that up to you. And that's pretty much it for today. And I think one important thing what Karan brought is balancing between the human element and the tech element and bringing this in the same page. And it's an ongoing journey, not a destination. And that's pretty much what productivity is going to be to uncover. Any final thoughts, please go ahead.
Just one other thought is that speed is underlying to all of this. So, I mean, I used to be in consulting before this and it was always on speed. So here in FinTech, because the organizations, we are smaller in nature. And to his point, if the employees are aligned in terms of what is the larger outcome and larger goal, let's say, hey, you want to do an experiment, no long decks, no large decks, all of that. Product team also, we don't build anything till it's verified. So, hey, do something in forms or do it manually, doesn't matter. We have Metabase, everyone has access to data. One of the first things that we do is we teach people how to write SQL queries. So anyone in the organization can write a SQL query and the data is on Metabase, dashboards are there. You want to run an experiment, run it for 3-4 days. We know it's working, not working, it's working, move it to the product team, move to the engineering team to build a feature, otherwise drop it, right? So we focus a lot on speed, which is underlying to all of this.
Awesome.
Yeah, I would just like to put my closing comments around the elephant in the room, which are the regulators. So we are in the area of FinTech. And as we drive towards productivity at a great speed, I think everyone has to ensure that we are not on the other side when it comes to regulators. They are very, very active, very, very evolved, and they are coming up with new set of regulations. I think very recently they came up something around co-lending. And that's what we have to ensure. If the regulator says you have to visit, you have to write the credit note on your own, then probably it can be an assisted model. But the end point is that we have to adhere to the regulations, and all the productivity efforts has to be within the confines of what the regulator set up for us.
Awesome. Karan, any final thoughts?
Yeah, so I think, you kind of stole my words. That is exactly what my personal belief also is, that it's about taking everybody along, making everybody understand what their role is and how to go about it. And productivity then has to be layered with the right tools, with the right systems, which helps in communication, data sharing. And then is when you're able to actually get more with less. Otherwise, it's a constant battle. And, about Mohan talking about regulators, I think one thing which I must mention is that because the pace of change in the fintech industry is so crazy in India, most of the regulators, or at least the ones that we deal with, SEBI and others, I have never seen more active regulators in any part of the world. It's a scenario where on a weekly basis, there are maybe 5 to 6 different circulars which come out. And sometimes you're a little worried that the regulator is actually ahead of some of the fintechs. So till the time that doesn't become a reality and the fintechs or the banks and financial institutions are able to kind of be a step ahead, because the regulator's job is more to protect the overall growth in a structured manner. So it's not to derail anybody, but it's about to take care of the smallest denominator, which would be maybe the end customer, or depending on which process it comes. So yeah, so exciting times, and productivity is the journey. It's only going to continue. So yeah.
I'm quite fascinated by the technology, where I see the same technologies used in so different ways. Like the example, what you said, you use ChatGPT to make the email concise. And I don't know if you have seen Google I/O, where Sundar showed a demo using BART. They said a frustrated customer who is trying to escalate to an airlines and looking for refund, the email got auto-created, and they're like, can you elaborate it and make it slightly larger? Because the longer the email, chances of getting the refund are higher. So using the same technology, it can be used both ways. And in addition to tech itself, I see a lot of companies such as Slack, you guys have been doing a phenomenal job, where a lot of companies are working on tech, but with minor tweaks. The entire huddle feature, somebody goes out, the jazz music it plays. These software things also, I feel, makes work quite productive.
Thank you very much, all. I think that's about it. So thank you. Have a great evening.
So much for that wonderful panel discussion, and ma'am for stepping in at last moment to moderate it. Very interesting perspectives on AI and productivity and the changes we can see possibly even in the next 2 to 3 years. And I really like what Anand said about think of ChatGPT as your smartest employee. I think a lot of us identify with that sentiment. And now moving on to our next panel discussion, from the future of productivity to the future of money, digital currency versus crypto, moderated by Siddharth Durba, Director, KPMG India. Our panelists include Vikram Nikam, founder and CEO, InstaCrypto, Satvik Vishwanath, co-founder and CEO, Unocoin, Medha B. De Roy, head Brandcoms, Qcoin India, and Edul Patel, CEO and co-founder at Mudrex. Please join us on stage, our panelists, and of course, our moderator as well. A big round of applause for our previous panel and of course, the panel that joins us as well. Can we have a round of applause, everyone? We can do better than that, please.
Okay, we're going to make it try a little bit different. It's going to be interesting one. Okay, how many of you have actually tried the Indian digital rupee, the digital CBDC? How many of you? Can you just raise your hands? Okay, one. Anybody else? You would have used it anyways. You don't, it doesn't, we don't count people on the stage. Okay, at least what you can definitely do is the CBDC has been out. You guys can actually start transacting at a couple of Reliance outlets soon. So we will be talking about what's happening in crypto. There's a lot of negative buzz around it, but at the same time, a lot of large financial institutions are actually investing in it. We'll also talk about stable coins. We'll talk about the digital rupee. How does it change? How does it impact corporates? How does it impact you, right? So this is going to be interesting. So we have a very power-packed panel here. So I'll probably start off with some of the very initial people who actually started off with crypto in India. So I think we've got Vikram, Satvik, who've actually dealt with blockchain, crypto for since ages, since its inception almost, I would say. And we have got an international perspective. Medha has flown down from London for this session. Thanks, Medha. Edul, thanks for making it in this tough, let's say, traffic as well. So probably if we were to start off with what's your current view of crypto, the crypto markets? Because if you talk about the evolution of money, CBDC, etc., it started off because of crypto, right? As well as it's an asset class which is equally feared. People are interested, and almost millions of people in India have actually invested it. Some have made money, some have lost money. So it's best to hear from you in terms of what do you believe is the current status of the crypto market? What's happening? Probably we'll start with you, Satvik.
Yeah, sure. Thank you. See, I think whenever we talk about crypto market, we very closely relate it with the price of different cryptos. Okay. So I believe that is not the way you should be looking at it as. It's more about what is that the crypto is bringing to the table. What is that cryptos like Bitcoin is bringing to the table? It is about a fast and free mechanism of transfer of money from anywhere to anywhere in the world, just like how we use WhatsApp for sending out messages, etc. So if this particular concept is useful, then it has some value, and that's exactly the value that is being captured as the price of these kinds of cryptos, because there is no company which is doing it. It is the crypto itself which is running on the network to make it happen. So, but however, when we start seeing it at the price point of view, I think there is obviously we will have the bullish and bearish cycles. Nowadays, it more look like the stabilizer time, and this is definitely not the first. At least I'm looking at this, probably the third one. So ups and downs are comparatively common, and if we believe in the concept of how this can revolutionize the payments and even the investments and savings, I think this will continue to have its value. But it is usually the market eventually that will determine it. So yeah, the plus and minus should be expected. Usually this kind of trend will be followed by the bullish trend. Yeah.
Awesome. Thanks for that. So I think the two key takeaways from whatever you mentioned is it's another asset class, similar to how actually the stock market is volatile. Understand it, be a smart investor. Probably on that particular point, Vikram, if you want to talk about in terms of investor education, in terms of how should people actually look at crypto as an asset class,
And what is your thoughts in terms of how do you see this actually asset class moving forward? And also talk about a little bit about what stable coins are as well.
Sure. Actually, crypto is a very big topic in that if you want to talk about the asset part of it, yes, all cryptos are an asset. The gold 2.0, Bitcoin's second name is gold 2.0. It's been there since 2010 for a reason, because when the world has seen people are putting funds away in a lot of things, why not into crypto also? So they just made Bitcoin also as an asset class. But if you see in economics, what has been the real assets? Real asset. I'm not talking about just any asset people nowadays store their wealth in, store their black money in, not that. The real asset is gold. Why do I say that? Is because if something is really used very well, like it is the real use case is in payments and settlements and value transfer, it's widely accepted, automatically it becomes your asset. Because that's what, because it's used so easily and widely, you would hold more of it and automatically becomes a store of value and as an asset. So most cryptos are assets in itself, but what cryptos are really well used? What can be the history? What can be the future of crypto that is going to be a good asset? For me, I think a lot of people here may not agree, it's Bitcoin Cash. Because what Bitcoin Cash does is actually works exactly like how UPI works for India. What do I mean by UPI works for India? Indian UPI is getting exported, right? But we can definitely use UPI in other places. But then try and understand, UPI is actually only for India. Even if it moves abroad, it will move abroad and it'll stay in that country. And within that country's banking system, it will work. But we cannot sit here and usually send abroad. So if it boils down to financial inclusion. So we were all talking about bringing people out of bringing out of the situation and including them into the financial sector. Do you know we all are in that situation? How do we all are in the situation? Can our UPIs take us abroad? Absolutely not. We are only local here. With UPI, we do great communication with money, but within India. But what does take us abroad? It's going to be crypto in the future. So CBDCs will come in and help people understand there is better than what is CBDC available outside there, which is a decentralized crypto. And eventually, once we use those cryptos, they're going to be an asset class. Well, Bitcoin is a great asset class, people call it. It is sluggish to move. It's going to cost a lot of money, just like how we move a big chunk of gold or a good painting. It's going to cost. Right. This is exactly how Bitcoin is. But the future of how payments is going to be and eventually going to settle as a good asset will be cryptocurrency, which is called Bitcoin Cash.
Okay, that's a different perspective. Thanks for that. Probably moving on from crypto in terms of the regulatory landscape. You've joined us from all the way from UK, and you're seeing there's a lot of action in terms of regulatory action in the Americas, as well as a lot of, let's say, forward-looking regulators. So you want to talk about how you're seeing the regulatory landscape, MiCA, as well as what's happening in UAE. You want to talk a little bit about that? And we'll soon jump into CBDC after that. But this is something which is very important for people to know in terms of what is crypto, as well as how regulatory landscape is changing and how big banks are also looking at this as an asset class while we talk about digital currency as well. Over to you, Mika.
Hi, thank you for the question. I mean, it's a loaded question, and regulation is something that is constantly evolving. There's no one shoe kind of fits all sort of a strategy. In terms of KuCoin, I think we believe that we are taking the perspective of users first. That's why we call ourselves the People's Exchange. In that scenario, first we need to figure out why is regulation even necessary. Like just yesterday, we announced that we have mandated our KYC policy for all our users. While obviously some traders won't be comfortable with it, but there are certain things that we need to adhere to when it comes to combating money laundering issues that we are facing, or in terms of finding the bad actors to kind of take valuable actions that are needed to secure more interest from investors, to have that kind of backing from them,
Sure.
Otherwise, we wouldn't see like financial institutions like BlackRock doubling down on crypto investment, or MicroStrategy just recently has a investment of, I think $4.3 billion in Bitcoin. So all these even MasterCard, as a matter of fact, they have even contributed towards, putting their money behind crypto to figure out a strategy.
That's again validating some bit of the ideas that Vikram was giving, right, in terms of settlement and others. We'll come to settlement systems later. But I think you made a good point there.
Yeah, and I think the overall objective, even for MICA, is also to structure the whole asset for market integrity, as well as kind of ensure that we do KYC policies more strictly.
Sure.
I think that kind of shapes up the confidence of, how we, look at money evolving, the concept of money evolving over the years.
Okay.
We're not saying that we're here to replace currency on fiat currencies. We are just saying that there's an alternate asset where people have the opportunity to kind of diversify their investment portfolio and also use it whenever there's a risk that, are,
Sure.
Nobody really reads about inflation and the concept of money in school, right? It's not very mainstreamed. It requires us to be more vocal about how kids and on the youth learn about how government and different, economies control inflation, and how are we supposed to be able to be more agile to learn about those concepts and stay ahead of the times. So I think
Sure.
those are the few things.
I'll probably just go to Edul, as well as I'll come back to Satvik on this. Edul, your views on this, as well as on, let's say, educating investors, somebody who's actually advising in terms of safe investments in this space. What is your perspective on regulations in this space right now? What's happening, and on investor education?
Yes, actually, on the regulatory side, the problem is that there is uncertainty. And what is happening is that as time is progressing, more and more certainty is coming out. Like, for example, with what's happening in the US, the one thing that I see definitely coming out of it is that a clear judgment of what can be done and what can't be done, and who's the regulator behind it. Whatever happens to Coinbase, Binance, etc., that might end up being secondary, but the action might end up being the primary driver of growth, right?
Sure.
And that's what we are looking for primarily across the world. We are looking at that happening as far away in the US and UK and Europe, as well as sitting here in India, right?
Sure.
So that's about regulations. And as regulations evolve, that builds trust. Trust helps investors also get more confidence. And that is one part of the investor education. But a lot of the other parts that we see, at least on a day-to-day basis, when we talk to our users, it turns out that people are just interested in answering 3 simple questions. Where should I invest? How much should I invest? What are taxes around it, right?
Okay.
And explaining to people where should you invest in context of what's their sort of financial health, how much should they participate in as compared to what is their opportunities, what are their savings, and so on and so forth. And then, of course, what are the tax implications of wherever they are investing, becomes really, really relevant and important for us.
Sure. No, thanks for that perspective. I think you wanted to add on to that.
Yeah. So I think first you have to think, why do we even need regulations, right? So the tech is already built in such a way that it follows its own rules, whatever is encoded in it, and everyone is accepting it, and it just works on its own, right? So, but we still have to consider, at the end of the day, we are citizens of a particular land, and the law of that land has to be honored. So what is legal maybe in Las Vegas is not legal here. What is the content that is that can be legally streamed in US? Some of that cannot be streamed here, etc. Right? So these regulators that we have in India have curated depending upon the mindset and the ability of people to understand and the ability of people to get conned, right? So based upon these kinds of factors, have coined specific rules set, which actually is the regulation. So it is usually rare that we have regulations much before the businesses itself have any kind of presence in the particular country. But when it comes to crypto, I think it has at least been 10 years and we still lack a couple of things, couple of clarity is still not given. But on the other side, if you see the brighter side of thing, is that out of say about 4 or 5 different things, which I would say will be required for something to be called regulated, we have achieved about 3 of them, right? So we have clarity on when we were doing advertisements, what we can tell and what we cannot tell, what kind of disclaimers are to be given. And then let's say if there is any kind of fraudulent activity that we see where we have to go and report it. Even 1 year ago, we could not report it, right? So if someone is doing the fraud, yeah, okay, fine, we understood this is fraud, then what do you do? So if it is banks, yes, they have a portal where they can actually go and report it, right? So, but now for cryptocurrency companies like Unocoin as well, now we are able to report it. And then comes the TDS and income tax. So before this, people are saying, okay, this can be a long-term and short-term capital gain, income from other sources. There's a direct income, indirect income. So there is so many different headings people were using. But now they said that, look, if you are doing any kind of transactions in crypto, you cannot offset the losses and all the profits have to be paid for 30% as income tax, right? So these kinds of things is actually bringing the confidence of people one step at a time. I'm not saying every particular regulation that we have is favorable for investors, but however, yeah, it's important that these exist. It is okay to not make 100 rupees, but if you are even making it 70 or 40, whatever you are making, it should not be kind of ambiguity of like how I did it, whether will I be in trouble after some time. So that should not be there. And that's exactly what the regulators have achieved so far. Only one thing I think which could also be helpful is if they say that, okay, this is a digital commodity, so it don't fall under equity or commodity or anything, it's a separate. So that kind of like the classification probably will be helpful, just so we know that what to expect from it, what not to expect, where we fall under, who is our eventual main regulator, right?
Right. So just on that point, I think the regulatory landscape is also evolving. So you have forward-looking regulators in Asia Pacific, also in UAE, Thailand, Singapore, etc., which have come out with very clear guidelines, and that has actually allowed corporate treasuries and others also to invest into crypto as an asset class. And in remote places where the payment systems are not great, like you mentioned, technology innovation in this space is actually helping the settlement systems and others. And then you have regulated platforms like Mudrex, KuCoin, etc., who are actually helping in this particular space. So just a point on investor education, because that's something that all of you are dealing with, probably in terms of comms. You're a comms person. So how do you see in terms of sending that out, post which we are jumping into CBDC?
I think after the FTX collapse, every exchange in the world kind of geared up to figure out what can be done to kind of gain back the trust that they lost. But to be honest, the FTX problem was not really like a exchange or a crypto problem. To be completely transparent with users, we practice proof of reserves. And of course, that has to be done in a way which, you know, being a global exchange with so many tokens, it's very hard to kind of go on a full spree of auditing to figure out the reserves. But we do that as a practice on a monthly basis so that they know that the assets are collateralized. We also run several investor protection campaigns, such as Think Before You Invest.
Sure.
So we believe that there are every kind of users out there, the uneducated, the unbanked, the, you know, the people who don't even have access to regular banking, services. So how do we end up reaching out to those people and ensure that they are not a part of a FUD? FUD is one of the biggest thing that we usually, face, which we are not really scared of anymore. It's become like a habit of ensuring that we communicate effectively on a regular basis. And history is there to tell that how KuCoin has managed those, effectively in terms of communicating with the community effectively at a real-time basis, being visible enough.
Clear communication, as well as, let's say, training, as well as investing in
And
investor education.
should be regularized.
Probably for someone who's actually advising people to invest in crypto, you have a structured way. He's an exchange, so your people will come and probably exchange. So in terms of products, how do you see products involving in this space? And do you do any risk screening so that people are actually investing only in something like, as you mentioned, the new gold, or not investing in meme coins and others where people have actually lost a lot of money? And specifically in India, we have seen a lot of fake exchanges. People have lost a lot of money due to fraud, etc., which has happened. People promising abnormal returns. In a country like India, where I think returns are typically, people are afraid of investing in stock markets as well. So they've invested in this space. So what are your views on that in terms of screening risk or having a risk-based approach for investment?
Of course. So I think a large problem for a lot of our users is that there is a lot of content and they are not really sure what is the kind of content that they should consume and what is something that they should ignore. And we've constantly been building tools around it. So we've got an academy where people can learn. We just yesterday launched a product called Satoshi GPT, which is a AI bot that can help people understand what is a scam, what is not, what info is reliable, what is not, and get crisp, precise answers. So I think that part is something that we need to double down on. But at the same time, as you rightly mentioned, before we list products, we try and outline why is this product useful, what are the pros, what are the cons. When we create products for our users and our flagship product is a product called as CoinSets, where we've created these index/mutual fund style baskets that users can invest in. Over there, we have these different thematic baskets outlining the theme, and as a result, what are the pros and cons of this theme? Why should you invest in it, and so on and so forth.
Understood.
And I think this is really important just to get, just to set expectations of people right, and also to give them clarity as to where are they investing, what should they look at this, and from what perspective they should be looking at it as well.
Sure, thanks. Vikram, probably, I know you wanted to add on to that point. It's probably that, as well as in terms of, they didn't answer my question on stablecoin.
In a minute.
Yeah.
I'd like to get that investor help, there is very clear demarcation between crypto on an exchange and crypto that you hold it by yourself. So for any level of investor or any level of buyer and user of crypto, I always promote, it's not like I do it, my exchange also does the same. InstaCrypto is a non-custodial platform. That means if you come and use InstaCrypto, we're not holding your crypto. We don't want to hold your crypto because the history has shown clearly people who holding crypto for other person, they usually lose it for internal hacking, external hacking. A lot of things happen. Very, very few companies have held on to the crypto. I would say my first startup, Uno Coin, that I founded and got Satvik in. So one of the first ones, and still holding those crypto, but a lot of others came and left. The reason they left is because they lost investors' crypto. FTX is a great example. And for that reason, we actually bring in little bit of guidance to our users. We guide them, and we even bring them, supporting documents and wallets and everything to educate them to hold your own crypto. We don't want to promote you to hold lots of value crypto. Small amounts, hold it yourself. You will learn, and you will be more confident about your own asset.
And probably as a practitioner, I can tell you that securing exchanges, securing smart contracts, your basics of cybersecurity, investor protection, those are all critical for exchanges to actually safeguard investor interest. So I think multiple regulators are working on it, and it's an interesting space to be in. Probably, I think you wanted to make a last point on that, and I'm going to jump into settlement systems and how digital money impacts people.
Yeah. So when we talk about products in and around crypto, so generally the company like ours, we just say that do your research and then buy whatever you want to buy. But it may be like a simple thing for us to say, but we also understand there is a lot of complication and also the time and efforts required by a normal retail investor who may be investing very small amounts of money, which is more like a disposable income, because we also tell that only invest whatever you are prepared to lose. So obviously they are not going all in most of the times. And the amount of time they can spend to research and also to understand the technology behind it, people behind it, community behind it, roadmap of it, tokenomics, there is like way too much of things. So I think there is some part of the responsibility, even though it's not like legal responsibility, but it's more like moral responsibility, which the exchanges take up to say that, okay, I have done at least one round of research. I am providing this product to you, which should be somehow understandable. And I'll continue to make it more and more user-friendly for you in nature, and you can attempt taking a bet on it, right? So I think this definitely is like super important. I have seen exchanges who don't give a damn about whether it is right or wrong. They just want users to take that particular call. But there are some, like at least Uno Coin, which put some efforts to make the first round of screening. So this, I think, will reduce the burden of how much of the education that the investors need to have themselves. And even if they don't, at least the percentage of them getting into the losses actually greatly reduce. But on the other side, yeah, we as well continue to write a lot of blogs, newsletters, send out emails about various things that continue to happen and whatever is happening around crypto in India and across the world. So that should to some extent keep them informed. But however, if there is a bull run, media will actually go all in to educate you everything you need anyway. So
sure. So self-regulation as well as risk-based investment and it's a new goal. Plus, it may also be considered for value exchange in countries where the payment systems, etc., are not great. So there's new tech. So this technology has been the, let's say, harbinger of digital money or central bank digital currency. So CBDC, as we know it, or digital currency, is of two forms, right? Retail and wholesale. So probably would one of you want to take, maybe we'll start off with you in terms of how would you want to describe what retail CBDC is vis-a-vis what wholesale CBDC is?
Can I take that just about what is CBDC versus crypto,
Sure.
like as we have the point. So your CBDC is your central bank digital currency, nothing but a digital currency where, governments can control it. And eventually it's all going to be a centralized CBDC. What is the advantage of CBDC? I would say once you bring in CBDC, the advantage of people learning about crypto is big. So that's a great advantage, I would think. Bring in CBDC and your own CBDC, that's when you realize it's much more easier to communicate with people from the government level. So the government level right now, they're doing it directly to your bank accounts. So that's what they did in the last 10 years. And the next 10 years, when you bring in a CBDC, you don't even need many middlemen, and you can directly communicate with people. But then this is what government can do through CBDC, right? What can people do to people, like peer-to-peer? That's what we got Bitcoin. And that's how crypto makes the change. And it's a far superior CBDC than a government-run CBDC. We will only know about this in a few years down the line. We will not be able to really put a point there and then say what is better. With time, we will be able to tell what crypto brings in. Crypto brings in a far superior CBDC than what governments can roll out. But I don't want to say that government should not, but government should roll out, and that's what gives a lot of knowledge to the people.
So probably just on the focusing again on the aspect in terms of what can happen, right? In terms of the multiple use cases that we are seeing. So another industry use cases, we'll see a lot of tokenization of real world assets. So if one of you would also want to talk about tokenization in terms of how will we see, let's say, real estate or other illiquid assets being brought about and a secondary market being created around it. And also on the point that the settlement system will also greatly benefit because we may move from T+1 that we are currently at, which is better than in many countries in terms of security settlement. We may move towards T. So probably if you would want to touch upon the aspect of.
I can do a quick one on the CBDC, your tokenization. There is, when you believe into tokenization, you have to use a blockchain and then use that particular tokenization to support your work or your company shares. So you can do a lot of things with the tokenization. But what blockchain do you want to believe in? You want to pick up the token from a blockchain that is going to survive. One of the blockchains that's going to survive, it has to be a decentralized blockchain. Any centralized blockchain will die and will be killed by the US government or Indian government. One of them will come down hard on you and then take down the coin. So your blockchain is gone. So to make sure what blockchain to choose, try and choose a decentralized blockchain. The top one right now is at Bitcoin Cash, and then Bitcoin, Litecoin, and Ethereum has also moved away from being quite a bit of decentralized to staking. So the core idea of tokenization should be what chain do you pick up the token from? So just make sure the token is decentralized token.
Probably to the other players as well. Satwik.
Yeah. So when we are talking about tokenization of real assets, so for time being, there is of course a lot of hurdles when it comes to legality, but I only want to talk about the technology aspect of it, right? So what is this blockchain all about, and what was it capable of achieving? What is it capable of achieving? If you see, it is simply a ledger where the debits and credits are getting recorded, but it is not owned by one particular entity or country or regulator, but is distributed, right? So which is like a decentralized blockchain, whatever we call it as. So the moment we say decentralized in nature, then it is only bound by the rules that you write on day one about how it is supposed to work. And if you need to do any kind of upgradation, then more than 51% of the people have to agree so that there is a new rule that can be passed. So now comes, let's say, the real world asset. The first thing probably we can talk about is real estate. Then we can talk about paintings, could be diamonds, etc. So when it comes to real estate itself, right? So today there is significant amount of friction to validate the ownership of a particular land. And then whenever there is a need for doing the transfers. Now, the people who are capable of buying the entire land or entire piece of land may undergo this because it's part of the entire buying process. But now think about how do you expose comparatively a retail people who want to take exposure of say 10,000 rupees or something like that into something like a real estate, right? So using a technology like blockchain, it's definitely possible. So what usually people are trying to do, which still again, like I said, there is some legal complicated angle to it, but however, keeping that aside, so they can literally say, okay, I'm trying to buy this particular building, and they create one limited liability partnership or firm like that, and transfer that particular asset into that firm and make that firm liable for taking care of that particular building. And for that particular building, they issue the tokens, which can actually be purchased by different investors. So some of them are even going to an extent that it can only be transferred between approved parties who are KYC verified. And now people are able to buy a smaller ownership of this kind of assets. And even there are more assets like that, people are even able to swap among it, etc. Right?
So just on that particular point, so SEBI has actually come up with guidelines around fractional ownership of securities as well as guidelines on REITs, because we're seeing multiple platforms and startups in India who actually looking at this as a major opportunity. So it's not only a new asset class, but it's an opportunity for FinTechs and others to invest, and also for retail investors to actually broad base their investments also. Thank you for that, both of you. Probably moving on to you, in terms of how do you see the future of money evolving? So you'll have CBDC, you've got stable coins, you've got crypto. What do you see happening in future?
I think it's definitely an interesting time to see so many things evolving. And I think all of it can coexist depending on going back to the philosophy of, what people really need. There are every class of investors. There can't be like one particular solution for all kinds of investors. There will be people who have no idea or they're sitting on the fence because they don't want to invest in crypto because they feel it's all like a gimmicky thing where it's not backed by the government. There are certain fears like that. But I think with CBDC, if it's built on the blockchain technology, probably there'll be a smoother way of transitioning into a mass adoption through centralized exchanges. Otherwise, people who are very comfortable with the sector, they will have decentralized exchanges or use, private wallets to kind of store their funds. It's to each their own, basically. Understanding your risk appetite, figuring out your investment strategy is a traditional way of going about your investments. But the fact of the matter is this sort of financial tool was not available before. And I think the pandemic kind of expedited the process of, learning more about how do you diversify your portfolio around
So
it.
the key messaging being, you see all of them coexisting, each having its own place. But as somebody who actually advises people in terms of how to invest, how do you see the future being? What is going to be the future?
No, so I think the purpose of all of these are very different. The purpose of a stable coin is to make sure that money moves into an asset that can be transferred instantly where there is low volatility of price. The purpose of store of value tokens like BTC are to store value. Then there are growth tokens and so on and so forth, which are like stocks. Their purpose is different. Their purpose is to invest for growth in the future. And then the purpose of CBDC is to make that fiat, that stable coin that you have, that is given and issued by a government, programmable, fungible, so that efficiency comes into this system of offering financial services. So of course, all of them can coexist. The purpose of their existence will itself be different. And I think the opportunity is exactly there where you can make sure that you're able to create these specific use cases and offer these different use cases to users for their specific problems across these products.
Awesome. I think thanks for that great session, everyone. We'll now open it up for questions. Any questions, anyone, in terms of capital markets or CBDC or crypto?
Hi, thanks for the great session. Question to Vikram. You'd mentioned that government decentralization or government CBDC might not be better as compared to, crypto. I'm not sure if I got it right, but I just wanted to understand the difference why a government-run decentralization in terms of currency might not be better as compared to what is out there.
The word government and decentralized, I didn't say it together. I said government and centralized.
Right.
So
Sorry,
if the government is releasing a CBDC value and a stable token, it has to be centralized because government is managing it. It's definitely going to help because it's going to help those which they couldn't really bring into the financial inclusion because there also you needed them to have a bank account and then UPI. That was a second layer in a way. With CBDC, it'll be a straight first layer. So government's central bank digital currency, which is eventually centralized, will be a great tool for a learning curve for how crypto is going to work in future. But once all of those people in India will get onto it, because straight from their phone, they are able to do it now. I know we have UPI, which works from the phone, but to work, you know, there has to be one bank account at the back. But with CBDC, you don't even need that. That'll help people from India go global, because then exchanges of our CBDC to Western CBDC will be instantly done online. We'll be able to start communicating with everybody globally with our, because that's what India wants, right? India has been growing so much. We grew because we have easy way of communicating with people with money, which is UPI. That helped us grow to a X amount of trillion. We want to increase that. How do we increase it? By being global, by being able to easily communicate and do, commerce with people around the world. So CBDC is going to definitely help that. Eventually, it will help crypto understanding. That's the great opportunity that's coming with CBDC is what I think.
Yeah. So my limited points here is that to understand CBDC, we should just understand, like, for example, we have Paytm as a company, which is a private company. I mean, just actually a public company. Right? So let's say if that is bought over by the government, right? So then it's essentially the government or the regulator below the government, which is the central bank, like Reserve Bank, which is trying to do the required rules and regulations of how someone can use that CBDC for. Okay. So why I think CBDC and crypto can coexist is because there are a lot of things where the transaction has to happen depending upon the instructions of the government or the way they want it, but not every transaction will be like that. So for example, see, for example, whenever, let's say, the bank give the loan, right? So to people, a lot of times there will be a specific use that that particular borrower have to use it for, right? So, but if you're using CBDC and you say that for this particular CBDC only it can be paid for X category of merchants, you just cannot use it for anything else, and you kind of restricted that at the technology level instead of taking it at the compliance level. So there it was a really good use case that they're able to achieve. And whenever, let's say, if the government have to issue now some kind of subsidies, right? So CBDC, I would still see the app, whatever you use, to be like a account, bank account kind of thing. But it may not be like really bank account. Whether you call it as a bank or not, it's up to the government and up to you. So if you both agree that it's not bank account, it's not bank account. It's as simple as that. But still, the same kind of debits and credits are possible, making it work like any other account. But like this, it will be able to restrict, track, help customers. I mean, to go online, that's the first thing. To understand how to do digital payments, that's the second thing. Anyway, we have really good access for smart mobile phones and internet. So that kind of adds up to it. And it's like a lot of people actually can speak English, understand English, or at least Hindi. So all of these things kind of positions India to actually be the front of this kind of experimentation like CBDC and crypto, making it go together. Yeah.
And just to add on to that, in terms of the number of CBDC projects which are going on across the region within ASPAC itself, there are more than 40 of them. There's a lot of work which is happening in terms of settlement using multilateral CBDC settlement swaps, etc. So you'll see faster money transfer, reduced cost of transfer of money. Also in terms of how does it impact. So in a country like where we already have UPI as well as the digital rupee will coexist. But in countries where they don't have faster payment systems and others, I think digital currency is a lifesaver in many cases. So it will continue to be a regulated space, but I think the innovation it's going to bring about in terms of capital markets for corporates and others also, it will be a game changer. So that is something that we'll definitely see in future.
So I think this comparison has come up a bunch of times. UPI and CBDC are not the same. UPI is just
it's not the same. So we are saying that faster payments in countries where there are no faster payments, with the advent of a digital currency there, the payment system is being transformed. That is the point that we're trying to make. In a country like India, so if you ask me, have I used digital currency in the last 3-4 months? I've had it since the last 4 months. It's only the first major retailer like Reliance which is actually going to be coming out with it. So with the adoption what I feel is the wholesale CBDC adoption may be more in the initial days. Retail CBDC adoption may come in a little bit later. As people see benefits, people start using it. But I think, as you rightly mentioned, all of these will coexist. Each one of them has got a different use case, a different market. So we'll see the advent of a new asset class in terms of tokenized products. Crypto is here to stay as well, because there are the likes of Goldman, BlackRock, all of them are investing as a specific asset class. But the need of the hour is clear regulation in terms of what is allowed, safeguarding user interests, as well as coming out with outlines in terms of cybersecurity requirements, anti-money laundering and others, which multiple exchanges are actually self-regulating. They are spending money in terms of protecting investor interests. And as Vikram mentioned, also in countries where there's no CBDC, there's no others also. So as a form of a virtual gold, people believe that encrypted, or let's say algorithmic money, is actually a proof of reserve, because at the end of the day, any central bank is promising you to pay. So these are all different views, but I think all of them are here to coexist. We are in for exciting times. So the way you use money, as well as the use cases that you will see, is going to be increasing. So thanks for an amazing evening, gentlemen, ladies and gentlemen, and have a great evening. Thank you.
For a lot of us in the audience, I think. So thank you so very much. And it's now time for our very last panel discussion of the day. And that is on transforming debt collections in today's digital age, moderated by Siddharth Padmanabhan, co-founder and CBO, NeoWise Technologies. Our panelists include Ajay Singh Jadaun, Senior Director, Risk and Collections, Unicards; Love Luthra, Head of Product, Creditization India; Karthikeyan Ramaswamy, CCO, Head Collections and Legal, Axio. Can I ask our panelists and our moderator to please join us on stage? A big round of applause for our last panelist and for our final panel of the day. I think we can put some energy into it, ladies and gentlemen. Thank you so very much.
Hi, very good evening to everybody. My name is Siddharth Padmanabhan. I'm the co-founder and chief business officer at NeoWise Technologies. We essentially build and take to market a lot of technology around debt recovery. We work with some leading FinTechs, and I'm really happy to be moderating a panel today in line with like a lot of sessions today. I felt like were overarching on, or rather, and rightly so, on regulation. Similarly, when it comes to even debt recovery or collections as a process, it's obviously one of the key areas that end up defining the success of any lending company, be that a fintech, NBFC, or a bank. I have with me today Ajay, who leads risk and collections at Uni. I also have with me Love Luthra from Creditization, who leads their product. And virtually, of course, joining us is Mr. Karthikeyan Ramaswamy, who is Chief Collections Officer at Axio, also leads up their collections as well as their legal team. So thanks, firstly, for joining me, all three of you. Just like we are the last moderated session for the day, collections or debt recovery often can be the last mile of that entire lending life cycle. And not to say that it's least important or anything, but my first question, and I'll leave it to any three of you to pick this up, is that would it be right to say or assume that collections is the backbone of success for any lending company?
Thanks, Sid. So certainly, collection in case of any lending company is as important as any other vertical, be it a product, be it a customer experience or risk. Collection does play an important role in company in terms of debt recovery, which at the end impacts the company's P&L. So there is an important component of credit loss in P&L, while there is a general view that risk, who does manage the P&L or credit loss. Myself being a risk and collection person, I can say that collection plays an equal or even more important role in managing the credit loss. So collection in such a way is a backbone for a lending company. And we have seen many examples, be it any lending banks now, be it a SDFC, be it a Bajaj Finance, whose stories we have heard that their strong collection units have helped them to build the business to this extent. In terms of fintech, it becomes more important, I will say, because fintech nowadays in the digital onboarding journey, during the entire journey of the customer onboarding or customer life cycle, via fintech, it is via mobile. Only touch point is via mobile. So other than mobile, the only touch point that is there between customer and the fintech is collection. Not a good one, but still that is collection. So collection then also becomes an important backbone to pass on the feedback from the customer to be a product or to be a risk. So that's how there are other advantage. There are additional advantage in case of fintech lending from the collection point of view.
Thanks, Ajay. I think very well on point. As I'll use a cliche here, it's very easy to lend out money, but very, very hard to get it back, right? So collections, I feel, is definitely the backbone of any good lending business. Now, of course, as product managers, as business folks, we all understand that getting business distribution is very, very important. But without the backing of a very strong collections process, and by very strong, I mean, first of all, preventing people from even going into collections. So essentially pre-bounce, all of those scenarios. And then from actually cutting the clutter for the actual collections folks, these gentlemen very ably manage. So essentially, this is where I feel the product engineering org sort of helps and becomes a partner to these gentlemen in order to manage this. And without an interplay between these two functions and also a function which is overarching amongst the two, which is like a sort of like a decisioning layer or a machine learning sort of a decisioning rule engine layer, it is impossible to scale a business in India in this day and age. Right.
Absolutely. And Karthikeyan, any thoughts?
Oh yeah, of course, mostly covered by both the gentlemen correctly. And I would, of course, echo the same thought as well, right? So yes, as this session is termed for the last in this forum, right? Similarly, collections also come in when in the last in the funnel of lending. Of course, as a lending, not only fintech for that matter, as a lending entity, there are two most important things that the lending entity needs to know, right? One, how to lend money; two, how to collect money. Of course, in that way, it is important, and there is a very a clear intertwine between risk and collections, which basically plays a critical part in how profitable that entity would be over a period of time.
Thank you for that. Your answer brings me to my next question, which is we've got different. I mean, all of you in your own roles contribute towards collections. Ajay, more from a risk perspective, collections operations. Love, you look at product for collections, and Karthikeyan, of course, looks at collections as well as legal. Now, we've always traditionally, like if you think of the big banks and NBFCs collecting money, by the time a loan goes to the collections team, they will probably say that this was poor credit assessment on behalf of the underwriting or risk team. Or the underwriting team may turn back to say that, hey, we underwrote that customer perfectly, but for whatever reason, the collections team isn't able to pick this up. So I'm sure you guys have also through your careers, maybe not in your current organization, seen that conflict somewhere. But do you feel like your organizations or modern day fintechs are able to bridge this gap better, work productively across these different teams you all form a part of?
I would
Yeah, go ahead.
maybe just pick that up. Sorry, love. Let me do that once. Yeah. So I guess I would rather turn it around saying I think how it's evolved now is it's actually to the benefit of the business. So what's happening now, and especially not only us, but I see that happening in a lot of companies nowadays is a very quick turnaround of information between collections and credit, right? And it's playing for the business now, and that's critical for business, especially in a fintech, is because considering that the products are getting innovative, the products are getting very dynamic. It's very important for the two teams to kind of play together and try and have a very quick turnaround time of being able to pass, as the panel already mentioned, that the only touch point to a customer in a fintech is collections, right? So in that way, we from collections we get a sense of what's not working, a sense of what is something that can be improved in the product, and that kind of plays quickly, because today it's kind of something that turns around very quickly and changes are done in the product. So I would rather view this point as a benefit to business now. Yes, there were times, and I could recollect where the two would lock horns, but off late, the way I see it is that the two play together, and it's good for business.
Absolutely. Love.
Yeah, echoing some of the same sentiments and adding two thoughts of my own. So I've been fortunate to be in organizations, and coincidentally, Karthikeyan and I also shared an organization where essentially we work as a unit in order to achieve business objectives. So we are all on OKRs, right? So essentially, the product, risk, collections, we all work together as a joint team to achieve the business outcome, right? Whether it is cost of collection reduction, collections efficiency, or reducing the NPAs, reducing flow rates, whatever it is, right? So that is the first point, which makes it very overall feedback driven, meaning that, okay, hey, if collections has a feedback that, okay, hey, why did you lend out to this guy, that serves as a feedback both to the risk person as well as the product person, that, okay, hey, maybe there is something that I can change in the product itself or rather than in the onboarding itself. And the same feedback can actually come to collections as well, that, okay, hey, maybe this is some for instance, in marketing or retargeting, these are some of the variables that we are using to reach out to the person, which is proving to be effective in getting them back into the funnel. Collections is a funnel in and of itself, right? So these are the things that can prove very, very effective in getting the person back into a collections funnel and thereby making recoveries easier. So yeah.
Thanks for that. Thanks for that. I have another question that actually, for any collections, compliance, risk person, addresses a very big elephant in the room, which is regulation. And then we've seen RBI come out with very clear regulations around collections, best practices, customer experience. There have been unfortunate incidents across the country for which these regulations may have come into place. And now that they're there, we've all got to, abide by them. There's no doubt about that. But traditionally, collections has always been known as baigiri business. I'm just going to state. How do you as FinTechs, ensure side of compliance? You are able to create that customer experience, but at the same time, create that urgency for that loan to be repaid. Could you think of, maybe without spilling your secret sauces, one or two things that you feel moves towards a more compliant direction for all of the FinTech world to follow?
Around collections were always there and were being followed by banks and lenders in a self-governance mode.
Yep.
But as you mentioned rightly that recently there have been some events and some unethical collection mode by some people, some agencies, and likewise because of that, regulators have to again rewrite those same compliance from a collection point of view. One way, even and especially from a FinTech point of view, it is good. All the compliance and regulations are are for good from a customer point of view as well as from a fintech point of view. Now there are clearly defined methods to collect, timelines to collect, ways to collect, helping us in a way to define a line of control for collection people, and in a way to drive a compliant collection method. In turn, that is also helping from a customer point of view, the unnecessary harassment that used to happen of the customer by agents. So we are able to control those harassment and give a better experience from a customer point of view. So that is a plus from a recent compliance point of view.
I would like to add to that as well. And good that you brought about this, right? So this is the big elephant in the room that everyone wants to talk about, right? Collection is actually known for incidents like this, which basically is very disheartening to hear. Actually, having said that, the way I look at it at this point, as we sit, in this gathering, is regulations is for a purpose, and the reason why they exist is something which kind of takes the whole business along. And we at Axio and the fintech, as the department that I represent for the fintechs is collection. So how we think about regulations is and overall as an entity is, it's very important for us to kind of think a little ahead of what the current regulation is. And let me give you an example for it. Now, one of the things that we have started doing is post a collection call, we will want to kind of take feedback from our customers and how that meeting was, and that's critical for us, considering the fact that even the products are evolving, right? So we are no more like give one product to a customer and be done with it, right? So we would want the customer to come back for more and more products. So it's not just important to wow the customer with your onboarding process, it's also important for you to kind of give them that first class treatment that you would want to give them throughout the process of lending, right? Which starts with the onboarding process, and at some stage kind of dips into collection, not necessarily for everyone, but wherever it does, you really want to give them that experience, and that's exactly what we would want to. So in my mind, we are a little ahead of it. Of course, we need to meet and ensure that we are exactly watertight when it comes to regulations. But I think we're a little ahead of that. We really are keeping customer in front and want to do it for them and kind of take it off from our heads that, that's the only way to collect. The way to collect is to basically try and explain for what and the reasons why the person needs to be paying on time.
Thank you. Thank you for that, sir. Your thoughts?
Yeah, maybe just Ken and Ajay are bang on. Just maybe one additional point, just to give an example, right? So the point of harassment that these two gentlemen brought about. So essentially, the even aware often if I'm being contacted by the right and one come, you will clearly tell people that these are the agencies or agents that may contact you in case you become delinquent, right? And keep the customers informed, right? It just becomes like at least one level of authentication that, okay, hey, I'm being contacted by the right person or the wrong person. So the person can at least know that, okay, if I follow what this person is saying, I'll actually pay the money back to the right people. Correct. Because it often happens because these guys are under a lot of stress that they probably pay to a wrong guy and the lender says, I never got my money back. Sorry, I have to still report you as delinquent. So some of these regulations are really, really bang on. Karthikeyan also pointed out that we need to be 1 or 2 steps ahead, perhaps, and in keeping the customer experience front and center, because not only does it have a P&L impact, it has a LTV
Absolutely.
impact as well. So yeah.
If you bring up a very, critical, which is often in that collection cycle, the more vintage that a loan gets, the customer experience goes for a toss. And that is, at least, if nothing, you probably may never get your money back, but also what you're also ensuring is never get that customer back. So I think, yeah, absolutely spot on with that point where collections doesn't only serve for the purpose of, great PNL, but also a great customer experience. Great point. And I think, just in continuation to that, as the scale of a lending operation increases, your loan book size increases. We are seeing some fintechs really, including all of the ones that you all work at, scale at extremely high rates right now. So, in a scenario such as this, how do you really, like, when it comes to collections, whether it's the, calling team or the legal team or the field agents that go out and collect money from customers' doorsteps, how do you all really look at in-house versus outsourcing? I'm sure there are pros and cons to both. Any thoughts that come to mind for in-house versus outsourcing your collections as a lending operation?
I'll take
Yeah,
that. It's you rightly said it, in the sense both play a critical role in and an organization needs to make that choice for the kind of business that it is in, right? So there is our collection infra, the infra that is built in the country with agencies. It is built for a certain set of loans. It is not built for the small ticket digitally sourced loans. So of course it's not going to be the same way. There would be entities that would come up. There are a few that are really showing promising signs of collections, and there would be some in the future that will come up which might fill in the agency gap that you have in digital collections. Having said that, I would like to take this question in a little different form, which is basically, would you like to do collections the traditional way where you go and physically meet customers, or would you like to do digital collections? And if I would have to answer something like that, what I would say is, if I'm going to source loans digitally, I would rather find a way to collect digitally as well. And that not only, kind of gels with the mindset of the customer when the person is trying to take a loan, but also is, cost effective for a digital lender like us. So that's critical for us to try and find ways to collect without actually physically meeting customers. And we've made like significant inroads in it, thanks to some of the best minds that work with us, right from Love when he was part of our team, plus the newer age teams that work with us, which basically create the right ecosystem for us to be able to collect digitally. Today, just to give you a statistic, around 70% of what we collect is without any human getting involved.
Wow.
And that's significant in my mind.
Absolutely.
Yeah, and echoing some of the same sentiments, but I'll probably take your first question, which is in-house versus outsource, right? So in my mind, I mean, the answer is that, okay, we should do enough in-house to ensure that we are not ourselves as an organization. We are keeping decisions centralized in terms of, okay, what to do when. But at the same time, there is no point. We are in a lending business. That is the primary business.
Correct.
Right. So there is, in my mind, no point in us reinventing the wheel. Right. The day and age when Karthikeyan and I built the system in-house, since then to today, we have seen a lot of folks emerge who are doing some really kick-ass stuff in the SaaS space. So the real answer is that you need to figure out what exactly is the best use of your time, and but at the same time keep in-house so that you can protect a vendor, and as an entity you can protect your customer data, which is important, and all of your policies, right?
Yeah.
And at the same time, don't reinvent the wheel and build everything which is out there. Explore first and then make the decision.
Thank you, Love.
So as rightly covered by Love and Karthikeyan, that it is good to have in-house capabilities which gives a better control. But one another point from tech point of view that most of these fintechs do come up with great product ideas, and they do like to focus on those more. On the other side, collection is a process heavy and manpower heavy
Absolutely. Yeah.
capabilities are involved in case of collections. And in such cases, a combined view of operating a collection with in-house controls and outsourced capabilities will work nicely from a fintech point of view. And nowadays, we do see that there are fintechs who are coming into a collection space like one of yours, which will have a similar kind of approach as a lending fintech do have in terms of collection experience and being around the compliance. That will give a more comfort to fintechs to go ahead with a hybrid model from a collection point of view.
Absolutely. I think I agree with you completely, Ajay. So, where there is scale, you will require a very large amount of manpower. And, having everyone on your own payroll may not be the most HRBP supported decision. So, you will go out, you will work with trusted partners, because I think even the partner ecosystem, the agency ecosystem within collections has been evolving over time. There are murmurs that certain large banks, for example, top 3 banks in the country, one of them asked one of their largest agencies to cease collections because they're not comfortable sharing data over Excel anymore. Or, they expect that there should be an integration, or there should be a file transfer protocol to move that customer information to the agency. So tech is and product is obviously playing a very important role here. Talking about tech product playing an important role in the world of debt recovery, any emerging trends or, any general outlook for the collections industry, leveraging technology, any good examples you've seen, anything that you all may be tinkering with or already doing as a company, anything to point out? Kush, maybe you can, Love, maybe you can start with this.
So, yeah, I think quite a lot of stuff happening in the space, and a couple of things which show early promise but aren't quite there yet are, for instance, the account aggregator ecosystem.
Correct.
So while it is in very, very nascent stages at this point in time, once it evolves, it gives, and while it has a very good use case already being explored in the PFM space, it has a very good use case already being explored in the underwriting space. The use case in collections is even more phenomenal.
Absolutely.
Because at the start of the journey itself, at the time of onboarding itself, you can explain to the customer that, hey, we'll need monitoring consent. And with that monitoring consent, you can, essentially, really, really personalized and predict
Correct.
where this customer is going to maybe miss a payment, or where is his preferred paying pattern coming across more better, so that you can be a bit more efficient with your calling, with your natch presentations and all of it. So this, I feel, is one. And the other one is that as a lot of the fintechs today, especially, and REs are also catching up, are collecting a lot of data about the customers, because they are not coming to the app for a loan per se. They are coming over for a transaction, and loan just becomes like an added facility.
Correct.
So all of this data, I think we are only scratching the surface when it comes to doing a huge amount of behavioral modeling on top of this. And that behavioral modeling then tying up very well with your collection strategies, policies, and your triggers, etc. And then reaching out, that informing when you reach out to the customer and ask them to give the money back, right? So these two, I feel, in my opinion at least, are.
Oh, absolutely. I think infinite
One
potential.
product that I'm really excited about in collections, just to add to what Love was saying, and I'm surprised why Love didn't talk about it. This is his favorite topic. I don't know why he didn't talk about it though. Anyways, I'm particularly excited about the man-machine collab that I'm seeing currently with the evolution of bots. These bots are a miracle thing for us, and the way they have kind of revolutionized the need to interact with the customer has been phenomenal, and which is one of the reasons why we've been able to kind of reduce human intervention in collections. And and they're like and not just because we want to reduce cost, it's more because you want to consistently communicate the same language to every customer, so the experience the customer gets the moment he misses a payment is exactly the same, and the bot doesn't kind of mince words between customers. It doesn't change tone and manner. It just exactly responds. And of course, intelligent bots which basically can learn from mistakes are just amazing. I'm super excited with this technology and the way this is panning out collections.
Absolutely. I think there is area for integration with AI in almost all aspects of lending and bots, and we're seeing most lenders use voice bots pretty aggressively at different stages of collections, modifying it to understand the user's language and respond in the same language. Similar use cases, so definitely infinite potential. Karthikeyan sir, it's interesting you say that this is one of Love's favorite topics, because before this session I was just spending 20 minutes telling him how it doesn't work for us. So and he agreed to everything I said at that point in time. But Ajay, any points you'd like to add?
So one of the immediate use cases, immediate outlook that I do see is, so one thing we need to understand that cases that flows to collection, a maximum of them are not intentional defaulter.
True.
There are different use cases and different reasons behind them, be it about understanding of the product, be it about their financial condition, be it about understanding of repayment or method of repayment or mode of repayment. We are moving into digital repayments, as Karthikeyan mentioned, that we would like to connect as much as possible digitally.
Correct.
Many of these customers, a significant set of these customers will repay, but they just need a different kind of nudge, different kind of connect via collection team. Now, identification of such customer can be done only by enabling the data, uses of data in terms of collection, and the tech that we build around collection. Tech in terms of right communication to customer at right time and by right method, and data to identify such different set of customers. So those we do see that fintechs are going to use in the immediate future largely to improve their collection, and as Karthikeyan mentioned, that by digitally, and then as a next step by telecalling or by physically. So those are the other outlook in terms of tech and data, and then AI, of course, the voice bot uses and other uses.
Would you, just a follow up to your response, Ajay, would you say that we're scratching the surface when it comes to the amount of technology available out there to enable debt recovery? Or do you feel that we've built everything out that we needed?
It's never enough.
It's never enough.
I will
Awesome.
say that,
and I think innovation will keep
that's right,
evolving the products we use, the methods we use to collect effectively.
Yeah, we have innovated towards lending, towards underwriting, towards product, and it's time to do more towards the collection methods.
Awesome. Before I open for questions, collection agents, I'm sure everyone here at some point in your lives has missed a payment accidentally, intentionally, hopefully accidentally, and received a call from someone who's reminding you to make that payment, or please go to the app and close out your overdues. It can often be a very thankless role for the agent. The person on the other side is not really waiting for you to call them and talk about how much they owe you. So I know organizations have been doing a lot to change the way that these agents are looked at, give them that kind of, the way all of us have been fortunate enough in corporate to have great workplaces. I see all large fintech organizations doing the same for people across the board without any kind of bias. But, just to end on a lighter note, do you feel like have you ever had a funny moment, with a customer or a caller that you'd like to call out in the due process of collections that you'd remember?
I think I should pick that up. So, of course, what we do is every time we introduce something, we open it up to a very small user group just to test it before we take it to customers at large. We really don't want them to see it first, right? Of course, it's the same way as what product does or what everyone does. So we had just introduced bot about 2-3 quarters ago, and the bot was pretty good according to me. So we had opened it up to some of our users, and the users were basically some of our collection staff and some employees of the company. So so the bot company also gives you back those recordings and those keywords for you to kind of interpret and try and make some changes. I mean, these are very early days. So there was a call that was particularly played back to me, and this was one of our regional collection managers. I mean, a fairly senior employee. The person didn't realize that it was a bot talking to him. It was like, "Who are you? Who are you from Axio calling me? Which part of the state are you in? I am the RCM of this." I mean, the person was on and on. I mean, the person didn't. I mean, I was on one hand very happy that the bot kind of literally disguised him. But having said that, it was very hilarious to kind of see and hear his reaction.
That's awesome. Hopefully, there'll come a point where a defaulting customer will never be able to tell a bot from a human being. And we'll have more of those instances where they actually feel like paying back because they're prompted. But any chance you all remember any instances offhand?
So generally from a collection agent's point of view, they do have some horrible experiences, generally, or sad experiences. One of the very basic funny experiences that agents do have, and especially who are new to credit, their response is like, "Oh, we had to repay also this. Your sales guy didn't tell us." No offense to sales guys, but it is generally it is more about the education thing, and where they say that you only offered us money, you never told us that you have to repay also. So, yeah.
Hopefully, Uni's not seeing too many of those.
Yeah.
Awesome. Thanks for that, everyone. It was a great chatting with you guys, some great insights and a lot of fun. I'll just quickly open up to the audience for questions. If any of you have any questions around debt recovery, collections. Yes, sir.
Sir, the NPA of the banks, private as well as public sector banks, specifically public sector banks, has been on the increase in the last few years, financial years. But this financial year, that is 22-23, the NPAs have come down for all the banks, irrespective whether it is private or public sector banks, by a few basis points. Does the credit goes to the fintech companies or to the RBI, who breathes on the neck of the shoulders of the chairmen of the banks?
I'll allow them to answer the question, but I'm just going to take RBI side on this.
So,
on a light, sorry, go ahead, please.
So I think it's a combined effort that has been there from the bank side, fintechs, and collection is on the bank side now. Risk and underwriting significantly, as you see, even for PSU banks and private banks. So with fintech coming into picture, with the new innovations coming into picture in case of underwriting are being now adopted by the PSUs and private bank, that has also played a significant role in controlling the NPAs along with the, as we say, RBI and collections effort.
Thank you for opening the can of worms.
Sir, my second question is that you leave the elephants and catch the flies. of NPAs. So what is your answer to that?
Sir, I think you should have faith in the banking system in the country. I think we've withstood pandemic, and it's not about leaving the elephants and catching the flies. There are enough laws that kind of regulate not only banks, NBFCs, but also fintechs. And I think all of us, lending entities, view customers alike and would like to treat them differently. I think that's the reason why we're having debates like this.
Thanks for that, Karthikeyan. I think with that, we're on. If we can take one more, absolutely.
Fine.
Would love to hear your thoughts on the litigation landscape and emerging concepts like online dispute resolution.
We do have a head of legal in the panel.
Thank
here.
you. Thank you for that question. Actually, very interesting question. And it's very relevant and pertinent in this time and era. So we at Axio have taken ODRs and adopted that pretty early. And and we've seen some tremendous results. Of course, due credit to the mobile penetration and the internet usage across the country, right? We lend in close to more than 12,000 pin codes in India. It's just not practically possible to put fleet on street, or for that matter, go and contest cases in every nook and corner of the country, right? So one of the and somewhere in between, we've also discussed about the fact that every delinquency is not necessarily a conflict between the lender and the borrower, right? It's more something that's solvable. It's something that can be resolved over a conciliation session. Now, earlier, conciliation mediation was just possible in face to face, where we had to engage lawyers and conduct conciliation sessions. For that matter, even arbitrations was just possible face to face. Now, while arbitration continues to be that way, online conciliation and online dispute resolution, which is more like online conciliation, is something that actually is paving path for, and in certain developed economies, it's already something which both the lender and the borrowers are very comfortable doing. So all this requires is, we are already started doing it, but what it requires is a credible organization to be mediating, plus adoption and awareness on this is like it's still not like how we would like it to be. But if we get this going, it is going to take a lot of load off the courts, and I can promise that to you.
Thanks for that, Karthikeyan. And with that, we'll close the session. Thank you once again, Love, Ajay, and Karthikeyan for joining me. It was an absolute pleasure. Thanks a lot.
Thank you for the opportunity.
Thank you so much, gentlemen. I don't think we expected so many light-hearted moments from transforming debt collections, but thank you for providing that anyway. And thank you to all our panelists today who've given us so many insights and so much of information. And to help us to see it all cohesively with an eye to the future, we will now have our closing note, Aerial View 2024, the evolving landscape of fintech, to be delivered by Parama Chatterjee, CEO, Revolut India. If I could ask Parama Chatterjee to please join us on stage. A big round of applause, please, for our closing note of the day. A bigger round of applause, ladies and gentlemen.
Innovation, the courage to see change as opportunity and not a threat. Ladies and gentlemen, I'm Parama Chatterjee and honored to be in front of you today to deliver the closing remarks for a day full of insightful discussions that we have all enjoyed, courtesy Businessworld. And I'm here to talk to you as a summary of overall trends and evolution of the fintech industry, an industry that is really shaping the way the 1.4 billion Indians are interacting with their finances and payments in all forms in ways that we never thought possible. But before we dive into that, a bit about what I do. I'm the CEO for Revolut India, for those of you who know Revolut, and for those of you who don't. Revolut is one of the fortunately highest valued global fintechs, which started out in the UK back in 2015 by disrupting the cross-border payments and currency exchange and transfer space. Since then, Revolut has a full digital banking license in Europe. And today, more than 30 million active customers use an array of financial products from the super app that is Revolut across the world. And we process more than 400 million transactions in a month. That's a bit about what we do. And with that context, let's dive into what I'm here to talk about today, which is the evolution of fintech. Evolution of fintech. Pretty deep. That takes me back almost, 25 years ago, was my first brush with actively engaging with financial services. That's not an invitation to guess my age, folks, but that was the time when I left the comfort of my home to go to business school in IIM Lucknow. And what did it mean for me then? Wide-eyed young girl, leaving the parents' home for the first time, going to a different city. My father accompanied me there. He actually had to physically go with me, open a bank account for me in a bank branch in that city. And believe it or not, I don't know, those of you who belong to that Generation X, you might have seen this. My father actually carried a bag full of cash with him on the train in which we went from Calcutta to Lucknow. To then, after my account was opened, to deposit that cash into the account in my name that would come in handy, hopefully for me, when I had to cover for my expenses over there. And how did I access the funds in that account? There was an ATM on campus where there was a queue of students. We would stand in queue to withdraw cash and use that cash to make payments at the stores which were on campus and inside of Lucknow. And that's how my journey with financial services started more than 2 decades ago. While that is what my life was like, what was my parents' life back in Calcutta? Yes, they had to pay the monthly landline phone bills. They had to pay the electricity bills. It was a Saturday morning date for my dad to go to all of those billing offices, stand in queue, make the payment, then go to his branch, have a cup of chai and chit chat with his branch manager and come back home. That was life 2 decades ago. Evolution of fintech. When my son now goes to college, what will life be for him? Will I need to go accompany him to a campus? Possibly I will. A mother's heart is not so easily going to let their boy go off without accompanying them in a new college, in a new city. He may go somewhere in India, somewhere abroad. But will I have to go there and go figure out a bank branch and open a bank account for him? Unlikely. He'll likely have a new age smartphone on which, courtesy a few taps, he or I will be able to open a bank account for him, sitting at home, even if we go anywhere. Will I have to carry wads of cash to deposit it? Whether he goes to college in Delhi, Bombay, or goes to college in London, New York? Doubtful. Either of the places, I should be able to, with a few tap of button on my phone, be able to put in money into that account. Will he need a card and stand in a queue at an ATM and figure out what an ATM is to draw out cash? Unlikely. He will have all kinds of apps, from food delivery to ride hailing to whatever else the next generation may want to do. And all of that integrated with a payment app from which payments will happen all smoothly and seamlessly. That, ladies and gentlemen, is at the heart of the evolution of fintech. Today, all through the day, you all witnessed some very insightful discussions. Praveena touched an important aspect, which I personally believe in as well, of this entire digitization in the morning today, right? She spoke about democratization, that this entire evolving fintech landscape is ensuring that every one of the 1.5 billion Indians, regardless of what strata of society they come from or which location they reside in, are able to have similar levels of access to various financial services products. Then you also witnessed a very insightful discussion, a debate which Vaibhav anchored on how overall startups in the fintech space are contributing to the Indian ecosystem at large. And we can't deny that for the 9,000 fintechs that are there in India today and the 4,200 of them that are active, they're obviously contributing a lot to this ecosystem. And not just that, the world is still bullish on investing on the fintech sector in India. Do you know, we were the second highest invested sector in the world, the India fintech sector, with the $5.65 billion worth of investment that came in last year, even when supposedly there was a funding winter all over the world. That's how bullish the world is on the fintech sector in India. And it's not just the amount of money that came in, mind you. The thing that interests me is back in 2021, there were 535 institutional investors who had invested in the fintech sector in India. Do you know how many were in 2022? It has doubled to 1,011 unique institutional investors who have invested in the India fintech sector last year. That's how bullish the world is about India and its fintech. What's driving this bullishness? If I look at the cornerstones, which I like counting on my fingers, the first one is access, right? Again, going back to the democratization, today, any Indian from any corner of the world, corner of India, is able to access similar financial services thanks to the kind of technology penetration and data penetration and connectivity that has happened in India over the last few years. Second is convenience. Again, thanks to the amount of data that is available and what all technology can do, it has actually made it so much more convenient for each one of us to sit at home and avail of all kinds of financial services, whether it is payments, whether it is availing of a loan, whether it is making investments. The third is cost effectiveness. Because of this entire digital way of doing business that you've heard through the various sessions today, the cost of availing of financial services has significantly come down for the consumers and the users across the board. The fourth is time effectiveness. Things that used to take days earlier to do today takes minutes, whether in India or sending cross-border payments out to other countries. And last but not the least is pure play innovative decision-making. Given the amount of data available, big data analytics, the AI and ML that you guys have heard through multiple sessions, that is enabling personalized services to be delivered to customers where her loan offering and interest rate is different from his loan offering and interest rate today. So not just from the customer side being able to offer personalized services, from a regulatory side also being able to make better decisions. We just came off a panel talking about collections and digital collections and underwriting. The quality of being able to underwrite using data and machine learning has improved so much that you can take better decisions on customers on what to do with them, what to offer them and what not to offer somebody. So that, ladies and gentlemen, is the significant way in which we're all seeing this beautiful world of fintech unfold in front of our eyes. And last but not the least, the most new age innovation that is happening in the area of crypto, in the area of blockchain technology. You again had a nice session from Sharath where he talked about it. And I'm pretty much getting fond of this word that we haven't got into a new decade, but we've actually gotten into a new decade now. I'm pretty much getting fond of using that word. And that is, ladies and gentlemen, true. But having said that, even though there are these 5 very clear benefits that fintech is evolving to offer the consumer landscape, the one major thing that needs to happen is for the regulators to walk the talk, go hand in hand with the fintech companies to create an innovative new age framework that well governs this entire use of technology to create a progressive framework with which we can continue going forward to disrupt this landscape, so that maybe in the next decade, if our sons and daughters are talking about the evolution of fintech, they will have a completely different conversation then. And how does it happen? It basically happens at the end of the day when customers, hello sir, good to see you. When companies are faced with a choice, the choice to do things the way it has been done before, or the choice and the courage to look at things and say, okay, how can we do it differently, is the day when evolution happens. As a closing note, I shall be telling this with a sigh, somewhere ages and ages hence. Two roads diverged in a wood, and I took the one less traveled by. And that, ladies and gentlemen, has made all the difference. Thank you very much for listening to me patiently. Have an amazing evening, all of you, and congratulations in advance to all the award winners today. Thank you so much.
Thank you so much, ma'am, for painting such a clear and relatable picture on how much we have evolved and how far we have to go. Certainly so much to celebrate. Thank you so very much for that message, and a big round of applause for that wonderful closing note. And talking about celebrations, well, ladies and gentlemen, it is time to celebrate. Welcome to the highlight of the BW FinTech Awards. This evening, we gather here to honor and recognize the exemplary individuals and organizations that have made exceptional contributions to the field of fintech. Tonight, we celebrate innovation, compassion, and excellence. These awards not only acknowledge outstanding achievements, but also serve as an inspiration to push the boundaries of what is possible in the fintech industry. Today's award ceremony is being streamed live across all BW Businessworld platforms, including our social media channels. Join the celebration of the evening by using the hashtag BW Best of FinTech. Moving forward, I would now like to call on stage Mr. Sanjeev Kumar Gupta, CEO, Karnataka Digital Economy Mission, to deliver the award ceremony headline address, Next Decade for FinTech in India. If I could ask Mr. Sanjeev Kumar Gupta to please join us on stage. Sorry to interrupt your chat. A big round of applause, please.
Thank you. Thank you, Businessworld, for inviting me and giving me an opportunity to interact with the young minds here. I think everybody I see here, if we take an average age, then because of me, you will be going in a different direction. Otherwise, all of you will be under 30. Fantastic. Congratulations to all of you who is going to be winning the awards today. And I think Businessworld is doing a fantastic work by creating these awards, felicitating them, recognizing them, motivating them to do more. For us, being a government or a quasi-government organization, what we look into is, hey, how we can create more opportunities for our youngsters. How do we create more opportunities of growth of engine of the economy? And how do we create more GDP growth, so to say, and the number of employment opportunities created so far? What I will do is, I'll give you just a snapshot of what Karnataka is doing in the story of FinTech and why Businessworld has picked up Bangalore as the event place for the FinTech. And I think my statistics will talk about of those. Can I use this? Okay. Who we are, first of all, Karnataka Digital Economy Mission has been set up by the government. Everybody knows that, I believe so, but just a hint here that we are 51% equity of this organization lies with the industry and 49% of equity lies with the government. But the entire OPEX comes from the government. Why we needed this equity distribution in such a way? Because we want industry to be on the driving seat of this organization to make sure that we are doing the right things for the industry, by the industry, and for the industry. And our motive is to digital economy growth. If our Honorable Prime Minister is looking at $1 trillion digital economy, we are looking at contributing the highest share, $250 or $300 billion or so in that aspiration by one state, Karnataka. And I think we can do that. One is because of all of you, what you're going and proving yourself very differently. Our objectives, our focus areas, if you see the bottom, These are the 5 important areas where digital economy that we focus upon. Number 1 is how do we grow IT, ITS, and GCCs. Second is electronic system design, manufacturing. But most importantly is startup in tech field. And that's 3 is what this organization is focusing upon. And the 2 other elements that we focus is about talent, your requirement of the talent is going forward. Last but not the least is creating more Bangalore outside Bangalore. We call it beyond Bangalore. And that's where the entire journey comes into play. Thank you. Thank you, the startup ecosystem players. This is where our journey lies when we talk about the Karnataka, that we are recognized as consecutively number 1 in innovation. Ladies and gentlemen, Bangalore has been recognized as a top 20 ecosystem in the world, right? It's because of you. It's because of you and because of the effort that we all work together to make it happen. In fact, I was having a discussion with the TAI and said, let's make a lounge in the Bangalore airport. We will call it a startup lounge. What I mean by that is anybody who is traveling to Bangalore and says, I'm a startup, I want to see the city, first welcome at the airport and say, let's have a chat, let's have a filter coffee of the Bangalore first. Who you want to meet? What do you want to do? We will be with you. I hope you will find someday soon a startup launch in the Bangalore airport. We're working with them to find out a space for us. So this is the way that we are trying to position the startup ecosystem of Karnataka. Well, we have been inherited with a lot of public sector units for the last 70, 80 years. We've also been inherited with now the out of Fortune 500 companies, 400 companies of R&D center, innovation center operates from in none other city than Bangalore. If I pick up a focus on FinTech, numbers is known to you, somebody must have told you, is about, let's say you have 280 plus deals which has been picked up, somewhere around $8 billion and deal sizes 33 million. Where is Karnataka stands here? Is Karnataka's leading? Yes, Mumbai is a financial capital. 101% sure, no doubt about it. But ladies and gentlemen, Karnataka is a finance capital of FinTech in India and in the world. Look at the data. Look at the data. What it says is you have 254 out of 280 deals of fundraising for startups in the FinTech is only from Karnataka, out of 280 in India. Out of $8 billion that you raised, $6.5 billion has been raised by Karnataka-based FinTech companies of India. We are a FinTech capital of India, for sure. Almost 80%. And if we look at what we want to do achieve more, is not to settle down with saying, we are here for a FinTech capital in India, but can we become a FinTech hub for the world? And if that, then what we need to do differently? We have to design the strategy for us in a different manner. And that's the reason we picked up something very different exercise, is that, hey, can we create an aspiration for us? By 2030, can we create 50 unicorns and around 100 sonicorns out of FinTech alone? Can we? Aspiration. And if that's aspiration, we need to design those strategies to execute them to ensure that we are able to provide that pathways. So the $1 trillion market service that the FinTech looks at, we are saying if our FinTech companies can at least address 50% of that market size that we serve from our side, from a Karnataka-based FinTech companies, around $500 billion by 2030. And so the numbers of sonicorns, unicorns happen. This cannot be happened until we set up something like a FinTech task group to look at what we need to design, how we to design and execute them with a mission and a vision of very clearly, let's make Karnataka as a FinTech hub of the world. And in this journey of the FinTech, ladies and gentlemen, these are the members who are contributing as a FinTech task groups. All of those great guys from Zerodhas to Razorpays to everybody, CRAD, Grow, are contributing to put together a strategy. And I'm very thankful for all those great leaders for paying the time, giving us those insights, valuable suggestions, and put together a fantastic report to us, which we are now taking it forward to execute them as well. These are the areas and approach that are picking it up. We want to create a FinTech corpus. We want to create a center of excellence on FinTech. We look forward to see if we can have a FinTech policy dedicated for FinTech as well. And can we create international bridges of sandbox based out of here? And we are already getting plenty of bridges coming up together from Abu Dhabi to Singapore to UK and etc., which are ready to build up. and more like a highway for the startups to use them. And that's where we are trying to see. The other element that you want to create is a market. How do we create a fintech literacy program in partnership with RBI to see if the consumers can understand how to use a fintech as a service for them? So another very solid strategy is to create a market for a fintech. So demand, a technology, a corpus, a mentorship, and also a market for the fintech providers. And this is the way that we have designed our strategies of the pillars to look forward into that. Some of the other initiatives that you're trying to put together, friends, is making Mangalore as a fintech hub. And I said this in my earlier talks when I used to normally come down here. Mangalore has created almost 8th largest bank of India. Only Mangalore. Genetically, this city is a banking city. That was talking about of, let's say, 3 decades, or 4 decades, or 5 decades back. Now it's the time to make it a tech on this. So we want to set up a fintech. Recently, we opened the Cybersecurity Center of Excellence in BFSI in partnership with MAHE there, in partnership with ISEC there. We want to set up a Center of Excellence of FinTech. Hopefully, it should come in next quarters or so. And we would be happy to serve all of you in terms of your requirements, incubations, mentorships, funds, and etc. coming in place. Infrastructure is also getting developed in the same city to leverage. 2 companies have signed up to put up their operations of FinTech in Mangalore in the last 4 or 5 months. I was in the US for a roadshow from East Coast to West Coast, and we did approximately 15 events in 10 days, reaching out to a lot of people around. The one important talk of the town was FinTech. And I think this is a punch card for us in Karnataka's crown as well, and we'd like to leverage as much as we can. We can say this is always happening around, but it is only achieved because of none other than you all. And this is the roadmap that we have prepared ourselves to see if we can reach to this stage. With this stage and with this time limit that I have, I want to pass on my thank you to you for encouraging us, making this FinTech hub. Thanks to Businessworld for hosting this event in Bangalore. Happy to support you in any ways that we can do in the entire ecosystem of FinTech. Thank you so much.
Sir, for bringing so much palpable optimism and encouragement to this room and to our awards also. Thank you so very much for joining us. And a big thank you also to our jury members who painstakingly reviewed numerous nominations. The winners who emerged from a pool of exceptional contenders embody the true spirit of the FinTech industry. May I request the team to show our audience a glimpse of the jury meet.
At the outset, I would like to thank BW for inviting me to be the jury chair of the FinTech Festival. This was a great experience considering the number of entries that came, and there was a lot of competition amongst all the people who participated in it. The jury members got a lot of time to go through each of these entries and deliberate on each of the candidates. Some of the categories, the decision to select the number one was very tough. And all the selection happened with unanimous choice. I would like to place on record the quality of entries that have come this year was phenomenal. I would like to thank BW. I would also thank Devika, especially for conducting the jury meet in a very harmonious manner. I would request the organizers to see that, to encourage more and more participants and to see that this event becomes very successful. Thank you so much.
A great privilege to be invited as a jury member for the Festival of FinTech organized by the Businessworld. I was in fact traveling in Norway and Sweden during this time and therefore could not personally participate and listen to the pitches. But I went through all the documents and the video recordings and others, which gave me a fairly good idea how competitive this festival was. All the entries were very, very competitive. And I thoroughly enjoyed and I could see the competitive landscape of the country in the FinTech field. I must congratulate to all the winners as well as those who could not get the rewards, but they were as good as that. My best wishes for the Festival of FinTech. All the best. Bye-bye.
It has been a great experience being on the jury for the BW Businessworld FinTech Awards. As a jury member, I feel our task has been extremely difficult. As we listened to the various nominees and interacted with them, it's very clear that anybody who's on that list is already a winner. So I wish you all the best. And it's just amazing the amount of talent, the kind of leadership that exists, the kind of innovative solutions that are there, and the tremendous amount of impact that is being made by the FinTech community for the banking financial service sector. I really applaud the efforts that all of you are putting in, and I wish you all the best. Thank you.
I was one of the jury in the Businessworld FinTech 3rd edition. My name is Dishant, and I lead Financial Inclusion Lab. It's an accelerated program for FinTechs working in the Bharat segment. It was great to hear some of the big names in the FinTech landscape. It shows the growing influence of FinTechs in India. Both in the people and company category, we received quite a few exciting nominations, and it was a privilege to hear their pitches and some of the commendable work that they are doing to improve the inclusion, access, and uses of financial products by the majority of the Indians. I am pretty sure that this will prove this will be a very, very exciting year for the FinTechs in India. And best of luck to all the participants who have participated in the Businessworld FinTech competition 3rd edition. Thank you.
It's been a great experience being a part of the jury of the 3rd edition of the Festival of FinTech. The pool of nominees as every year was wonderful, and it keeps getting better year on year. I had a wonderful time interacting with all the nominees since I'm traveling outside the country and I had prior engagements. I was not able to be there throughout the entire day, but I did take the time to go through each and every entry. I did take the time to also talk and understand from other jury members, from the organizers, about some of the more granular details about each of the nominees. And having looked at all of that information, I have come up with my inputs, which I believe are fairly in line with what the rest of the jury members have come up. It's wonderful to see the winners, get the accolades, but also equally those who were not able to win. I think each entry was wonderful. I don't recall looking at any entry and being able to say that it wasn't up to the mark. But at the end of the day, such events will have winners. and some that don't take home the trophy. But I think it's been a wonderful experience, and all the best to the winners, all the best to each of the participants. I think that every company, every individual that participated in this event, in these awards, is already a winner, and they all have a bright future. All the best.
All right, it's been an absolute pleasure and privilege to be part of Businessworld's Festival of FinTech 3rd edition 2023. I had a great time interacting with all the nominees, very promising founders, very inspiring stories, and may I take this opportunity to wish them all the best, and also thank my colleague jury members for joining me in this entire festival. Thank you.
Our deepest gratitude to all our jury members, and today's digital broadcast is being streamed live across all BW Business World platforms, including our social media channels and also on www.bwbusinessworld.in. Join the celebration of the evening by using the hashtag BW Best of FinTech. Before we start with the awards ceremony, I would request all winners to please get down from the left side of the stage for the photo for the magazine, and request all the winners to please stay till the end for the group photo of the magazine. I repeat, the left side of the stage for the photo for the magazine, and request all winners to please stay till the end for the group photo for the magazine. As we announce the recipients of these esteemed awards, let us applaud their dedication, unwavering commitment, and groundbreaking work. Their tireless efforts have transformed lives and shaped the future of FinTech. So, without further ado, let us commence this momentous occasion and celebrate the remarkable achievements of the recipients the annual BW FinTech Awards. To felicitate our winners, I would like to call on stage Dr. Anurag Batra, Editor-in-Chief, BW Business World and Founder, Exchange for Media, and Mr. Sanjeev Kumar Gupta, CEO, Karnataka Digital Economy Mission. A very, very big round of applause. Our very first award of the evening. Are you ready, ladies and gentlemen? I need a bigger yes than that. Are you ready, ladies and gentlemen? All right, great. That's better. Best Digital Lender of the Year goes to Bharat Pay, and collecting the award on behalf of the company, Nishant Jain, CBO Network. Like a few words, please.
Well, many thanks, Business World, for this acknowledgement. Such encouragements actually keep us going. So just would like to thank you for this. Thank you.
Thank you so much, and a very, very warm congratulations. On to our second award, Best Digital Lender of the Year. Could we have the winner, AV, please? Rajat Kumar, Associate Vice President, Marketing. A very, very big congratulations. Ladies and gentlemen, like Dr. Batra likes to say, there is no tax on clapping. So please encourage everyone on this stage. It is not an easy journey to make it to this elite list.
I agree with Mr. Sanjeev Gupta about the startup lab, or about everything he said, except one thing. Instead of filter coffee, there should be more interesting drinks. That's my only disagreement with him. Interesting is left to your own choice. I always say that we have a technology that we put up. Only the ones that clap get food and drinks. It's your choice. If you want to go home and eat and drink, then it's okay. Jokes apart, you should build your karmic balance. You should applaud people. It does help, and it's not a theoretical concept. Plus, clap is good for heart muscle. It's proven. If you haven't gone for your walk today morning, tonight's clapping would do for that. So please applaud the winner. There's one winner on the stage. Thank you for being here. Thank you.
Hello, everyone. Thank you, Businessworld. Thank you for the honorable gentleman here for Mr. Sanjeev Gupta. Thank you so much for giving us this award. I'm collecting this on behalf of our co-founders, Gaurav Hinduja and Sashank Rishashinga, who are not here today. But thank you so much for honoring the work that we've done. We really appreciate it. Thank you.
Congratulations again. And now time for our third award, Best Financial Inclusion of the Year. May we have the winner, AV, please. A very, very big congratulations to the team at RevFin collecting the award. Samir Agarwal, CEO and founder. A very, very big congratulations. Get that karmic balance going up high with all the tapping.
Hi, good evening, everyone. Thank you very much, Businessworld and the jury, for selecting us. We were founded with the mission of improving financial inclusion in India, and this is a great honor, recognition, and validation of our purpose. So thank you again.
A very warm congratulations once again. And now time for our next award, Best InsurTech of the Year. May we have the winner, AV, please. Congratulations to PhonePe Insurance Broking Services, Aditi Tibrawal, Lead Four-Wheeler and Travel Insurance, and Nilesh Agarwal will both be collecting this award on behalf of PhonePe Insurance Broking Services. Build up that appetite, ladies and gentlemen.
Thank you, Businessworld. Thank you, the jury. This award, marks the journey which we started a couple of years ago. The journey is just started. We hope to drive insurance adoption in the country from the very small levels that we see right now. Thank you.
And now on to our next award, Best InsurTech of the Year. May we have the winner, AV, please. Congratulations to Discovery InsurTech. Chirant Patel, co-founder and director, will be receiving the award. A big round of applause, ladies and gentlemen.
So on behalf of Discovery, thank you so much to Businessworld and to the jury as well. Businessworld has been particularly kind to us. About 11 months ago, 11 or 12 months ago in the prior edition, we received the most innovative product award as well. And, and then we had, thank you, announced that we had just hit 1 million lives that we had saved. And it took us about 5 years to get there and about 4 years to get there. And here, great to announce that we are on the track to hit the second milestone, which is 1 million people or 2 million lives insured in about a third of the time. So great to be here and thanks again to everyone.
Congratulations on your achievements, clearly on a winning streak there. Thank you so much. And a big thank you also to Mr. Sanjeev Kumar Gupta for felicitating our winners. A big thank you to Sir for being part of our awards this evening and for inspiring us with so much enthusiasm. Before we move on to our next set of awards, I would like to ask Mr. Nishant Kumar, Financial Inclusion Lab Lead, MSc Consultant, MSc, to please join us on stage. A very, very big round of applause. I'm glad the clapping advice has worked. Very good. Now on to our next award, Best InsurTech of the Year. May we have the winner, AVC. PolicyBazaar.com, Sajja Praveen Chaudhary, Business Unit Head, Corporate and SME Insurance, will be receiving the award. On behalf of PolicyBazaar.com, a very, very big round of applause.
I would like to thank Dr. Anurag Batra, Team Businessworld, and the jury for bestowing upon this prestigious award. And also, we would like to thank the entire ecosystem, our customers, the insurers who have supported us throughout our journey of 15 years, and our investors from the early stage. And of course, the team at Policy Bazaar, without which I don't think, whatever we've done in the last 15 years would have been possible. And because of which this award is here today. Thank you once again.
Thank you so very much and congratulations once again. Our next award, Best Payment Solution of the Year. May we have the winner, AVP. Zaggle Giridhar Krishnamurthy, Business Head Zaggle EMS, will be collecting the award on behalf of the company. A very, very big round of applause once again.
Hey, thanks, Business World and the jury. Such kind of encouragement is much needed in this journey of value creation. In the space of spend management, we have been doing wonders. But yeah, this kind of encouragement surely encourages us to do much more. Thanks a lot. Thank you.
Thank you so much. And it is a pleasure to encourage so much talent in one room. Next up, it is Best Payment Solution of the Year. May we have the winner, AV, please. Congratulations to the team at FinTechs. Swastik Nigam, founder and CEO, will be receiving the award on behalf of the company. A big, big round of applause.
Thank you, Business World. Thank you to the jury members. We are so chuffed. We won an award for the best innovative product last year. And I can't imagine telling you how delighted we are to be recognized. This goes out to the tribe that keeps building every day, the small tribe whose impatience I absolutely love and whose execution, proves in things like this. Yeah. Thank you once again. Thank you.
And a tribe is always important for the kind of success that you've achieved today. Congratulations once again. Our next award, Best Payment Solution of the Year. May we have the winner, AJ. Arnav Bakshi, Associate Director Payments, and Lohit Pandey, Senior Manager Payments, will be joining us on stage to collect this award. A big round of applause for them, ladies and gentlemen. We're watching to see who is clapping.
Thank you so much, Business World, for this amazing award. It's a real achievement. It just goes to show all the hard work that's been put in by the entire team at PhonePe. We have a saying at PhonePe, onwards and upwards. Thank you so much.
Onwards and upwards indeed. And our next award, FinTech Startup of the Year. May we have the AV, please. A big congratulations to the team at Goodrex, Edul Patel, CEO and co-founder, and Alankar Saxena, CTO and co-founder, join us on stage to collect this award. A bigger round of applause, everyone, please.
Yeah, so thanks a lot for recognizing us as the FinTech Start of the Year, the jury and business world. We've been at it building out investing products for retail users in crypto for the last 6 years. This helps us just reinforce that faith that it's an asset class that's growing. The products that we are building are valuable, and the hard work that our team is putting in is immensely useful and valuable for our users. Thank you.
We're all about reinforcing the faith today. And I would now like to also thank Mr. Nishant Kumar, Financial Inclusion Lab Lead, MSc Consultant, MSc, for being such a big part of our awards and being such a big part of the day as well today.
You know, I want to say that our awards processes are an editorial product for us. We discover companies, people, new ideas, new ways of doing business. So really, not the immediate next, but the issue after this will be dedicated to the winners. And, you know, it will be a FinTech special. So your stories and what's happening in the FinTech space, so he also outlined throughout the day. So clearly, we treat our awards as an editorial product. It's not just that it ends here. We track all our winners throughout the year, throughout the next year. And I'm sure all of you will grow. So my colleague, Rohit Chintapalli is here. He's our editor based in Bangalore. So you can connect with him post the event. Of course, he'll proactively connect with all the winners tomorrow. So your stories are important. Of course, we treat it as an editorial product. So it's an edited product. It's not just what you send in, and there'll be more content online. But of course, the magazine has a certain grid. So just want to mention that because I have your attention. And I must say that the FinTech Startup of the Year winners already celebrated at the Seven Rivers Brewery. They were sitting and celebrating in advance. It's good to anticipate an award and celebrate in advance, but I'm sure we'll celebrate it together after all the awardees are awarded. Okay, thank you.
Well, the celebrations shall keep going. And may I now invite Ms. Paroma Chatterjee, CEO of Revolut India, to please join us on stage to felicitate the next awardees. A bigger round of applause, ladies and gentlemen. Our next award, Most Innovative FinTech Product of the Year. May we have the AV, please? Lord Shivang Bhattaya, CEO's office, and Ananda Padmanabhan Ramabhadran, Head Business and Growth, will be receiving the award on stage. A big round of applause for them, ladies and gentlemen.
Hi, everyone. Thank you to the Business World team for this award. I think we are just here on behalf of hundreds of solvers who have in the past and who are tirelessly working to make this happen. So thank you, everyone.
Congratulations once again. Our next award, Most Innovative FinTech Product of the Year. May we have the winner, AV, please? Solutions, Gautam Udani, co-founder and director, will be joining us on stage. A very, very warm congratulations to the entire team at
Thank you, Business World, for this award. Our mission is to be the #1 supply chain finance solution of the world. And this award is a testament of our commitment towards the same. Thank you very much.
Congratulations once again. And now time for our next award, RegTech Solution of the Year. May we have the winner AV, please? A very warm congratulations to National E-Governance Services Limited, Debajyoti Chaudhary, Managing Director and CEO, will be joining us on stage. A big round of applause, ladies and gentlemen.
Good evening. I'd like to thank Businessworld and the jury for selecting us for this very prestigious award. I would also like to thank the entire team at NESL, which made this possible. Now, I'll take a few minutes to describe this product. A bank guarantee is a very common product which is used in business industry. But we found that it takes days to get it issued, possibly equal or more number of days to get it delivered to the beneficiary. And the beneficiary also takes substantial time just to get it verified. And at the end of it, he's still not convinced whether the bank guarantee is original or not. We found that this was, we're in the era of instant messaging. So our product, NESL's EBG, the PG is instantly delivered on issuance. And it's there on a central portal. A beneficiary has to just log in and see and access. So that, I think, is a requirement of the hour in this era of instant messaging. And I'm so delighted that Businessworld has recognized this as an innovative product. Thank you so much.
Thank you very much, sir. And on to our next award, RegTech Solution of the Year. May we have the AV, please? Namita Shah, co-founder, will join us on stage to collect the award. A very, very big round of applause.
Thank you, Businessworld, for recognizing that the phones that we look at for our banking needs, our insurance needs, our other needs
is the same phone that we can look at for managing our disputes and collections and pre-solving it with us at Resolve 360. And just to tell you that today we turn 6, and this is a celebration on behalf of the entire team at Resolve 360. So thank you for that. Thank you.
Congratulations, and what a ways to celebrate, and a very happy celebrations to you ahead. And I would also like to thank Ms. Paroma Chatterjee for helping us to felicitate all our winners. Thank you so much, ma'am, for being part of the event. And I would now like to call Devika Kundu Sengupta, Senior Manager, Conference Production, who is the woman behind everything you see on stage today, who's brought it all together. Devika, please join us on stage. And it's now time for our next award, Technology Leader in FinTech. May we have the AV, please? These are our very special hallmark awards, ladies and gentlemen. And we are very, very proud to felicitate each and every one of our achievers today. Solutions, Gautam Udani, co-founder and director, coming back to the stage once again to collect his award. A very, very warm round of applause, our very first Hallmark awardee for the day.
Good evening, everyone. Thank you, jury and Businessworld, for the esteemed award. Thank you for believing that the tech contribution by WIFIN in the FinTech segment has made a significant difference, which makes us worthwhile of this award. Thank you.
Thank you so very much. And our next Hallmark award, Technology Leader in FinTech. May I have the AV, please? Our founder and CTO Ring, may you join us on stage, please. A big, big round of applause for our second Hallmark awardee.
Hi, everyone. Guys, first of all, would like to thank Businessworld and the jury for bestowing this honor upon me. But let me be very clear, although it's an individual award, it represents the work of my 300 people strong team. I simply represent what they've built. What we've built at Kish and Ring over the last 8 years is just a testament of the hard work that my team has put in. Some of them have been around since even longer than I have been in the company. And this is something that I truly dedicate only to them. Thank you, everyone.
Sorry, my parents are academicians. I do have a, if you want to take calls, ma'am, the lady in red, if you want to take calls, took third call outside, ma'am. Be of respect to people who are here.
And up next, an award that I'm personally very interested in knowing about, Women Leader of the Year. May we have the AV, please? The winner of this Hallmark Award, Vinny Shah, Head of Product Within Solutions. Please join us on stage.
Thank you, Business World, once again. From contemplating and being apprehensive of coming out of my sabbatical to reaching here, I mean, it is the backing of my company and my family. And I would like to tell all the women out there, just take the plunge. Don't think too much. Thank you.
Just take the plunge. I think that's a message we can all resonate with. Absolutely. And now on to our next award, FinTech Leader of the Year. May I have the AV, please? FinTech Leader of the Year, special mention, Sameer Agarwal, CEO and founder, RevFin, joining us on stage to collect the award. A very, very big round of applause for our Hallmark awardee.
Good evening again. Indeed, very excited and very honored to be called on the stage twice on the same evening. So thank you very much, Business World and jury. And also a special mention to Devika, always encourages us to apply for these awards. Thank you.
Thank you so very much. And I have to say, it's very touching how many of the CEOs and founders don't want to talk about themselves, but are so enthusiastic to talk about their companies. And I think that's wonderful. It's all about the team spirit for them. And now for our next award, the special mention again, FinTech Leader of the Year. May I have the AV, please? A very, very big congratulations to Mr. Yashish Dahiya, Chairman and CBO of BW FinTech, collecting the award on his behalf. Sajja Praveen Chaudhary, Business Unit Head, Corporate and SMEs Insurance. A very, very big round of applause.
Thank you. These are Ashish's words. He would like to thank the Business World team and the jury for selecting him or giving him this award. And on the other hand, he believes that this award truly belongs to the customers and the entire team at Policy Bazaar and BW FinTech who put their trust in us in being what we are today. Thank you.
So much for collecting that award on Yashish sir's behalf. And now time for our next award, FinTech Leader of the Year. May we have the winner, AV, please. And the winner is Jaya Vaidyanathan, CEO, BCT Digital. I believe we have Atul Gupta, VP, Product Engineering, BCT Digital, to collect the award on Jaya ma'am's bit. Yes.
Thank you for this honor of being recognized as FinTech Leader of the Year at the 3rd edition of Businessworld Festival of Fintech. It's humbling to be among so many brilliant minds who have contributed to the advancement of this industry. I would like to especially thank and acknowledge Dr. Anurag Batra and Businessworld's efforts towards this prestigious event and thank the jury for the recognition. The fintech industry is at the forefront of revolutionizing the way we conduct financial transactions, manage our finances, and most importantly, access financial services. It is a dynamic and disruptive force that has the power to shape entire economies and uplift communities around the world. Thank you once again for this honor. Together, let us forge a future where FinTech serves as a catalyst for growth, social progress, and financial empowerment for all. Thank you.
Jaya was our women fintech person of the year last year. She's in Japan today. That's the only reason she's not here in person. Last year, she was at the event.
Good evening, everyone. I would like to thank Business World and the jury for this esteemed award. And I would also like to speak a few words about our flagship product, early warning system, which creates alerts based on the stressed, you can say, loans as well as the credit life cycle. And more information, you should our website, bcdigital.ai. Thank you and have a nice evening.
For receiving that award on behalf of Jaya ma'am. Thank you so much for being with us this evening. Our next award, FinTech of the Year Special Mention. Can we have the AV, please? But IRC office at Zolve, I believe Ananda Padmanabhan Ramabhadran, Head Business and Growth at Zolve, will be receiving the award. Please do join us on stage.
I would like to thank the Business World team and the jury members for giving us this award. It definitely reinforces the hard work that the entire team is doing back in office. And congrats to all the other winners too for the amazing work that they're doing.
Thank you so much. And we like the shout out to the other winners as always. And finally, our final award of the evening, FinTech of the Year. May we have the winner, AV. Gaurav Jalan, founder, I believe will be joining us on stage to receive the award.
Thank you, Businessworld, and thank you to the jury for finding us worthy. We are dedicated to serving the youth of this country. The average age of our customer is under 25 years old, right? So it's been a 7-year journey till now. We've served 15 million customers, hoping to get to 50 million in the next few years. And this is very encouraging in helping us to reach that goal. This award is dedicated to the team at M-Pocket, the 2,000 employees at the company, and to our customers. It is because of our employees and our customers that we exist, and it's they whom we serve. Thank you.
Congratulations, leaving here with a pocket full of sunshine, I believe. Thank you so very much. And I'd now like to call on Devika Kundu Sengupta, Senior Manager, Conference Production, to give us our closing address for the day.
I need to take a pause before I really begin with what I have in my heart to say. 3 years it's been that I'm working on this project. I was given this project by our chairman, Dr. Anurag Batra, as a dream project. And he told me, let it grow, let it build, develop it, make it worthy. 3 years, oh my God. It has been an amazing journey. And I guess it's not possible to do it alone, as everyone has been talking about team and leadership. I truly believe in that. What BW Festival of FinTech 2023 third edition is not only because of me. It's because of many, many other colleagues, and especially all of you, all the speakers, all the participants, the winners, the jury. It's all of you who make it what it is today. So a big round of applause to yourself, please. Louder one. We can do a little louder. Thank you. Well, I take this opportunity to thank all of you present here. My heartfelt gratitude to the team working so hard on it. And mentioning their names will be my little contribution to thank them, motivate them, and keep them growing along with me in the journey of Festival of FinTech. Neeraj and Shailesh, they are working based out in Delhi. They have worked tirelessly to bring all of you here today. The entire audience pool, they have especially worked on it, along with Tarun, Biren, and other colleagues. Hoshi sir, Talis sir, Aparna, Anjit ji, Ravi, Kiran, CSR, Tarun, Arshad, Mayank, Sarvotama, they've been sitting throughout. I mean, we all have developed it together. Soumyajit, Sajad, and Shruti have added tremendously to this project, all the partners especially. Tanvi, Shiv, Arun, Karthike, Shweta, Moksha, Himanshu, Salman, they have made it possible to look what it looks to you now. Entire team working on the design and the marketing of. Prashant, the one-man army, right there behind the console when it comes to the ground operation. Sleepless nights, sleepless days, no rest, no nothing. He has been working, and constantly we have been doing our events in Bangalore, and we finished on 27th, the healthcare, and then this. So thank you, Prashant. Not to forget Noor, Poonam, and Rohit, who will be capturing this event editorially to bring out a brilliant coverage in our BW Businessworld magazine. Last but not the least, our chairman and editor-in-chief, Dr. Anurag Batra, for giving us out this platform to indulge, dream, and develop our visions through these mega conferences. I might be forgetting few names, but this conference is what it is because of everyone back there supporting me, working with me. Trust me, coming back to Bangalore has been a wonderful idea and journey, and I'm sure the 4th edition of Festival of Wellbeing is going to be even more bigger and better. Special thanks to a couple of speakers. I also run a very premium IP, which is called Festival of Wellbeing, जहां हम well-being के बारे में बहुत बातें करते हैं. एक चीज होती है manifestation. I had manifested to bring a couple of speakers this year, and I did it. For the last 3 years, I've been trying to get them on board. This year, they were here with us. I'm thankful to them. They're very special to me because they accepted the invitation after me waiting 2 years, 2 long years to get them on board. Thank you once again. We'll be serving out the dinner. Enjoy the night with us. Congratulations to all the winners. Yes. And last but not the least, a group photograph of all the winners out here in the house. Please come up on stage with your trophies. All of you, please. And thank you for making BW Festival of FinTech 2023 3rd edition such a big one. Thank you. Of course, yes, not to forget someone who has been holding the fort throughout, Miss Beverly White. Can we have a round of applause for our MC, please? Miss Beverly White. Thank you. Thank you so much. Thank you, Nandini, for joining us throughout. Thank you.